going? Can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hola.
Hola.
You're looking very Easter-ish.
It's Valentine's.
Valentine.
I forgot all about
already
that.
Are you okay?
I thought you were preparing for that. Last week with your what was it? What was the concert? Tony
Braxton. Boys to Men.
Boys to Men. Yes, I thought you were.
Day that will live in infamy.
I thought that was your pre-Valentine's.
That was. I forgot about that, and so did she probably. So that makes it very easy. You're right. Valentine's Day. You're right.
Yes.
Yeah.
Yeah, it makes all good
I
sense.
wore a heart sweater. I'm just wearing.
I thought it was gonna be like
sweaters.
the first day in Chicago. It's gonna be 40 degrees, possibly.
It's gonna be 45.
Really?
Yeah.
Oh.
Let's go see if there's patio seating.
Yeah, there's shorts weather.
Yeah. Take the boats out. Let's go.
Yeah.
It is funny how we embrace that, though, in Chicago. It is funny. First day, it's like, 40, 45 degrees. You'll see people in shorts and T-shirts.
Oh, I have one guy in my building that walks his dog in shorts. He's been walking him in shorts the entire time, and I'll see him.
You gotta love the commitment to the Midwestern ethos.
It's wild. It's wild. In the snow.
Yeah.
It is. It's crazy.
Well, I did the storied tradition of waiting in a very long line to get my car washed yesterday. Gotta get all the salt off of it because I was like, okay, it's gonna be nice.
Yeah.
Now.
I did that when I was out in the suburbs last week.
Oh, they got
It was a pleasure.
Nice.
You go right in. They have a guy that's like, "Oh, which one do you want? You want to sign up for the monthly subscription?" I'm like, "No, I'm just like."
You're like, my brother has it.
Yeah, no, that's true. Yeah. Can I use my little brother?
I just gotta change plates.
Yeah, but that's easy. Where'd you go, Burt's?
No, I go to a place. It's off of Pershing Avenue, so it's 39th Street.
Okay.
Yeah. But it's my favorite hand wash is at 18th and State Street. It's good.
Okay.
Guys take care of you down there. And every Wednesday.
You'll travel 20 blocks for a hand wash.
Every Wednesday, it's Ladies' Day.
Sweet.
Should have waited.
Yeah, there you go. But where do you
Burt's
go?
is good, though, is right here on Grand.
Oh, yeah.
Been there for like a million years.
Yeah.
100 million years. I mean, they used to have used to be a lemonade stand across the street, kind of kitty corner to it, which kind of
What
rivaled.
year was that?
Yeah, you're going
A
back.
long time ago.
Yeah, you're going back into the 80s, late 80s, early 90s. Yeah. When I was buying property in the area, well before anybody else.
Okay.
Wish you would have held on to it.
me too. If I didn't have
Instead of scratching
shitty partners, I'd still have it.
Oh,
Yeah, slumlord now.
What are you gonna do? What did you get up to last night, Bad? Was there hockey?
No. Mondays are goalie day, so
Oh.
the kids get to today. They go back to business. And
Okay.
I think we got a playoff game on Thursday. I think that, and then we'll probably be eliminated. And we could take a little slide off. Yeah, York's
How
tough.
long is this season?
It's forever.
It's almost done. It goes into like the end of February where we are now. Then spring hockey starts. Yeah, if you want to do that. Yeah.
Like if you just want to,
no?
I think so. I don't know. He's going to see. If he doesn't make
you
it,
want to light another $8,000 on fire?
pretty much. But if he doesn't make the varsity team, he'll probably quit.
Yeah.
That'll be the end of the career.
Oh.
Yeah.
Well,
all
now
my
he's
kids,
got a
all my
car.
kids
Now he's got
disappointed me as
freedom.
juniors when it came to sports and stuff like that. That was about it.
Played club volleyball until
Yes.
senior year. So
Yeah.
Club volleyball.
Oh, you should have seen him in his shorts. So
That's
good.
your son. That's gross.
my hair cutter at the time, a friend of the family, was very interested in coming to my game.
Yes, he was. Yes.
He had a very skewed perception of what men's volleyball was like.
I
Got to roll with it, Vanessa.
Yeah.
Got to roll with
It was
it.
a different time. It was a different time.
Yeah, you got to roll with it.
Okay. All right, just kidding.
I have pictures somewhere. If you request them on Twitter, I'll put them out there.
Of me? But
I'm just teasing.
I don't think
I'm just teasing.
yeah, I don't remember you ever coming to any of those.
No, thank you.
Never went to any of his games. Only Vinny's.
No, the game's pre-divorce.
You want me to leave?
After divorce. No
You
games.
leave.
Mm-hmm.
No games. No games.
Yeah, well, I had that restraining order.
Yeah.
So
No, you didn't. You did not have a restraining order. But he was a football coach
Yes.
throughout.
basketball coach.
Basketball, yeah.
Both
It was
of
a
you.
little different because I was like usually the best on the team. So
It wasn't a great talent pool. I mean, it was you.
I mean, we had 3 undefeated seasons in football.
Yes, we did. Yes,
I don't know how many teams do that. Pretty good.
I don't think it's ever been done since you left.
Probably not.
Right.
And before, so we started my 5th grade year. We didn't win a single game. We had this old guy as the coach who wouldn't show up at all.
Sure.
Just like would not come to any of the practices, games, anything. And so my dad and one of the other
Fathers from the kids.
took
quarterback
over
Hodson.
for the next season, and from there I think we lost like 1 game over 3 years. I think we lost that 1 game to Deerfield because one of the kids who is a little bit of a bad boy,
hooligan
a hooligan. He was a hooligan.
stole the golf cart.
Stole the golf cart at Glencoe
Country club.
Country Club, crashed it into a bunker,
Oh no.
and like broke like 3 ribs.
Yeah.
I think he still played, but he didn't.
He did play.
He didn't play.
Couldn't
like,
perform.
Yeah,
He played.
he couldn't perform.
He couldn't perform up to his standard,
Yeah.
which was high.
Yeah.
Yeah.
So
Ting.
Sean Ting, you
I
remember
remember
that?
his name. Sure. Are you
He
kidding
was
me?
so good. He was so fast. Oh my god.
Oh, well, those were the days. That was
Those were
30
the days.
years ago.
Yeah, that was a really long time ago. Yeah.
Last night I did nothing, Vanetta. It was a nice easy night. I did watch, I'm going to say Handmaid, but that's not the name of it. Housemaid?
Oh, with Sydney Sweeney.
Yeah, with Sydney Sweeney.
How was that?
How was it?
It was very good. Honestly, it was really good. And they set it up for a.
What is it about?
It's about a woman, Sydney Sweeney,
Yes.
who needs a job. I'm not gonna say why. Who needs a job and becomes a live-in au pair type person.
Sure.
And then the husband and wife have a dynamic that's unique, and it's very twisty and turny. A lot. Not what you think it is. It was good. It was really good. And yes, for those who want to see that other things there, that's a little bit of that there too, but not a lot.
Are you okay?
Yeah.
Yes.
Yeah, great. Are you okay? Okay.
I'm good.
What'd you do last night?
You don't care.
Oh, all right. Well, there you go. All right. Cool.
No, I watched the Olympics.
Yeah. Did you watch the bobsledding? Or
I didn't-
the what do they call it now? Sliding?
I didn't. No, there was.
The luge?
The luge.
Well, there's like luge and there's skeleton and there's
Yeah.
bobsled. Like I don't. But that wasn't on when I was. It was.
that was, like,
it's like
when I was
ice,
home,
like rhythm dancing,
I didn't watch that one.
which is neither rhythm nor dancing.
No.
I was like, what are y'all doing? I'm like, come on, find the beat, people. But I watched rhythm dancing, and then I watched speed skating because I didn't know that Jake Paul is dating the
Like this, like one of the stars.
yeah,
It's
she
like
won
a
gold.
four-time or
Yeah.
something like that?
Yeah, she won the
Yeah.
gold medal, and I didn't know that was his fiance.
Yeah.
So
Did it ruin it for you or make it?
no, I was just like, why? I was like, why is Jake Paul? I was like, why do they keep
Oh, why
cutting
is
to
he there?
him?
Yeah.
Yeah, I just didn't understand,
Yeah.
and then they explained that
What,
she.
fiance? I mean,
Yeah, fiance. That she has 5
You put a
million.
ring on it.
Yeah, she has 5 million Instagram followers. What
You put a ring on it.
is that? What is happening?
This has been like family counseling for the first 10 minutes of the show. Oh my God. Wow.
What did you get up to, Nikki?
I watched some of that.
So
I had the
awkward.
internet guy come. That was fun. I got people in the chat saying my dad was listening to Paul Abdul albums all night. That's pretty good. They add
Paul Abdul back in the day wasn't bad.
and yeah.
Yeah, wasn't bad. It was pretty good.
So not much last night, but tonight is golf night. So we're back.
League night back.
Did you stretch? Have you been?
No, last week I was good. I was good.
You were on.
I was on.
Does it count towards your handicap?
It does. I know, but So
You got to throw a game or two now.
yeah, so we're going.
But how long is the new season?
It's like 5 weeks.
Oh, okay.
It's not that long. But we were second place in our division.
Okay.
So we're going for, trying to take.
How many people
the
are
road
in
trip.
your division? 2?
A lot.
3?
I think there's like 15, 20 teams.
Oh, okay.
Ish,
Okay,
so
then
it's
that's
really-
legit.
All around the country?
Well, they do that too. So we were 2 in the country for the first 2 weeks. We're like 1 or 2. We're tied for first, something like that, and then we kind of.
It's all right. You're allowed.
But we have really high volatility because we have 3 guys that are relatively like high handicaps.
Yeah.
So we can go, like if we have a good day, you can get a really, really good score. Then we got one guy who's just he's like basically a scratch golfer. So
Yeah.
he always keeps us consistent. And then we
Yeah.
have 3 guys that are like really
They can
wide
come through
range.
for you.
Yeah.
Yeah, that's
so
good.
It's good.
Yeah, nothing
We
wrong
got
with that.
a good little team dynamic.
See, that's the beauty of like if you do like adult like rec league sports in Chicago because it's such like a melting pot of just so many like Division I schools, like Big Ten schools. Because I remember when I first moved here, they're like, "Oh, join one of the rec leagues. You'll meet people," and I did. It was fun. I played flag football, and it was a co-ed team. And like every third play had to be like a girl play, so you had to like throw it to like a girl. Anyway,
Okay.
but one of the teams that we played, again, it's just flag football. But the team, he was the QB of the other team that we played, was a walk-on at Michigan. And I'm like,
yeah.
what are we doing?
Yeah, you hate that.
It's like,
Same thing would happen if you play like a pickup basketball game with, a bunch of guys from the neighborhood and somebody brings that kid who played, Division III or something like that. And they're head and shoulders better than you. I mean, they're mechanics.
Some of them. We played against Frank Kaminsky, who was he was Wisconsin basketball.
Yeah.
He was on a softball team with all the Barstool guys, and they were in our division. Like, so Big Cat would play.
Yeah.
We would always whoop their ass. So it was no problem.
Sweet. That's good.
We won
That's
that a couple
good.
times.
Very nice.
well, if you want to live out your intramural glory, we've got the show for you today. A lot of really good content headed your way today. It's a terrific Tuesday here on Tasty Live. And at the top of the 8 o'clock hour, we have an options jive. That rhymes. We have probability of a touch across different deltas.
Yes, it'll be a good one. We're just, kind of walking through probability of touch and kind of talking through why you should expect to be tested on a trade most of the time. It's because it's a very high probability that it's going to hit that strike at some point during the duration of the trade. So we're going to walk through that. It's a good one.
Okay. Excuse me. And then we have at 8:40, Craig is in the house. We got futures in focus. Everything you need to know about BTC, MBT, ETH, and MET. Yeah, you know me.
Yeah, it's going to be one on crypto. So these are all the crypto futures that they have. I think they also have XRP, which I've been trading a little bit of. Size gets a little bit big sometimes. And I think they have a Solana product that isn't all that liquid.
Oh, okay.
But I'm not totally sure. Maybe that's coming. I'm not sure. But
He's going to break it down.
he's going to break it down for us.
Love it. Love when Craig is in the house. And then 9 o'clock, we have a market measures. How correlated is IV at the highest and lowest levels?
So this is a cool one. So we're looking at correlations relative to implied volatility levels in SPY. So the kind of discussion is going to center around how much correlation is there when volatility is low and how much correlation is there when volatility is high, and how does that change for different implied volatility levels. So kind of going to the a discussion on when volatility kind of pops, everything kind of starts to move together, as opposed to when volatility is really low, you see correlations kind of break down a little bit.
Okay.
They're not friends.
They're not friends.
And then we have at around 9:20 live from the trade desk. We have Quentin and Glenn. So Quentin counting down the top trending tickers over at Tasty Trade, and G Money in the house on the FX side of things. And then at 10 o'clock, the Liz and Jenny show live from the floor of the SIBO. It's always electric when the ladies are live.
Yeah.
Also, programming note, if you were going to tune in for the Tasty Trade webinar today, it has been rescheduled to Tuesday, February 17th. It was on portfolio margin. So we do apologize, but also this issue is free, so get over it. But if you were hoping for a demo around 1 o'clock Central Time, again, that is rescheduled for Tuesday, February 17th. You can go to tastytrade.com / I believe, webinar.
Slash demos.
Slash demos or slash webinars.
Demo.
/ find me.
Yeah. No 404 error.
And then you can see all the upcoming demos that we do. And Quentin does a good job, and the whole Tasty trade desk does a wonderful job of investor education there. But hey, keep this Boeing going. You want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news, coming
news.
across the wire. Our leading story, top story. Jump in.
In today's headlines, this just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's February the 10th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings.
Hood, Ford,
Okay.
McDonald's, possibly.
Yeah, this morning you had Spot.
Big mover to the upside,
Yeah,
up
which
around
is up,
$35 or so.
Yeah, but it's been
An
dog.
absolute dog.
You had Coca-Cola, which has had a massive move to the upside. Coke and Pepsi both have had huge moves. Coke looks like it's basically unchanged, down like $1 or $2.
Mm-hmm.
And then you had Datadog, which is another one of the software companies that's gotten
D-Dog, right?
D-Dog that's just gotten whacked over the last month or so, going from 200 in November to
Flirting with 100, 114 right now.
It's
but
up. It's up like $7-8 here.
Wow.
In the morning.
Can I
Yeah,
pet that data dog?
Datadog.
Can I pet that data dog?
Good name.
It is a good
It is a
name.
good name.
Yeah. And I like their little logo. It's like a little cartoon dog. I'm not mad at that. Hey, Jump Trading is going to be a liquidity provider for the prediction markets, Polymarket and Kalshi. And as part of that deal, they're going to get a sweet, sweet cut of that action. Jump Trading will earn small equity packages in the leading prediction markets in exchange for providing liquidity to their markets. The equity could amount to a sizable sum for Jump Trading, as the two platforms are valued at $11 billion and $9 billion, respectively. So Kalshi valued at 11, Polymarket valued at 9. Kalshi cleared, I think, $400 million for the Super Bowl. Like, it was estimated that the prediction markets as a whole was only going to clear around $100 million. But the latest numbers that I saw had
Yeah, I saw something like
Yeah,
that.
Yeah.
it was like 400, and then Vegas did like 180 total or something like that. So I mean, it's
easy to click online.
31% of Americans believe prediction markets are likely to become a bigger, more important part of culture. What are your thoughts?
Should be a higher number than that.
You want to make a bet on it?
there you go.
Jump Trading, everybody's probably traded with them. I mean, they're a liquidity provider.
Are they Chicago based? I think.
Yeah,
Yeah.
I remember when those boys started.
Yeah.
Yeah. Great, good firm.
Are they hiring?
Excellent. Probably. Yeah. You can make markets.
Yeah.
Yeah, I mean, this makes complete sense. I think.
But will this maybe make the markets better? Like, I'm still just so worried about all of the just blatant insider trading.
What are you worried about? Like, even if there is insider trading, what are you worried about?
It's just
Take
a
advantage of it.
scam.
Do you have a story on the guy from the Super Bowl,
No.
the Drake?
Oh, the guy who ran on field?
No, I heard about the guy that knew that Lady Gaga was going to be there and was doing
but he
that.
ended up losing because of the technicality. He also
That's the problem with them.
He also bet on Cardi not performing, but they considered her being on the stage as
As a
performing.
performer.
Oh.
That's the convoluted.
So there's a little
That's
some of these
unregistered.
things, like, I think ultimately the stuff like that, the like Super Bowl is a little bit different because you
Or it was like, was Venezuela, was that an invasion? Was
Yes,
that not an
yes,
invasion?
right,
Like,
right.
it was.
those insiders, like, I don't think there's anything really to worry about there. I think on the bigger stuff, you're gonna know when.
What about Giannis being like, oh yeah, I'm gonna get traded
That was
and
a-
running, and then he's like, oh, I own this platform, and then he's like, yeah, I'm not going anywhere, and then he took all the money.
Yeah, that's another one where I think with more people involved, that is going to get priced in better.
Yeah.
So the markets, on like the Giannis thing, he's not going to have a 25-point win it's going to be a 2-point win.
Yeah.
Because his friends are going to be involved. His friends are going to tell all of his, it's going to be disseminated like in public markets where the inside info, I'm sure there's stuff there, but it's just going to be, it's going to be more priced into the spread that everybody's betting.
Right. But is it any different than an article that comes out by whomever, Buffett, somebody wants to follow, that says gold is going to 12,000, and then it goes to 12,000, and they say, "See, it went to 12,000."
No, but there is a difference though, because if you're trading on non-public information, like say you're betting on one of the,
he came out and said, "I'm not getting traded. I am getting traded." You know what I'm trying to say?
I'm saying,
but he kind of gamed it.
He did kind of game it. Yes,
the thing.
yes.
Yeah.
Where, yeah.
all right,
It's going to be it's going to be continue to be
the Wild Wild West
for a little bit longer.
Yeah.
Yeah.
That's what happens when you're unregulated.
Is going to make it less of the Wild Wild West.
But the guy who jumped on the field, that was good. He bet that somebody would be on the field during the half.
I think that happens like every year, but then they find out that he was the bet. I know.
And jumped on and did it himself to win the bet. Now, I don't know if he got paid or not.
No, they'll negate that bet.
Yeah.
But if you had the bet that Stephon Diggs and Cardi B would be broken up by the end of the game.
That's a good payout.
I could do a whole other show about that. Hey, gold futures reclaim their $5,000 mark. That's the good news. The bad news is because it's buoyed by a gradual erosion of confidence in the U.S. dollar. So good news, gold is up. Bad news, we think the dollar is not going to be worth anything. So trust has become a scarce commodity, and investors are redefining the concept of financial security. What are we doing in the metals today?
Unchanged, maybe down small this morning. Hang out. They touched 5,100. They're 50 and a half right now, 50.60 in the middle of their overnight action at the high end of the range, halfway between their all-time highs and recent lows that they made just a week ago. Volatility's still good in there.
Yeah,
60s.
volatility is still good. You haven't missed the opportunity to sell some volatility.
In gold?
Yeah, and silver, both. I mean, both have been, volatility has remained sticky.
Goldman Sachs says U.S. equity markets are set for a sharp rebound in IPOs in 2026, and they forecasted proceeds quadrupling to a record $160 billion as marquee names such as SpaceX, OpenAI, and Anthropic edge closer to public listings.
Okay.
Yeah, I mean, this is going to be the biggest year for IPOs ever. For sure. I mean,
So can you just get long the banks because they're backstopping all of this? Like
that's a good idea. Yeah, that probably plays here.
You could get long Goldman Sachs. It doesn't have a downtick. I mean, 943 looks unchanged right now. Markets are a little wide pre-market. But we got a little bit of volatility percolating this morning too.
Yeah,
up 20,
a little interesting. I mean, we're sitting right there at the 7,000 mark. It's been kind of our short
line in the
call,
sand, falling from a couple of times.
Yeah.
The forecast would mark the biggest year on record in absolute proceeds. Already in 2026, 12 firms have raised around $5 billion.
Wow.
So nice work if you can get it.
Yeah.
You know what? Markets at highs, IPOs, it's kind of what you would think, right? I mean, they don't usually come out at market lows.
Yeah.
I don't know if that's a great thing for the overall market, but I don't think it's a bad thing either.
Yeah.
Getting to the earnings from last night, AppLovin stock popped 14% after short seller Capital Watch apologized and retracted their report. That's bonkers news right there. But yeah, that sent shares higher. In the apology, Capital Watch said it erroneously associated a ruling in the court of Bordeaux with the company or something. I don't even know what's going on.
Bordeaux?
Something. I don't even know what's going on. The beef de bourgeon.
I think
Stock up another 12 today.
Say again?
Stock is up at $12.
Yeah, back to 470s or so. I think when they did this, it was around 570 or something.
I mean, the stock has been in the
when they had the short
handle.
Yeah, but I think they mentioned
But there's been like 5 different short reports on this company.
Yeah.
This and Carvana are the two that are like questionable of whether they're like.
It's only a $137 billion company. I mean, I know it sounds like a lot.
$137 billion. Do you know what they do?
Have
they love apps.
They do like
and they love them.
They do like ads for apps, like if you're in Candy Crush and you click something and then
Yeah.
you're stuck in the perpetual loop where you cannot get out of the ad.
I hate that.
No, you might want this. No, you might want this.
And the X out button is like transparent. You can't even find it. And it's so
See, I always thought it was just me who find the X.
So they do those. They are
Brilliant.
That is that company.
They're
So, like,
brilliant.
you download some stupid app and you click something and you're in this loop of like spam.
Brilliant business model. I love it.
Yeah.
You gotta
Apple Oven is probably why my inbox has 5,000 different emails. coming every day.
You pony up for the paid version, my guy.
No, but this isn't even on.
I'm just
like,
teasing you.
even
I'm
the
just
paid
teasing you.
stuff. Like so that's what they do.
Oh,
Just to
that's
give you an
funny.
idea.
President Trump's administration plans to spare firms such as Amazon, Google, and Microsoft from upcoming tariffs on chips as they build out AI data centers. The carve-outs would be provided by the Commerce Department and tied, to investment commitments made by Taiwan Semiconductor. Plans are in flux and have not been officially signed. So you got a couple of names here to play. But let's look at TSM.
New market leader these days, man. It's, 363 up around $8 or $9. It's had a 3-day run from the 320s to 360s where it's going to be right now. I mean, 12-14% move to the upside in a week or so. New all-time highs.
Yeah, no, it's a very important.
Haven't traded it in some time. I think the markets are good, not great-ish, 50, 60 cents wide.
Google is borrowing far and wide to finance its unprecedented, unfettered spending plan behind their AI ambitions. The Google parent said they raised $20 billion in their biggest ever U.S. bond sale on Monday, more than the $15 billion they initially expected. It's 100-year bonds. For historical context, none of the stocks that were trading in the Dow 100 years ago are trading now. But if you want to Google 100-year bond, what are we doing?
At very low rates, too.
Yeah, I mean, we're historically low rates, everything being equal, right? I mean, 322, down around $2 or so for the stock. Bond holders get paid first.
Mm-hmm. Yes, there you go.
There you go. So that's all I'm going to tell you.
Chicks dig the long bond. Microsoft stock is cheaper than IBM's for the first time in a decade. Microsoft and other hyperscalers are pouring billions of dollars into AI projects, and that's putting a damper on their valuations. Microsoft stock is now cheaper than IBM's, with the two trading at 23x and 23.7x forward earnings, respectively. That's sustainable.
Microsoft 413 or so, I'm at 415 now, up around $2 this morning, but it's had its first uptick yesterday.
And that's actually pretty low, like 23 times earnings.
Well, compared to Palantir or something like
the S&P 500, I think hovers around like 19 to 22 times.
Okay.
So you're like right there. I mean, you're right. A Palantir is like off the charts. Apple Oven is off the charts. Like a lot of these stocks are off the charts, but a 23 on a hyperscaler like Microsoft is cheap.
What are you doing in Microsoft IBM pairs trade?
No, but
I'm long Microsoft. I think that 400 was a good spot. I'm short puts at 400. I have a call diagonal spread. I'm locked and loaded in Microsoft.
Yeah, playing it a little bit to the upside. Just the Mag 7 who haven't performed, really taking a look.
I mean, this has been the
dog.
The dog. I mean, we're back to lows from April of last year.
Yeah. If not now, when? I mean, you don't know which direction it's going, but you ain't buying the high.
Yep.
IBM's hard to trade. You would think IBM had great markets because it's big blue. I mean, there are 50-cent wide markets, but they trade by appointment. If you look at the open interest, it's relatively low.
Yeah.
Meta is back in court, but this time it's a lone defendant. Opening arguments began yesterday in a high-profile trial brought by the state of New Mexico against Meta, claiming the company allegedly failed to safeguard apps like Facebook and Instagram from online predators who targeted child users. Yikes. Meta
seems like there's a new
also
lawsuit.
Facing another trial for addicting kids in LA. So just
it seems like there's a new one of these each and every week, and none of them really end up with anything.
Yeah.
So I think it's more FUD.
I looked at Meta the other day. March versus April volatility. March is lower than April, and that's the opposite of what you would want on a diagonal spread. You want the front month to be a little bit higher. Ivy Rank's only 18.
Yeah.
And it's pretty much mid-range for the last year.
Yeah.
So like you pick your, you can't be a contrarian or anything else. You just kind of mid-range with no good volatility. You got to play something a little directional. I think you got to be directional all in March. I don't have a stance in Meta.
Databricks has completed a $5 billion funding round, which values the company at $134 billion. Be so for real. The company said that its annualized revenue exceeded $5.4 billion for the January quarter, and it was up 65% year over year. Databricks is prepared to go public when the time is right.
I would do it soon. I don't know.
They're a data analytics software company.
Yeah, software stocks, I guess, getting murdered over the last month is probably not a good time to do the IPO now, but you would expect them to want to get this into public markets pretty soon.
Yeah, you're at all-time highs, money.
But Oracle turned around. Oracle's up 9% yesterday. So
okay, well you're taking that out of context.
Okay.
It was
Fight me.
it was off 9%.
It's off 50% in 2 months. I mean,
It's like
basically.
that.
3
I
months.
said yesterday. What have you done for me lately?
It's that crypto meme where you have the red line all the way to the bottom at like 90%, and then you have a 1% uptick, and you have the guy screaming
Oh yeah, on the podium.
Yeah,
with
on the
metal.
podium,
That's that meme.
This is that meme.
Okay, well, I'm not wrong. So
No, you're right. You are right.
Oracle is up another $1 or $2 this morning.
Ooh, you might be able to scratch that.
I'm now short the at. No, I'm not able to scratch them. I'm now short the at the money put, which was in the money just
That's
a
an
few days ago.
By $15 2 days ago.
Stripe, the payment processing company, is in talks to launch a tender offer that could value them at more than $140 billion. What are we doing?
I don't know where they get that dollar amount from because
they were taking it on the chin, they were not worth that much.
Oh, I mean, PayPal's a $37 billion company and has not had an uptick in 6 years. Block, another one, XYZ, it's at 34 billion. So, you got Stripe at 3, 4, 5
seems like a lot.
Those. It seems like this one is not one that I would want to be involved.
Nothing to see here. But again, that goes to the point of Goldman Sachs said is look at how much money is going to be in the IPO space for this year. So.
For sure. Yeah, it's going to be insane.
You look at it with one eye open is what you do, and you see it. You can see it's going to go.
Yeah.
Staying in the payment space, this headline just says 3 reasons why SoFi stock is so fine right now. Shares have been swept up in the software sell-off with little regards for fundamentals. Love to see it. YOLO. On Monday, the stock got upgraded to an outperform with a price target of 30.
$21.
Make you want to holler.
Used to be $11, so let's just call it
doubled.
midway in between this number of $31. So place your bets. Ivy rank of 15. It's had a couple uptick the last 2-3 days.
Yeah, this has shockingly been one of my it's not my best trade because it's such a small position. It's only a couple hundred shares of stock, but it's been a great trade if you've been doing covered calls or short puts, strangles. I've been doing them kind of unbalanced with shares and short puts against calls. So a little bit of a skew with more calls to long delta. And it's been just a great trade. I bought some shares at 16. I bought some at 20. And I've been just selling premium around it. It's been a good trade. $20 stocks. So.
Yeah, that's nice. I mean, it always seems to be on the list of the top traded tickers.
Yeah, small amount of buying power. It's a good spot to trade.
I remember trying to buy the dips here in SoFi when it was closer to $12, but here it is at 21.
It was at 8.
Yeah.
When do they have earnings?
Great question.
I think they were Friday. They had a weird earning.
Okay.
I think it was Friday morning or something.
It passed, you're saying?
Yeah, last week. I think.
Okay, so there's still a little bit of juice in there, not a ton, but they don't have earnings.
Yeah, no earnings.
No, Ivy rank of 15.
We'll look at that for Johnny Trades tomorrow.
Okay.
Or is that Thursday?
I have no
Thursday.
idea.
Forget.
YouTube megastar Mr. Beast announced yesterday his company Beast Industries is buying Step, a teen-focused banking app that has grown to over 7 million users. It has financial services geared toward Gen Z to help them build credit, save money, and invest. I made a video about this on social media yesterday. The company has also attracted celebrity investors like Charlie D'Amelio, Will Smith, and Steph Curry. And then I made a joke. I was like, what do you have to do to get your money out? Like, do you have to live in the vault for like 30 days? Yeah. Like, do you have to live on an island? Like, how do I get my check to clear, Mr. Beast?
I appreciate that he's trying to help Gen Z save money. I mean, back in my day, like the glory of my like once a year was to take my change jar to get,
I'll go to Meijer, to the Coinstar.
Yeah, to Coinstar to get my change jar.
Yeah.
Now, you got kids ordering $10,000 worth of camping gear straight to the freaking house. I mean, I hope this is.
But would you invest with someone just because they're a YouTuber? Like, I am all for a greater good of getting people becoming more financially literate.
Yeah.
But I just have concerns.
I don't think it's any different than an athlete or a politician or what,
What politician bought a bank?
I mean, you have all sorts of politicians that are in finance.
Most of them are in jail. They came from Illinois. They were governors. Something like that.
Yeah, but I mean.
No, I agree. I mean, he's a marketing genius. He owns
genius.
the YouTube space. I mean, he's like the reason YouTube.
Well, his Beast Industries is a theoretically valued at $5 billion.
Yeah.
So that's quite the empire that he's built for himself.
Yeah.
So.
He's found the niche.
Yeah.
No shade there.
Yeah.
We will see how this works out. So good job, I guess, for you.
Yeah. More competition for the banks. That's good.
Yeah.
I don't know how I feel about this next story because I was already over it when you could do buy now, pay later for your Chipotle slot bowl. But now a firm has launched a service that allows you to split your rent into installments. A firm going to be out here owning everybody's apartments. A firm doesn't charge interest, but there is a monthly fee to facilitate the short-term loan.
Yeah.
So if you need some flexibility with your monthly rent payment, you could spread the payments out over the month, but the cost can balloon if renters can't repay the loan.
Yeah, I love how we call that not interest, but there's a fee.
Well, no, there's a fee, but then then if you miss it, then the interest.
Yeah, of course. But if you pay on time, the fee is your interest. I mean, that is what it is.
Now, this scares me more than the poly market or the banking with Mr. Beast or anything else like that. Yeah. This buy now, pay later, I mean.
For your rent,
This is what my people used to do. I mean, back in the day on the street corner.
Things are expensive.
Good.
Yeah.
What are you doing in a firm?
I've not traded this in quite some time.
AFRM, I haven't either. $57 and change, looks unchanged.
Look at that.
Been on its butt. IV rank of 15, not too much to do there unless you're going to be directional.
Target said in an email that it will invest more in store labor while also cutting around 500 roles at their distribution centers and regional offices. The big box retailer is trying to win back shoppers who've complained about sloppier stores, out of stock items, and longer checkout lines. What are you doing in TGT?
I was there yesterday. It was fine. 115, earnings March 3rd.
That's a sample size of 1.
It is a sample size of 1. I guess on a long-term view, a year view, it's in the middle of its range, but it hasn't had a downtick in the last since this year when it closed on its lows last year. So it's been rallying. It's probably set up for disappointment at this point.
Yeah.
And when are the earnings?
You have something to say? I can see.
No, I was going to ask you, because this goes to Coke's earnings this morning. I bought a 12-pack of Coke over the weekend at the grocery store. What does it cost?
Regular Coke, Coke Zero, Diet Coke?
I got Coke Zero. I like Coke Zero, but they're all the same.
Coke Zero too.
What do you think they cost?
So I know
at a grocery store.
Well,
I went to Pete's on Western, which is it's cheap.
The 12-pack of the small
$11.99
is around $9, but you can get them 2 for $3 sometimes.
When did they become $10, $11.
Yeah.
For those.
Yeah.
It used to be like $6, $7.
Yeah.
6, 7, 6,
7.
7.
Oh, that's so out. That's so out. We're
Good.
Yeah,
I'm
that's
gonna
old
just
now.
keep saying it.
Beth knows. It's
Man,
so
you're
out.
turning into your
I'm
father.
gonna
Yeah.
keep.
This is
It was
unbelievable.
$11, $10.99.
My favorite though now is Choppelganger.
What's that?
Oh yeah, that's Gen Z slang. Choppelganger.
Yeah, what is that?
It's like so. There's someone.
Is that better than Skibbity Toilet?
Yeah,
know
yeah,
that
yeah.
one. Okay.
Yeah.
Cool.
It's like someone that like looks like you, but then like is also busted like you. So it's like
Oh.
it's like your Choppelganger.
Okay, so like
yeah.
a doppelganger that's just like
Chopped.
Yeah, that's
Yeah.
chopped. Yeah.
Were you surprised I knew the price? It's
I
probably
was.
the only thing.
I thought
because-
I thought you would say like $6 or $7.
Yeah.
Lyft,
Feed me, son.
which I think has earnings. I think today or either tomorrow after the bell. Well, Lyft is opening up its ride-hailing app to teens. Vinny's lucky he got his license, but if you're not so lucky, Lyft has launched teen accounts that allows minors as young as 13 to hail a ride without an adult in 200 U.S. cities, including Atlanta, Boston, Chicago, and New York. What could go wrong?
Yeah, aren't you not supposed to get in cars with strangers?
Although I was like a free-range kid, so like it was like a defining hallmark of my childhood. So
Good catch. Lyft does have earnings after the close. $16 stock. Ivy rank of 49 is pretty good, but I still think you have to play it directional.
Yeah.
You're looking at
Uber's been a dog too.
yeah, $2.50 expected move for the month of March, but you've got almost a $2 expected move for earnings. So if you're going to play Lyft, you probably want to be in it tonight.
Yeah.
okay, get lifted. Operator of Eddie Bauer stores in the U.S. and Canada has filed for bankruptcy. Say it's not so. They hope to sell around 200 of their namesake outdoor sportswear stores, citing declining sales and supply chain challenges. The company said its financial headwinds were exacerbated by the current administration's uncertain tariff policies and inflation, among other factors.
Sad.
I don't know when was the last time anybody's been in an Eddie Bauer. I think it was.
I like Eddie
I don't
Bauer.
think I've ever been in one.
Yeah. No comment.
Yeah.
Yeah.
I don't know what to
all
say.
right. Sure. R.I.P. to you, Eddie
R.I.P.
Bauer. Nike-owned Converse is cutting jobs as it reorganizes teams. Converse brand employees were instructed to work from home this week. Yikes. As the sportswear giant makes strategic changes, Nike laid off 775 employees. Not sure yet how many roles will be eliminated at Converse. I love Converse.
I didn't know
Yeah.
Nike owned Converse.
I didn't know that either.
Yep.
Yeah.
I thought they were separate.
Nike earnings March 19th. Nike's been on a sideways downward slide to $62. Ivy rank of 17.
Nike's not the same. It used to be the new Nikes that came out were like, that was the thing. Everybody wanted the new Nike.
What about the Costco Nikes?
Yeah, those are, but it's like blips of fads. Like it's not like the
They're trying.
thing anymore.
Yeah.
It's
You got Steph Curry, is getting older, and you got
Yeah.
Nike. With,
I'm all about my Hokas.
yeah.
yeah.
Hokas, yeah.
Yeah, I don't know. Like,
Hey, it's already time. Nikki, you are headed to Vegas in a couple of weeks.
Yes.
So you could put a bet down at the sports book for the next season of football.
oh, I have that on my cell phone via 14 different
Well,
apps.
Jenny put like the Bears, I forget what the Bears odds were like before the season started, but Jenny had like a bet that was going to be pretty good. Like the Bears almost did.
Yeah, you got to hedge that.
But ESPN put out their power rankings and for next season.
What are the Bears at? We got to be top 10.
I was going to say, do you want to guess?
I want to say the Bears are probably 8.
What do you say, Matt?
Games to win?
No. Just
power
like
rankings.
power rankings
Oh.
of early 2026.
7. I mean,
Ooh, okay.
See, I was surprised. They have them at 11
11.
behind the Packers. Be so for real, ESPN.
Yeah, come on.
Also, the Lions are higher. The Lions are at 7.
Yeah, I don't know
I
about
thought everybody was real high on the Bears
That's okay.
for next.
That's fine. I would
Yeah.
rather that we have one of the hardest schedules.
Yes.
This
Well, the
year.
NFC is just
Yeah.
NFC North.
Stacked.
You have 3 teams that are in the top. That are right there at the top.
Yeah.
Starting at number 10, so they have the Green Bay Packers ranked at 10, Jacksonville Jaguars at 9.
Ooh.
I see that. Philadelphia Eagles At 8,
Eagles fly.
Detroit Lions at 7, 49ers at 6. They were beset by injuries because of the power plant.
Yes.
And then the Buffalo Bills at 5, Denver Broncos at 4, Los Angeles Rams at 3, Pats at 2, and Seahawks at 1.
Oh. So. Okay. I mean, I think that's fair. I think when you get around 10, you could probably shuffle a lot of them.
They're interchangeable, right?
Yeah, that's not I like that. All right, cool.
In this day and age, it can be hard to find good quality customer service, like really finding someone that's going to go above and beyond. This video went viral because, like, what happens when you take your car in for service and you're like, look, I'm trying to explain to you what's going on, but it only makes this noise when I'm driving. So this guy came up with a solution. Watch this. It's customer service.
Okay, no way. That's pretty good.
I mean,
I don't know if there's better customer service than Tasty.
I was going to say the same thing.
I've done many things that have gone well above and beyond the Call of Duty, including temporary tattoos. That has been a thing. You know, I've been.
We tramp stamped you. Yes, we did.
Yes, I've been, sent for dinner events as
as a cougar sacrifice.
Pretty much, yes. So I have done quite a few things in the line of duty.
Well, with that in mind, we're going to take a quick 90-second break. Good job out of you. Good job out of you. It's what have you done for me lately? We'll take a quick 90-second break and come back and talk about this market, which is basically unchanged. But volatility seems a little odd right now. We'll take a look and talk about that right after this. This is Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
We are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send on this Tuesday, February 10th, where we go to viewer emails. But before we do that, let's talk a little about the market. We have basically an unchanged market, but the market is back, baby, back to 69.80. Matter of fact, it flirted with 7,000 after going over 7,000 yesterday during the regular session. You're unchanged here on the market, and you've got volatility up 15 cents off its lows, off of its highs of 1870, off its lows of around 1830, sitting at 1845. But volatility's been green for most of the night, even when the E-mini S&Ps were catching a little bit of a bid. Matter of fact, this is the first time that they've sold off a little bit, with the market basically being a little bit unchanged. It seems like, to me, like volatility is percolating a little bit, even though we're at market highs. Looks like smooth sailing everywhere.
Yeah.
At this time, I mean, it's completely different than what it was 3 days ago, right? When the whole world was imploding. You still have Bitcoin not doing anything, down back under 70,000, 69 and change. You still have Ethereum down 100 and change. You've got gold basically unchanged near its highs. Silver, which had a good day yesterday, taking a small little breather, down 50 some odd cents. Nat gas reversing some of the sell-off that it had ever so slightly by 2 cents here. What do you think? What do you think about the market? NASDAQ's unchanged. Russell's unchanged. Dow's basically unchanged.
I think 7,000 is a good spot to get a little short delta. If we get up,
but you're not icky again, right?
No, we got 69.97 in the overnight session. I mean, it's setting up. You have some of these stocks like your Microsofts and your software companies and all these tech names that have just gotten killed. So I kind of like the NASDAQ more than anything else. I actually got a little bit of short delta in SPY, IWM, and diamonds yesterday with put diagonal spreads because volatility came in so much. I mean, we're back into an 18 handle in vol. I just feel like we've gotten to kind of the top, so to speak, and you need kind of something to move markets in either direction. I feel like that move is a downside move. You have Trump go wild on something, Iran, Taiwan. I feel like that's why we haven't blasted through 7,000. I feel like 7,000 has been kind of our spot where it's like, okay, are you really going to bet for another 100 points to the upside from here? Or is something crazy going to happen and we have a 300 or 400 move to the downside? I feel like that's kind of what has been happening in markets here. We've gotten up to that 7,000 mark. It's been the spot to sell it every single time. And that's where we're at. I mean,
but the more time you get there, the easier it is to get through.
You think?
I do.
So you're on the other side of that.
I'm not. I think volatility is percolating, and I think you can have a little bit of a down move here, maybe 100 handles on even the S&Ps, maybe a little bit less even.
Yeah.
But I don't think you retest the 68s or the 6750s where we went to at this time, not this week, not now. At least the way volatility is acting.
Yeah. Oh, I don't think there's anything like coming up that is going to make that move. Well, I think it's the uncertainty.
There's been a lot of. You just mentioned Iran. I mean, there's been a lot of talk of that. Yeah. And if you look at what oil is doing, oil's up 17 cents, but it's had a really nice rally from.
Yeah, it's been sitting here at 64.
Yeah, but it might be a buy the rumor, sell the news kind of event. I don't know what that does to the overall market, though.
Yeah.
I mean, usually bullish.
It's usually
fair.
Bullish, yeah.
Yeah, fair.
But you've had the move already.
We may have had the move already. Yeah, I mean, that's the great thing about the market. You don't know. But let's key on volatility today. If it starts getting over 1860 again, you'll have a little bit of a weakness in the market. Right now, you've got nothing. Real complacency in the market.
Bonds 116.
Bonds 116. I was going to mention that. I actually got out of my bond Super Bowl yesterday.
Always a day early with you. My God.
Hey, I never catch the top, and I never catch the bottom. You're 100% correct.
Nobody ever does.
I really don't. Not my style. I like to play in between there. All right, well, let's get to Confirm and Send, where we take a look at viewer emails on a basically unchanged market. Place your bets. All right, when you put on a strangle and the position goes against you, you should know about this because it happens to you all the time. Do you always make an adjustment, or do you sometimes just wait it out?
So this is a good question that we're kind of going to go over with the option jive after this segment where we talk about probability of touch. But you should expect on most of your trades to get tested at some point. Even if you're selling a 1 standard deviation strangle or 20 delta on either side, you have about a 40% probability of touch at some point throughout the duration of your trade. You can lower that by managing winning trades, managing at 21 days, rolling. All those things are going to help you mitigate, the risk on the position and the probability of being touched or tested on one of the sides. But the point is that you should expect things to go against you at some point during the duration of the trade. That's just how the math works. And it works out to be, around a 50-50 shot. So that's the first point. In terms of making adjustments, I tend to be a little bit more directional. Like you can, if you don't want, and that's because all of my positions, I have some that are bullish, bearish. Like I have neutral positions, but it's equal with my short and long. Like even for Johnny trades, I try to do one long, one short, one neutral. And so my positions as a whole together are all kind of delta neutral. And so I want to get short delta and stuff that is going up. I want to get long delta and stuff that's going down. And so I tend to be less aggressive with my adjustments. That's just me. That's what works for me. I think if you wanted to be more mechanical and maybe your positions are a little bit bigger, or maybe this specific position is a little bit bigger, you get more aggressive with the management. But for me, I tend to wait until, I'm a little bit heavy on the trade. I'm not adjusting.
Delta heavy on the
Delta heavy. So if I start with 0 delta and I get to 30 or 40 long deltas, I'm probably sitting with that trade. Once I get to like 40, 50, 60 deltas, that's when I'm doing something with that trade. Like I'm okay leaning 20 or 30 deltas long or short in something into a move that is, against my position.
All right, so I'm gonna answer it in kind, but a little bit different. As of late, I've been letting things move a little bit more than I mechanically would. I would typically around 15-ish, 20-ish delta, I would roll down or up the untested side. If I was getting too short, I would roll up the put. If I was getting too long, I would roll down the call to reduce my delta by 50%. And that's what I would suggest to most traders, especially newer traders, staying mechanical like that. As of late, last couple of months, we haven't gone anywhere. Every sell-off's been met with the buy. Every blow-off has been met with some sellers, and we've been staying in pretty much a pretty nice range. So I haven't been as mechanical as I have in the past. Now I'm hoping that doesn't bite me in the butt, but that's the way I've been doing it. Like even my Oracle trade, when I sold those puts, they were around a 20-ish delta. I let them get to almost a 60-ish delta, and I didn't do anything to them until I rolled them on a first kind of uptick on the stock. Normally, I would sell a call against it. What I've found is when I'm directional on like an Oracle trade, if I'm just selling one side, I know this is about a strangle.
Yeah.
I had bullish delta in there, and the stock went lower. I didn't want to now sell it in the hole, which was totally
flatten your delta and lower prices.
I was against everything that I stood for when I put on the trade. I mean, if I liked it at 180 and it's 150, I don't want to sell the 160 call now. You know what I mean? So I rolled out a month and tried to reduce delta that way and rolled down a little bit in the put. So I've been taking a little bit more directional, but that also comes down to size. I've been trading things a little bit smaller too, which makes it a lot easier to stay with the trade.
Yeah.
Mechanically, around 15, 20 delta would be my answer. Next one, please.
The other part of that discussion is sizing.
Yes.
Like you got to have position sizing small enough to where you have the flexibility to do either one of those. You can make that decision on your own.
Yes. You can make an offensive decision instead of a defensive decision. Yeah. Very good.
Cool.
Next one, please.
I know fundamentals aren't your thing, but what do you think of all the money being spent by companies like Google, Amazon, et cetera, on investments in AI? Does the level of investment impact how you might trade any of these companies?
No, it doesn't. So the level doesn't impact me at all for what the trade is. I'm looking at the IV rank. I'm looking at where the stock has been and where I think the stock is going relative. I'm looking at the difference between the 2 months. Is there vol differential between the two? Is there skew in the calls or the puts? Those are the things that are important to me to find a trade. First part of the question, the AI, every I don't know if it's every decade or every couple of years, there's always something.
It's faster now.
Yeah, well, everything moves faster now. But I mean, there's always something that pops up that gets the attention of the universe. Yeah. And everybody needs to, it was electricity, with the cars and everything else, a couple of years ago. Now it's all about AI and how they're, how it's going to take over the world. I think everybody has to be involved in it. And then this will go away and it'll be something else. So I don't look at it as anything like, they're spending too much money on this. They're all spending too much money. But you know what? It's all about the risk reward. These multi-trillion-dollar companies throw a couple of $1 billion at something that could double their multi-trillion-dollar company if they're correct. And if they're not, it's money in the couch.
Yeah, I mean, we're getting to bigger than money in the couch.
Yeah, like all the numbers are getting bigger, but sure.
Yeah, obviously it doesn't, the number that they put out doesn't mean that they have to spend that. That's the big.
That is true. That is true. It's just like when a stock buyback for a company.
Yeah.
Let's take it old school. We're going to spend $30 million and buy back a company stock. They're not saying they are. They say they want to.
Yeah. And there's a variable there. So that's the question. But I think to your point, these are the biggest tech companies in the world with the, most access to information and probably ideas about where tech is heading. I mean, Google probably knows more about where AI will be in 10 years, or at least a better probability of where it'll be in 10 years than
I do. Sure.
Yeah. So if these companies, are putting that amount or potentially that amount of money into it, it probably tells you that there's something there.
Yeah.
Like I'm not fading Google and Amazon spending $200 billion. That money is going to go into chips and software and tech. If it goes in, if that number is the full amount, but any amount, it tells you that there's something there. So I think overall, the spend is kind of fuel to the fact that this is something.
I agree.
I mean, they're putting risk out there. So.
Yep, definitely putting the risk out there. On last call, you were talking about a rotation. Since liquidity is king, would you focus your trading in underlines where money is flowing?
I think the rotation kind of was talking mostly about silver and gold.
Yeah, pretty much.
A little bit is where you were going with this. But yeah, I mean, I trade the momentum. Like I like to follow the short-term trend when things are moving. I mean, that gets me interested. Some people like to fade it. Do it, do you, boo? That sort of thing. There has been a lot of rotation recently, like we've seen the Dow and the Russell greatly outperforming the NASDAQ, and I'm fading that outperformance. Like there are things, like that's a trade too. I'm long mostly NASDAQ stocks, and I'm pretty much just short the Dow. I mean, like that's my trade. So whether you call it a rotation trade or just trading is semantics. I mean, I consider it just trading.
Yeah, I would say the same thing. I continue just trading. I mean, listen, we typically go where the action is, and that'll be tight liquid markets.
Volatility, that's action.
Yeah, exactly. So I don't look at any money flows. So that's not, so when I'm talking on the show or I'm saying something, there seems to be a rotation. It all comes down to liquidity. You'll see the markets widen out in the ABC stock and get tighter in DEF. And you can make the assumption that stock is in play. And if it's in play, I want to be there too. And that's what it comes down to.
But that's market awareness too.
That is market awareness.
It's subjective. When you see, silver moving 10% and gold basically unchanged, it's not a.
We never talked about silver for years. I mean, then all of a sudden it became the thing we talked about every day.
Yeah, but it's not a stretch to say that there might be a rotation out of silver into gold when silver's down 10%, gold is unchanged. Like that's not a profound statement.
Right.
Like that's pretty apparent if you're watching markets every single day. If you just see the headlines at the end of the day on CNBC, you might not understand or see that, have that market awareness. But we're sitting here watching the flashing lights for 8 hours a day, every single day for years. So
this is true.
I see it.
This is true.
Yeah.
Next one, please.
Do you think the massive amounts of liquidity in the market help volatility to normalize more quickly after it elevates? It's another good question.
Yeah, it's a great question.
We've had some, we've talked about this a couple times over the last couple weeks here. We've seen 20 to 22 vol print in /VX vol futures and be 18 by the close within 24 hours. Do you think it's a liquidity, effect?
It's a good question, and I've been thinking about it as you've been speaking, and I'm kind of on the fence, and I'll just tell you again. Veneto will say it's a subset of one, so it's not that great. I'm just going to take gold for a moment. Gold had all types of liquidity to it in the futures and in the options, and the market's really never tightened up, and volatility is still high. Silver did the same thing, but their markets have been tight, and I'm talking about the option markets have been tight, and they remain tight. So I don't think that liquidity really helps the volatility, but of expanding and contracting on a long-term view. But on a shorter-term view, I think it is everything. I think when you have a lot of liquidity, volatility is going to mean revert a lot quicker than if you have less volatility, less liquidity, and then volatility will take a lot longer. Markets will just get wider, and they just doesn't come in as much. That would be my answer.
Yeah, I agree. I think
I had to kind of think about it to be honest with you.
It's a really interesting question.
Very interesting.
I agree. I think the liquidity in markets as a whole has led to the kind of V type trades. Like you've had these 100 or 200 point down moves, and the next day you're up 200. And I don't know if I would have been comfortable with that 5 or 6 years ago, like pre-COVID. You know what I mean? Like you never really had that. You had down 50, and then the next day you're maybe down 10, and then the next day you're up 10. Like it was kind of more choppy and felt more random. This feels like it's quick liquidity-based moves. You have these huge moves lower, huge moves higher. It's really quick. It happens in the blink of the eye. If you blink, you miss it. I think that is kind of liquidity right now. And it can go both ways, obviously, but
it certainly can. It certainly can. That being said, all 4 indices are green ever so slightly. So is volatility. So are bonds. So is oil. So is gold. Silver is down small.
Nothing happening.
What's that?
Nothing happening.
Nothing happening. Nat gas down small. Bitcoin's your biggest mover with Ethereum on a percentage basis. Almost 3% lower for Bitcoin at 69,000. 5% lower, $100 and change on Ethereum, 2021. We'll take a quick 90-second break and come back on a pretty complacent day with volatility up ever so slightly. We'll come back. We've got an option jive after this. It's Tasty Live.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
It's options. Jive.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with an option jive. Even the S&Ps, not as high as I saw them all night. I saw them up around 8 early this morning, around 5:30 a.m.
Mm-hmm.
What time you get up in the morning?
Around 5:30.
5:30?
Yeah.
Yeah. I'm a 5 o'clocker. I got to leave by 5:30. Get here by 6 kind of thing.
Do you want me to give you like a cookie or something? You're amazing.
I like chocolate chip if you're doing that.
Chocolate chip.
Sure. Option jive. Probability of touch across different deltas. What's that mean to you?
What does that mean to me?
Probability of touch gets different deltas, yes.
Yeah, well, we're going to talk about probability of touch and kind of the expectation
Do it.
you should have. And so, we've looked at this in previous research. The realized probabilities of touching the strike in a short option strategy are much lower than the theoretical probability. So typically we use 2x the delta as a way to estimate probability of touch if you don't have a sophisticated platform like the Tasty Trade platform, where you can just have it as a column set. But that's your back of the hand trader way of kind of estimating what the probability of your option is getting touched at some point within the expiration. So one of the things we know with all things managing trades is that the 21-day mark is going to significantly compress your P&L volatility, which is going to compress the probability of touch, going to increase win rate, reduce risk, et cetera, et cetera. We know that's kind of the point here. So we're basically just showing here that by just managing at 21 days, you're going to cut your probability of touch significantly on your position. And this shouldn't be a shock to you when you're rolling, closing, winning trades. You're going to really reduce the amount of times that you are getting tested on your trades.
And even if it does touch, time has value to it. So it doesn't come all out all of a sudden just because you're touching it, right? I mean, You're not trading the weekly options or the daily options. You're really trading something with 21 days worth of time. So there's still wiggle room is what I'm trying to say.
And probability of touch doesn't dictate good or bad trade, right? So I have short puts in Microsoft where they're basically a scratch now, but Microsoft is like 20 points lower.
Right.
And where I put those trades on. And it was at 400.
Good strategy, horrible direction.
Yeah, it just got the direction wrong, but you got, vol contraction, you got time decay, those things worked in your favor. So having your strike tested doesn't necessarily imply that you're going to lose money on that trade or that it even is a losing trade at this point. It just is a reflection of the movement in the stock. That's it. Mm-hmm. So to understand the effectiveness of realized probability of touch, our POT here, we can examine the ratio between the realized probability at 21 days and the delta, which is half of the theoretical probability. So what we're looking at here, you're basically looking at a combination of delta and probability of touch. When you're managing at 21 days, you're greatly reducing that and giving you an idea of what your delta change is going to be on your position. So if you're selling a 20 delta call, you can expect at some point, based on the probability of touch, to have a 35-ish delta position at some point on that call. And that means that the stock goes up a little bit. It's kind of close to the call. On the put side, it's the same thing. If you're selling a 20 delta put, you can expect that put to go to 25 deltas at some point, even if you're managing at 21 days. It just tells you that you're your position, your delta, you have to have some wiggle room on your position. This goes to our confirm and send on, managing positions. If you're selling a 20 delta put, it's not like that put's going to just go to 15 delta over a week. You're going to have times where it goes to 25 deltas.
Yeah, no.
And on the call side, it's the same thing. You sell a 20 delta call, expect it to be a 35 delta call at some point.
Perfect.
Not on every trade, but a lot of trades.
Yeah, I mean, it's almost like looking at the probability of being out of the money. If you're selling a 30 delta put, it's a 60% plus chance of touching it. I mean, 30% sounds like, oh man, this is free money.
Free money.
But 60% chance of a touch, again, going back to your point that you made just a moment ago, doesn't mean it's profitable or a loss. It just means that it can happen.
Yeah.
Odds are it might happen.
Yeah.
As time goes on, that number gets smaller, and that's what we play for.
And when you're factoring in the 21-day mark, you're gonna reduce that probability a lot more. So the 60% probability of touch goes down significantly to 40, 30, something like that.
Yep.
So the next slide here. So focusing only on the delta at 20 might not provide the full picture. So this time we analyze SPY out of the money puts and calls across deltas ranging from 10 to 45, which are, mostly what we trade, right? So we kind of stick to more around the 20-ish delta, but most people are trading in this range from 10 to 45. All the options were initiated with 45 days and exited at 21 days. And so we're just going to look at deeper into kind of this probability of touch idea. So the probability of touch at expirations for all deltas are lower than the theoretical values, which is 2 times delta. That's our theoretical probability of touch. But when positions are managed at 21 days, the results improve significantly across all deltas. The average probability of touch when managed at 21 days is approximately 0.8x the delta. So probability of touch actually comes in, it's actually overstated, which makes sense because volatility is typically overstated. So most of the time, your 30 delta option has a theoretical probability of 60% of being touched at some point. It probably comes in less than that, 55, 50% on a realized basis. When you're taking the 21-day management into effect on these positions, you cut that even more. So, for example, like on a 20 delta option, you're looking at a 10% probability of touch. That's your actual probability of touch based on rolling at 21 days. And so you're cutting these numbers significantly just by managing at 21 days by a factor of about half, a little bit greater than half.
Okay. You want that, right? That's a good thing.
Yeah, that's a good thing. Yeah.
Just want to make sure everybody knows.
But there's 2 points to this. It's like you should expect to be, I think to your point of like a 30 delta option, people think, oh, it's a 70% probability. Why not just move this to the 10 delta and it's a 90% probability and just do these, all day until my hands bleed. You should expect, that the probability of touching is going to be high. When you're managing, you're going to cut that significantly.
Perfect.
So this next one is just kind of visually showing the improvements that exiting positions early can bring to our short put strategy. So that the trend also shows that the gap between theoretical and realized probability narrows as delta increases, meaning the closer at the money options, when you get to like a 40 delta option where it has an 80% probability of touch, it does realize that probability, which makes complete sense because you're right at the stock price. So you're selling straddles or really tight strangles, you should expect, to be tested on both sides of that trade probably multiple times throughout the duration.
Yeah.
But when you're selling those 20 or 25 delta options, the probability of touch is actually kind of overstated. And that makes sense because of the way volatility is along the curve. It's overstated further out in time or further out of the money. And so your probabilities are a little bit more overstated. When you factor in the management, you even reduce that, you further reduce that and make that even lesser of a probability. And so it's a pretty cool little slide that we got there.
Yep.
Give you an idea of just probability of touch and incorporating managing trades. It's going to cut down your P&L volatility really significantly.
Very good.
So, but that was just looking at the put side. So on the call side, the realized probabilities are higher than those for the puts. And that's just a reflection of the market that we've been in for quite some time. It's been, upside drift and just generally, there is that upside drift in markets. So calls tend to get tested more, and you typically have put skew in something like SPY. So relative to where your strikes are, your calls are a lot closer at the money than your puts if you're using the same delta. So this shouldn't shock you. It doesn't mean you shouldn't sell calls. I think it just tells you that, there is an upward drift to the market here. The 21-day management surprisingly kept the probability ratio extremely close to that of the put side. So the takeaway here is that by incorporating the 21-day management to your positions, your probability of touch is in line on both sides of the stock, whether it's on the puts or the calls. You have kind of the same probabilities on each of your options.
Yeah, and
this is SPY, so this is way different than something like an Apple or Microsoft or Google, where you have a lot of different dynamics that go into the stock, whether it be binary events, news,
earnings announcements,
like all those things are separate from the S&P 500.
That's a great point to make. And plus, SPY has put skew versus a lot of the companies that you just mentioned has call skew.
Yes. So I would actually think on something like, I don't know, it's hard to quantify that. I was going to say like on a Tesla, calls are probably what our puts are on SPY, but I don't know if it is because of the realized volatility. You're getting way bigger, like volatility overstatement in SPY is a lot greater than the overstatement in something like a Tesla when you have like these kind of binary events where you have realized volatility that might be multiple X's of whatever the implied was. So that's an interesting one.
Very good.
So the next slide, we found a similar pattern on the call side. So high delta calls also presented a greater risk of being tested. This shouldn't be a shock when you're selling closer at the money premium. You're going to be subject to being tested on either side multiple times throughout the duration. But again, when you're looking at the probabilities, the call side probability was more in line with what you would expect from a 2 times your delta perspective. When you're managing at 21 days, you're cutting that down, by 50% plus.
Sure.
Across the whole distribution, whether it's a 10 delta option or a 45 delta option, if you are managing at 21 days, you're cutting the probability of being tested on that trade by more than 50%.
You're pretty good.
Thank you. Been doing this
out of you. A hell of a teacher.
So a couple takeaways here for index options. Puts exhibit a lower realized volatility, realized probability of touch than calls across all deltas. This is in SPY specifically. I bet you could probably apply this to the Qs too, but this might be different on a single stock name, but we're just talking SPY here. Actively managing positions at 21 days subsequently reduces the likelihood of strikes being tested compared to leaving positions unmanaged. I think you can apply this to basically any trade that you do. 21 days is going to significantly compress your P&L volatility. On average, the realized probability of touch for puts is slightly below their corresponding delta, which for calls aligns with their delta. So the call side is much more, the probability of touch is realized is more likely to be realized than on the put side because we've had this kind of upward drift in markets. When positions are actively managed, the disparity between put and call probability of touches becomes minimal. So when you're managing trades, the puts and the calls, they become very similar.
Good job out of you. Good job out of the E-mini S&Ps. Catch a small little bid here, up 650. Volatility basically unchanged. NASDAQ up 39. Russell up 1. Dow up 30. I still all consider it pretty much unchanged. Bonds, on the other hand, catching a little bit of a bid. 116.11 up 25 ticks. Bitcoin is not caught a bid, still down around 1,500 or so. Oil up 25 cents, sitting right there. Gold did catch a bid. It's up 13. It was down all morning. Silver still down 5 cents, but basically unchanged. We're going to take a quick 90-second break. We're going to come back. We got more Tasty Live at the opening bell. You're not going to want to miss this.
Cool. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son. And you know what that means. Time for a little bit more Tasty Live with, the opening bell's imminent here in about 2 minutes. So let's take a look at this. Even the S&Ps are up $5.50, kind of where they were sitting for most of the night. You can see here that we've had a very tight range top to bottom last night, only about 20 handles. We've had around 50-ish plus handles for most overnight action this week. If you look at the E-mini S&Ps, you got an expected move of $26. Yesterday was closer to $35. Previous days was closer to $50 as volatility has continued to contract at 1834, now near the low end of its most recent range. NASDAQ up 32, Russell up around $1, Dow up 56, bonds are up 25, and Bitcoin not moving, 69.3 at the lower end of its recent range for today. Ethereum down 100, been sitting there for most of the morning. Oil up 14 cents, gold up 13, caught itself a little bit of a bid. You can see here gold's had almost $100 move, now just a couple of dollars off.
Normal now.
It is normal. It does seem like volatility is volatility's still high in there, 60, but it's really come down from, I don't know, it was over 100 at one point in gold and in silver. It's become back, seems to be back to what it used to be. I mean, I was trading some 1, 2, and 3 day puts in there. They seem to be elevated. Took me about a week or so to scramble out of those.
Volatility has been there. That's why volatility hasn't contracted as much as we were expecting, because we like the silver move, we were kind of expecting to have. I don't think 30% was in our deck of cards for on a single day, but we thought we were going to have a big downside move, you get that huge volatility contraction. You haven't seen that because we've kind of bounced the same magnitude. It's been a realized vol move in both directions since the start of this kind of craze, for lack of better words.
Yes, there's your opening bell, my friend.
How do you feel about SPX trade today?
I hate to pick and choose, but I'm going to say I'm going to shelf that question for about 15 minutes or so. That's what I'm going to see. See what the market does here. Yeah, okay. I mean, usually we like to put it on before 9 o'clock from our research. We've been putting it on earlier in the day. I want to looky-see here. Volatility unchanged now, completely zero.
Okay, I wanted to look at, I got to close my data dog in a second. I'm going to wait for those markets to tighten up. I wanted to do something in Meta, I think.
You want to do something in Meta?
Yeah.
Meta IV rank low. It's 17 here. It doesn't mean you should shy away. Probably means you should be a little bit more directional.
I wanted to do like a April-March diagonal spread.
Yeah, so April's got a 34 volatility, a monthly implied volatility. The same thing with March. I have no problem doing that. If this vol differential, if March was 2 or 3 vol points lower than April, that would shy me away. If it was higher, that would make it even more advantageous for me. The same, the world is your oyster. You just got to get the direction right, which is a 50-50 shot. Right?
Yeah, I'm going to try and do 40-20 in terms of my delta. So the 700 in April, and then I'm selling the 740 in March against it. I did it for 1970, so I used about $2,000 in buying power, which is pretty in line what you would use for selling an out of the money put, but there's just not a ton of vol.
Yes. Yeah. So you're trying to be a little bit more strategic here, right? It's going to be a lot slower moving. You talk about selling a put there. Your spread that you're putting on has about
20 deltas.
Yeah, about 22-ish long deltas in Meta. So you'd be selling the 20-ish delta put, right? There's going to be no probability of pop on this or anything like that because you can't factor in but you can if you want to go to the Analyze tab and kind of play around with it. But the computer can't on entry figure out if volatility is going to expand or contract in the back month, which would change the price here, or expand or contract in the front month, what the differential could be, or anything else like that. Even the S&P's up 10, Dow up 200, cancel, crash, volatility unchanged.
I also went to SoFi and I sold some extra puts there. So I have stock and short puts. I'm actually net long on the overall delta, but I'm like 2-to-1 puts to calls now, or puts in stock to calls. I have the 22 strike calls, I think, right at the money.
You're a believer in SoFi.
Well, I'm short volatility there, and I have static delta at much lower prices, so I'm comfortable adding a little long delta here.
IV rank at 13 is pretty low, but March volatility is 67. You compare that to April, it's 61. So you've got some good vol in March, and I know that's where you're.
And I took off the Datadog diagonal spread. That was home run. That was a good one.
D-Dog, what did you pay for that? You sold it back out at 10.10 or so. D-Dog up $13. You played it to the upside.
Yeah, I did it at like $6 and
no, that's a home run. More than you would have made on a naked put, probably with the same 20-ish delta. Yeah, you paid $6.35. You made almost $4 on that. That's a good one. Good job out of you.
Thank you.
If you knew it was going to be up $12,
should have done it 5 times more. Come on.
It's the beauty of trading, isn't it? Hindsight.
It's always hindsight.
Let's see what's moving in this market. Let's see what the buckers are. I don't know what LITE is. Luminum Holdings? I have no idea what it is. But SanDisk is down 15, MU down 11, Costco off of its $1,000 mark to $993, down 4.5. Google down 4, Coin down 4, 160 and change. MSTR down 3 at 135, but you remember MSTR flirted with breaking 100, got down to around 105 or so just about 72 hours ago. FCX, some of the copper plays down small, IBIT down $1, XOM and some of the oil-related like CVX, which is Chevron, down almost $1. Let's see what's on the upside here. Spot up 68. AppLovin up 10, although it is $10 off of today's high. Datadog up 11. You just put the trade on there. TSM catching another bid on top of all the other bids it's caught, up almost $6. Shop up $6. Tesla up 4.
I just closed a Shop diagonal spread. That was one of my software buys.
That was one of your software buys in Shop. It's not part of one of your America portfolios, right?
No, it's Canada.
Canada, beautiful. $6.10 is what you paid for that on the 3rd. Sold it out at $8.35, so you got $2.25 profit on there. Nice, listen, these are directional bias plays. If you get the direction right, they pay you. So good job on that one too. What can't you do?
Nothing.
Don't answer
Unstoppable.
that. Don't answer that. Definitely don't answer that. Lost a little bit of the volume that we had in the E-mini S&Ps earlier this week. Yesterday's volume was a little bit lower that what we've seen. You've seen a little bit of complacency here. Volatility basically unchanged, up 13 cents. Gold catching a little bit of a bid, up 12.
Yeah, I need a little bit more of a bounce in some of these names. Like the Shopify trade, that one moved enough, but I still need a little bit more out of like a Microsoft, Hood.
They're trying.
Netflix.
Hood's
they've had
earnings,
nice bounces back, but I still need a little bit more.
Yeah, Hood has earnings today after the market closes. I have a marked position I'm sitting with in there too.
What else? What else is moving? What can we? Did you want to go into a firm? That was another one I wrote down now.
We haven't. AFR.
So low there.
It is so low, 12 in a firm. And if you look at it here, it's probably been going down the last 5 days or so. If you can find, it's not even on the high option volume list that I can see real quickly. Just taking a look.
Let's see.
Should have done it by symbol. That would have made it easier for everybody at home, and you probably wouldn't have gotten dizzy. But no, not there.
Yeah, vol still in gold and silver, still high. I can't close any of those. I'm short extra calls to puts.
Probably better for a new trade than an old trade in GLD, hanging in there, or SLV. SLV has significantly better markets. SLV down $1.35. You actually had a little bit more two-sided action there too. Silver's still at the lower end of its range. All right, you ready to take a quick 90-second break?
Sure.
E-mini S&P's down 2, volatility up 30 cents. Going to have a little bit of choppy downward action in the market today. We'll take a quick 90-second break. We'll come back. We've got Futures in Focus with my man Craig from the CME coming in. We're talking about Bitcoin, MBT, Ethereum, all the coins. We'll be back.
All the coins.
All the coins. We'll be back in 90 seconds. Tasty Live.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we started.
He was my friend first, clearly. Met at work.
Yeah, Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mike was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son, and you know what that means. Enough out of you. We got my man Craig from the CME here. How are you, my friend?
Good morning. Good to be back.
Good to have you. Good to see you. Everything well?
Yeah, everything's good. How about you guys?
Good. No complaints. Yeah, no complaints. We've had a little bit of movement in the market.
The year's starting interesting.
I've been calling it violently unchanged. So
it comes back, but
we've been sitting in this like 6,800 to 6,800 to
7,000. Throw it up there, yeah.
Which 100 points seems like a lot, but it's just like 1-2% from where we were. On either side of the market where we started the year.
Right.
But it's been huge moves where you're
big moves within that though.
Yeah.
Right.
In a lot of different asset classes.
A lot of different asset. Gold, silver.
Yeah. I mean,
Bitcoin, which we're going to be talking about today. Yeah.
So definitely an exciting start to the year.
For sure.
Yeah.
For sure.
Yeah.
And the movement, I don't know, we had a couple questions this morning about just volatility and how fast it's moving and whether we think it's like a reflection of just overall liquidity, which I think is part of it. But, seeing volatility futures get to like 22 and then by the end of the day, they're at 18.
Yeah.
I mean, that's opportunity. It's
big
been
moves
awesome.
in vol, yeah. Especially for an option shop like Tasty, right?
Yes, it's been good. But I've been scalping. I've sold the 7,000 mark a number of times, and it's worked out. I'm wondering if the next time I do that, that's when they catch me.
Mm-hmm.
That's kind of been the spot.
Listen, isn't that the way it always is? You do it, and then they're going to catch you. That's just the odds of how it plays. So you get mechanical and you try to walk away unscathed. That's how it is. This is the life we've chosen.
I know.
Could have been anything. This is what you chose.
Sometimes I think we're just crazy people.
Probably.
It is too good.
Yeah, probably. So. All right, my friend, bring us home here. We're looking at futures and everything you wanted to know but was afraid to ask about Bitcoin, MBT, Ethereum, MET. Maybe we'll mention a couple others too. What do you got for us here today?
Yeah, I know we're going to concentrate on CME's Bitcoin and Ether futures today, which were the first two that we launched, and I think the two biggest cryptocurrencies. Yeah. Mm-hmm. But before we start, it's probably worth mentioning that CME actually keeps expanding its suite of cryptocurrency futures and options. Mm-hmm. We were just talking about XRP, standard size and micro size XRP and SOL on the Solana network. Yeah. Mm-hmm. And then just this past Sunday, we launched Cardano Link on the Chainlink network, and then Lumen's
Yeah, we'll probably have those on the platform this week.
Yeah, they're probably not out because they're brand new contracts, but those launched on Sunday. So, like I said, the suite of cryptocurrencies just keeps expanding at CME.
Yeah, it's been we've been trading these a little bit. I've been trading the XRP futures as well as the MET futures, which are 1/10 of a coin, and so you can size these up pretty substantially and get some good leverage on those positions. 10 contracts would equal one full Ethereum coin. And you're only using like $200 or $300 in buying power to put that position on, which is, like for a trade, it's way easier than being cash secured, $2,000 to buy ETH and take $100 scalp out of it. Mm-hmm. That leverage is really good. So we've been trading that a little bit too. I mean, those are fun. The MBT is also a good one too.
Yeah, and it's worth pointing out that all of these cryptos that I was just talking about, we have both what we call standard size and then the micro size products. Because some of these standard size products are pretty big for a lot of individual traders, which I think we're going to get into on the
that's what we're going to touch on
Bitcoin and
today.
Ether.
Yeah, find what's in your buying power realm,
Buying
right?
power, risk appetite, right? All of that stuff, and it's important.
But isn't buying power? I should put it this way. I like looking at buying power as what my risk is on the trade. Not that if buying power is $5,000 or $6,000, that's my total risk on the trade. It could actually exceed that at some point.
Sure.
But if I see a product that I haven't traded much and I'm looking at it and it becomes in play now and I have a directional bias and I'm going to use futures and not options on it, and it has a $5,000 or $6,000 in buying power versus something that has a $3,000 in buying power, that one with $3,000, I'm going to assume is going to move less and have less risk to it.
Yeah, no, I think that's a great sort of back of the envelope way to look at it. Just a quick sort of dirty math because, when you say buying power, that also means margin, right? That's how much of a performance bond that CME is going to make you put up to hold that position. And that's all based on historical price moves and volatility. So it kind of is right, Tony. So, I mean, given that that's what, the margin is on that, it does reflect how much volatile, and kind of in a way, how much risk, at least in a relative way, that contract has.
Then you couple in, expected move for the day, and then maybe you have a little bit of parameters on what you can expect to make or lose or have to manage on this trade during the day.
Which Tasty does a good job, right, of that expected move on the front end. It's right there in front of you, and you can see what that is based on the options markets, right?
All right, cool. Let's take a look at this. What do we got?
Yeah, so going back to the Bitcoin and Ether coins, which like I said, were the first two futures contracts that CME launched on cryptocurrencies and the two biggest cryptocurrencies that there are. We actually have more products than are even on this slide that we'll just touch on, but I think these are the more liquid products. But the full size Bitcoin was the first contract that we launched, and that's a contract worth 5 full Bitcoins, and it's $70,000. That's $350,000 worth of Bitcoin, which is a big contract for a lot of individual traders, especially when you consider the volatility with which some of these cryptocurrencies trade.
And I remember when you guys first launched these, because Bitcoin was probably more towards like 12 to 15K, if I remember, because it was.
Don't quote me. I think it was around 2017. You're probably right.
It was somewhere around that mark. And at that size, it makes sense to have $100,000-ish notional, or it was probably even less than that because that's kind of in line with all the, E-mini futures and the NASDAQ futures.
Yeah.
Those are a little bit bigger, obviously, at that point. So it's crazy how much it's moved from there. And I think ETH was sub 1,000. I think ETH was around like 700, 800-ish at that time.
Yeah. Right.
And so it was because I remember Tom trading these.
Oh yeah, all
a little bit more, and then they got a little bit big.
Yep.
Yeah, and then even you're right because the notional was much smaller than with the price appreciation that we've seen. But vols actually kind of come in a little bit from then too. So even back then, that was still a big contract because of the volatility that these things were trading at. They're still obviously high volatility products. But back then, I think the vol was even higher than it is today. So they were big contracts for sure.
For sure.
But of course, we've got, and that's kind of a good segue into the micros, right? So we launched smaller versions of both of those coins. Both are 1/10 of one coin, right? So if you could take a Bitcoin at $70,000 today, 1/10 of that is about $7,000 worth of Bitcoin. And the Ether is pretty small, right? I think Ether's come down to around $2,000, if I'm not mistaken now.
Yeah, it's at 2,000 right now.
You're
19 and change.
Yeah, so that's a $200 futures or $200 worth of exposure with that future, which becomes much more manageable for a lot of individual traders.
For sure.
I think it's more of a retail friendly product.
I think the margin is about $60 to $80 or something like that for one contract. So, a manageable size.
For sure.
And then it's worth mentioning too, we actually have a product called Bitcoin Friday Futures.
Okay.
BFF, who did a big marketing thing with BFF when we launched.
BFF.
That's 1/50th of a Bitcoin. So even smaller than the micro.
Mm-hmm.
And those are a little bit unique because they expire every Friday. So it's a futures product with an expiry, settles, all of these settle to cash, right? So you're never taking delivery of a cryptocurrency with any of these. But the BFF, what it does is it makes the price of the future, we don't have to get into basis too much, but it makes the price of the future a little bit closer at pretty much all times to the price of the underlying cash.
Yeah.
Because they expire so frequently.
There's no, you're not a leverage contract out in time.
As much. It's not as much time, right? But those are even smaller than a micro if someone thought the micro was too big.
Cool.
Very good. Very good. Cool.
Yeah.
Cool.
Yeah, so here's just kind of a summary of some of the things we were just talking about. Obviously, the standard size Bitcoin is worth 5 Bitcoins, the micro 1/10. The standard size Ether is 50 Ether, so at $2,000, that's $100,000 worth of Ether with one contract. And of course, like we just talked about, that micro Ether at about $200. And then just kind of the tick size, right? So, how much room can there be between the bid and offer, right?
Yeah.
We can see on here it's $5 on the Bitcoin, a quarter on the Ether, both the micros and the bigs. And then these expire every month, except for the ones I just talked about. But we'll stay focused.
We'll stay here
on these. So they expire every month, and like Tony just as it's actually right here, they're cash settled, right? So we've talked about on this show before, some futures are deliverable, and you've got to be cognizant of those because you want to get out of positions before, for example, crude oil contracts might expire. But these are all cash settled. So at the end of the contract, we move the money one last time, and the contract goes away if you're holding it.
I'm gonna ask you a question I don't know the answer to. I don't know if you'll know the answer to. For retail investors, it's always like with futures, they're always worried about the silo of corn that they're going to have to go get or on their front lawn.
Totally.
How many futures are really deliverable on a percentage basis? Would you think?
How many of our if you look at all of the contracts we list, how many of those are deliverable?
I mean, and to a retail investor, I would have to think it's
no retail
zero.
investors,
right?
Every broker has pretty good risk management these days. It has really good risk management these days, right? And you guys monitor it, and if someone's holding a crude oil contract.
I mean, I have so many idiot friends who are traders and been traders for 40 years. I don't remember, one of them would have to be a jerk and get something delivered to them.
It was Tom. Tom
tells a story about the silver, right? And he had his clerks
I hope
go
he
down.
Still has it.
He says
he can't find it.
Well, I did an interview with him a couple months ago, and at that point, he said he still had it. And
wow.
So you would say it was minuscule or close enough.
It is,
to zero,
right? And but you're right though. I mean, I go to all of these shows, and you guys are out there too. And how often do you hear someone say, "I don't know about futures. I don't want an oil tanker showing up in my front yard."
Yeah,
it's like, well, that's not, it. You have to be cognizant of it, right? If you are, but the reality is retail traders don't go to delivery.
The reality is you're worrying about something that's not going to happen.
Right.
Yeah. I mean, the brokerage firm is going to
start
stop
calling
that,
and eventually they eventually
take you out of
pretty
it,
much take you out of it, right? Let's call a spade a spade. Cool. The last line on here is interesting because most of our futures contracts we say trade about 24/5, right? So most of our and these today open on Sunday night at 5 p.m. Chicago time, and they trade until 4 p.m. Friday, Chicago time, with a 1-hour break every day. But we have announced that cryptocurrency futures will be going, actually, what it says here, 24/7.
Sweet.
And in fact, it came up as recently as our last earnings call. It came up, and I think next quarter is what we said for full 24/7. So I think it's certainly worth pointing out.
Yeah, that'll be there. I mean, there's a lot of movement in crypto over the weekends, and it's been kind of at least not recently, but has been kind of the way that I've been kind of gauging where I think markets are going to be the next week, because it's been kind of a risk on,
it's
risk
been a
off.
risk. It's been a risk asset lately, right? And we can get into that a little bit, because there's been a lot of discussion over the last 5 or 10 years. What is Bitcoin, right?
Yeah.
Is it digital gold? And it sort of hasn't had those characteristics lately, but it has acted. I mean, I think it's been pretty correlated with the NASDAQ lately.
For sure.
And I do the same thing, Nick, like a proxy on Saturday afternoon or you see a headline on Saturday afternoon and what's open. Well,
you see Bitcoin is moving at 3-4%. You know that E-minis are going to be,
no guarantee.
No guarantee.
But it is a barometer of kind of like what the market is. At least lately, that's what it seems like, right?
Yeah, I think this will be great for you guys too, because it's a pretty efficient way to hedge spot exposure. So if you do own, a couple Bitcoin or whatever, and you are holding that in spot markets, the leverage that you get on the futures through even the overnight, and weekends, you can use those contracts as short-term hedges. You get a big move in spot and you're holding, a couple coins, you could hedge that with a Bitcoin futures contract. And with the leverage, it makes it a pretty doable thing. You don't get cross margin on that sort of thing. Mm-hmm. But with the added leverage that you get with these products, it gives you a little bit of flexibility. So it's good that you'll have, that ability on a Saturday and Sunday to do that.
Yeah, unfortunately today we don't have that cross margin. I've been to a few cryptocurrency shows like the
Bitcoin
matter of conference.
Time. It'll happen.
Yeah, I mean,
hope it'll happen.
Hopefully, right? Yeah. But and I do get that though. Or someone will want to sell like a call against the cash they're holding, and said, yeah, you can, but you're not going to get that cross margin benefit on that.
Yeah. Cool.
So yeah, I mean, I think this is pretty accurate. You've got moderate on the bid ask for micro ether, and I think it is a little bit wider than the standard size ether, but certainly a tradable contract.
It all trades at the same price.
Yeah.
So if you get a smaller future here that has a wider bid ask, and just for an argument's sake, it's trading at 1,000. It's 1,000 bid on the big future. If you put an offer in on a small future at 1,000, you can get filled.
Yeah.
99.5% of the time out of 100.
Yeah. I mean, the fact is the same market makers generally are quoting the standard size and the micro size, and they know what value is, right, Tony? Yeah. And they're gonna trade around value like that.
Yep.
So, I think that's a great point. Even if the screen says it's slightly wider, they're all very liquid, very tradable products. I think for individuals. And I think that institutional call out is right. Like, I think the big Bitcoin is more of an institutional product, whereas the micros tend to be a little bit more of an individual retail trader.
I got long a couple of the micro Bitcoin MBT.
I saw that.
I'm working on order to close the oil iron condor that we did 2 weeks ago. Last time we were on.
Oh yeah,
we're wrapped around. We've got a couple positions.
Then we can give him his dowry, right?
Well, I got to pay for the swag.
Right.
I don't know if this will pay for it, but because that's good swag. Oh, and I just sold MES, the micros at
7,000.
We just rallied about 17 handles.
Okay.
So we're back to 7,000. Get the hats out. 7,000 on the E-minis. You got 50,000 on the Dow. This is,
I'm surprised you didn't bring in the hats for us, the 7,000 hats.
The 7,000, 50,000.
Yeah,
50,000 hats. That's a big number, yeah.
A big number.
Yeah, I think, this is all pretty straightforward stuff on here.
Yep.
Mm-hmm.
I've always told you guys I like the way that you guys do this, where you look at like a 1% move in these things in terms of the margin. And it's worth pointing out, we've sort of alluded to it a couple times. These do enjoy futures margining. It's a little bit more as a percent in notional as a lot of the other futures in terms of like what you have to put up to hold these things. I think Bitcoin's more like at 25% you put up, and I think Ether's a little bit higher. And that's just because these tend to be the most volatile products on our board. Not always, but they tend to trade at a higher volatility, and that's why the margin tends to be a little bit higher in terms of notional, but you still do get that capital efficient, that leverage, right? Let's call a spade, that you do get in other futures products. So yeah, I think I've always thought this is interesting where you say, okay, a 1% move is this many dollars. And if you've got a margin, if you've got this much in your account, that's this much of your capital available. And I think that's a good way to look at it.
I agree.
Yeah. Cool.
Next one, please.
I think the options is, I think a couple things with both futures and options I think are interesting with crypto is that if you're, obviously there's a lot of people that trade cash cryptos. It's hard to get short trading cash cryptos. And you can't do all of the things you can do with options if you're trading cash. And I think those are a couple really big reasons to look at cryptocurrency derivatives like futures and options that we list. Because it is, you can play both directions. And then, as tasty traders, you guys, all of the things you can do with options and the vol that gets associated with these options. So, the Bitcoin and Ether, both standard and micro options, are both tradable. The standard, kind of like the futures, are a little bit more liquid, but the micro options have certainly become a tradable instrument in both the Bitcoin and the Ether. And we do see more and more individuals trading those options.
Yeah, for sure. And the added leverage too is
on the small ones. The markets, option markets, have been a lot better.
They've been a lot better. I may not have said that a year ago or whatever, but
and it comes with being a retail product too. The big one being institutional. They're not as sophisticated as you think the institutional investor is. They're really just looking for the leverage of a movement, where the retail investor is looking for the sophistication of the option side of it. I think that's why, and it's small enough where you can. So I think that's really why it does better.
Yeah, I think, and I'm not just saying this because I'm at Tasty Trade, but I think the potential with our options market is huge. Just because of the way these things can move and the risk associated with the future. I think all of the different things that you can do with options make these so well suited for that.
Yep.
I got the XRP. MXP.
MXP, /
down
MXP.
Like 3-4% today.
Yep.
I don't know. I like to scalp these.
Better than yesterday.
Couple bucks. Yeah, they caught me. They caught me.
Yep. You just got to watch your size. It's about everything else,
Yeah. But I closed at 1.15 yesterday. Was that yesterday or Friday?
Yesterday.
The days just held together.
They do, I do, because it's been so much fun.
One single day.
I know.
I think a little bit.
Same thing happens to me.
Yeah.
The no wallet required too is worth pointing out, right? So with all of these futures and options, you have a futures account you can trade. There's no wallet and all of the keys and all that stuff, right? It's simply it's a futures contract. So I think that's actually worth pointing out too, which is it's on this slide. So yeah, I think we covered a lot of that.
Yeah, this is a pretty good one just because it's just like we just discussed with hedging crypto exposure. This is the most capital efficient way to do that. I don't know how else you would hedge a XRP position. If you got a couple $1,000s in XRP, you could do that. You could hedge it out, pretty easily with these futures.
Yeah, hedge or trade around, right? If you're long, you've got a long-term position in the underlying and you want to sort of trade around that position. I think these are well suited for that. The directional views, like I just talked about, right? You can get short as easily as you get long with futures, right? If you're flat and you sell it, you're short, right? There's no borrow like there is in stocks or anything like that. So very easy to take directional views on these. The defined risk trades, right, with options that we kind of alluded to. So you can sort of define, just like you can in futures other futures options or stock options, you can build those defined risk strategies. Same with these. So and then of course the precision sizing that these the micros allow for, scaling into and scaling out of positions. So yeah, Nick, I agree. There's a good slide to sort of talk about why, right? Like why you might look at these.
And I think there is a crypto. Didn't Ryan mention that there was some sort of legislation or something that was going through either today or this week, like part of the Clarity Act or something like that?
I'm not sure.
I'm trying to find that. Let me see. I guess they delayed that the Clarity Act. I don't know.
Yeah, I thought I'd seen it got delayed like last week or
Yeah,
something.
something like that.
But certainly, you know, regulatory clarity is always good for this stuff.
Good. Next one, please.
Yeah, so, you know, I think a lot of this is kind of, you know, just like other futures, in terms of order mechanics and execution.
Yeah. Sentiment. I mean, it's all in line. We kind
Of course, the rolls, right? We talked about how these expire every month. So if you are long or short something, you want to maintain that exposure. It's a simple futures roll, just like any other futures product.
Is there anything else that goes into the cost to carry other than just rates? I mean, because I don't think there is much. And I know that's gotten a lot tighter in terms of like what it was to spot markets.
Right.
Because it was kind of wide. And I think that was probably a reflection of liquidity. It wasn't just like as liquid.
It was
now.
almost, at one point, almost like a synthetic skew in it. Like when it was really moving.
It had upside.
It's like
skewage.
an embedded, like almost like an option skew at one point, and that basis was bigger.
And now it's basically, you know, maybe $200 ish.
Yeah.
Which seems like it's some short-term rate that's baked into it.
Yeah, I remember asking actually we have somebody that's our head of cryptos, and I noticed it was a couple years ago. I don't even remember when it was, but the basis was a lot bigger, and it was kind of like a bias almost to the upside at that time, and I think that's kind of come in a little bit. So I think Nick, mostly it's that cost of carry, right? There's no dividends might impact basis in stocks, and
it's pretty clean.
It's a good observation though, Nick.
Yeah. Yeah, no, it's gotten a lot. I mean, they're trading right at our spot mark too. So like, they're right there.
Yep.
Yeah.
And by the way, these are all based on, because a future has to be based on something, and there's no like NBBO in cryptos like there is in stocks, right? So
good point.
There's a reference, what we call a reference rate. There's a company called CF Benchmarks. And we've partnered with them, and they create what we call, it's not an index, but we call it a reference rate. So there's 8 constituent exchanges that could go into the price of these things. Like Coinbase is one of them. All of the major cryptocurrency exchanges. So what we do is we basically take an aggregate of prices from these exchanges to come up with like one smooth number.
Sure.
I think it was probably more important back in 2017 when these launched. And cryptocurrencies was a little bit more nascent. Now I think the market makers keep all of these in line pretty well. But if one of them, if the cash price were to get out of line on one exchange, it would get smoothed out a little bit by the fact that they are based on a reference rate. So it should be a pretty indicative price as to where that crypto really is trading. So
for sure,
it just kind of because it came up.
Cool.
Nice. Next one, please.
I think this one's self-explanatory. Definitely has some volatility there. And actually, Ryan mentioned yesterday, crypto volatility, it's typically been more volatile to the upside, to your point, where you've had like this upside skew and the volatility of these products has increased to the upside. Into this move that we had, we actually saw volatility expand, which has been kind of a new development in the crypto space where you're having downside volatility as well.
Yeah, and you're right, because a lot of times you'll see that skew to the upside, which is different than you would see in like a stock index where it's almost always to the downside. So yeah, we did see that, and we saw vol kind of explode recently, come back a little bit. But yeah, so, and it can move, right? When these things move, they can move quickly. So I think, you guys have pointed out here on a couple different lines. Obviously, like you just mentioned, Nick, the regulatory landscape is dynamic with these, right? And I think we have more clarity than we did, but obviously, I think that'll continue to improve. Margins based on vol, the 24/7, like we were just talking about on weekends and overnight. These, obviously they're
gonna keep me busy on Saturdays now. Too. Oh my God, I had one off day. Now I'm gonna be watching.
So
brutal.
All right, let's wrap this up. Even the S&P's have been rallying. NASDAQ's been rallying. Russell futures are rallying. Dow futures
I had
are
a
rallying.
moment I could have taken like 5-6 handles.
You could have been somebody.
I could have been a contender.
Yeah, it was close. But I think I bottom ticked Bitcoin.
Yeah, shh. Act like you've been there before. How many times have you heard that in the pit, right? I mean, act like you've been there before. But go ahead. Sorry.
and sports.
Yes.
Yeah.
Yeah, so this is a great wrap-up slide with the product size that we went over. They're all cash settled, so there's no delivery on these. I think all of these are certainly liquid, and certainly they're all tradable instruments.
I think the no wallet, requirement or anything like that kind of opens up the door for a lot of retail investors, even those who might not be secure with what a cold wallet and a hot wallet is or what has to be done. It's just like anything else.
It's a futures account.
Yeah, it's a futures account, exactly, and that's what it is. It's a future. So if you're, if you're comfortable trading E-mini S&Ps, then you should be comfortable trading any other future. They work exactly the same. Once you know the tick size, the buying power, which we've just gone over, it is just a plain price.
I think it's a great point. It's just a very straightforward way to get exposure to the price on these things.
Yes, by one click. Sometimes a little bit too straightforward, right?
Yeah. The margin on these we talked about. The options are all tradable, right?
Yeah.
You've got, and I think that's I think you guys have described it well there. And of course, just these are volatile. They can move. So I think it's
hopefully they move up for me.
Yeah. Totally.
I need today.
Yeah. Good stuff. Awesome. Good job out of you, my friend. Thank you so much for coming in. Thank you to the CME for sponsoring the segments. I'll see you on the road hopefully soon. We'll get that all together.
We got to get back out.
Yeah, absolutely. And we're talking about Bitcoin futures. They got down to around 68. They're 69.1 right now. They've been up to 70,700. They're about in the middle of their range for the day. So place your bets. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a market measure. Back in 90 seconds, Tasty Live. Good job, Craig.
Thank you, guys.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with a market measure sponsored by the SIBO. But before we do, let's take a quick look at the market. Pretty complacent across the board here. Even the S&Ps now 10 handles under 7,000 at 69.90.
I just tried to close them.
Oh, you missed it by that.
Oh my God! I should have put
somebody. Russell, the weakest of the group, down $1 and change. NASDAQ up 39. We're all basically unchanged across the board here. Dow up 260 is your leader to the upside, and volatility up 13 cents. Bonds still high, higher than they've been really since the beginning of the year. 116.14 up 28 ticks there. Bitcoin hanging out at 68.7. Last time I quoted, same price. Ethereum about $10 lower than the last time I quoted, down around 5.5%. Oil up 5 cents. Gold down 14. Silver a little bit weaker on a percentage basis, down 56 than gold. Both of them pretty much unchanged. Let's take a look at the overall market itself by clicking on the net change. You can see that SanDisk is trying to bring us lower, down 17 or so.
Well, those stocks have fallen out of favor. You've got everybody playing in TSM and
right.
ADS had a really nice bounce back.
Yeah, TSM, there's the rotation that we talked about.
There you go.
TSM up $4 doesn't tell you the whole story. It traded up to 364. So it was about up around $8 or $9 at one point. Costco down 7. Google down around 5 or so. Meta, which you started trading, down around 4. MSTR, OKLO down around 2 and 3 respectively. On the upside, looks like Spot still holding on to its gains, up $75. Got as high as $4.92, so only about $2 off of its high. So it's been maintaining that. Datadog, which you had some long delta in, that you closed nicely up around $16. That's all I got. Pretty complacent market right now, almost like a breather day here at Scotia off of all-time highs.
Yeah, it's been choppy.
Mm-hmm.
I take off. That's it.
You ready to go to this market measure sponsored by the SIBO?
Of course.
Let's do it.
And it's a good one. How correlated is IV at the highest and lowest levels? What would you say if I just said in a vacuum, if volatility is low, are correlations going to play out?
Yeah, I think
in
so.
line or lesser or more?
I think if volatility is low, they all do the same thing. If volatility is high, they kind of have a little bit more subjectivity to them.
Oh.
Am I wrong?
Kind of. Everything goes to 1. Correlations go to 1 when you get volatility. I mean, that's...
Yeah, kind of right. I was thinking about the one-off when you have one stock that has higher implied volatility, like on an earnings.
Oh, yeah, okay. So you're talking, yeah.
Yeah, I wasn't thinking overall. I was thinking more like for an earnings play, or they're coming out with some sort of announcement or something like that, and their volatility is high and everything else is low. That's how I was answering it. Well, let's see what we got.
Yeah. So the S&P 500 and its IV are negatively correlated with a historical average of a negative 81, meaning the S&P 500 going up, volatility goes down. I mean, that's what a negative correlation. They move in opposite directions. So when markets are going up, volatility is typically going down. You're going to obviously on a day-to-day basis have different changes, and you can see this even in this rolling correlation. When you have spats of volatility, the correlation gets a little bit lesser here. You get on a day-to-day basis. So today we're going to take a look at correlation when the VIX trades at extremes, high and on the low side. So we're going to talk about like just kind of extreme marks in volatility on both the high and the low side. Does the typically strong inverse correlation change? We're going to kind of quantify whether, when volatility spikes, does correlation change as well?
So we're taking a look at this. What was that one big spike up there? I'm sorry, I missed it. What is that? Oh, that's 2020. Sorry.
So that's COVID, and you had the tariff tantrums in there. What was the other one that we have? Was that like around the election? Yeah, that's
could be.
In middle of 2024. I think we had some election volatility there too. Or no, was that yen unwind?
I don't know, to be honest with you.
See, again.
Is it okay to say you don't know?
Time just blends together.
It does blend together. And I'm a 45-day time frame right now.
That's true. It's like we're like goldfish.
It's right.
I don't remember any of that stuff. Dude, what happened in 2020? You don't even remember that?
Who cares? Doesn't do anything.
COVID. That was
yeah, of course. Yeah. No, I knew that one.
Yes.
Yeah.
So the study that we're going to take a look at here Of course, we're going to look at VIX and SPX, and we're looking at the correlation 2013 to present. We recorded the average price correlation when the VIX trades at different levels. So we looked at less than 12. This is the VIX, so low, very low, which is kind of a shock that, do we even remember the last time we were at 12? We didn't have 12 post-COVID. Have we? I don't think we have.
Not to my knowledge.
Let's take a look real quick.
See, $.
No, you don't need the dollar sign.
I mean, if you look at VIX, you probably had it.
Yeah, VIX. That's what we're looking at.
Yeah, if you look at VIX, you've had it. If you look at the futures, you didn't.
A couple times.
Yeah.
So we're looking at less than 12, very low volatility. Between 12 and 15, I would say that's more in the normal range. I would say between 15 to 20 are, slightly perky volatility. And then between 20 and 30, and then greater than 30 being our high volatility kind of spot.
Oil.
Yeah.
Oh, Craig left. We don't have to give him his cut.
I know.
That's perfect. Perfect timing.
Snooze, you lose. And so we're going to record the probabilities of seeing a move in the same direction in SPX and VIX. So we've seen sometimes market up, vol up. That has been, like when you have these big squeezes higher, it feels like you get a little bit of a vol, like today.
Yeah.
Today is a market up, vol up day, where you'd be bucking the trend of normal correlations or at least historical correlations. So we're going to try and quantify this a little bit. So the tightest inverse correlation between price and volatility occurred when volatility was in the middle, 81% of its range, between 12 and 30. What this is saying is that the correlation on a day-to-day basis is much higher when volatility is in its like normal range, right? So, and this even gets into like the 20 to 30 range, which is pretty high.
Yes,
but you're typically seeing that movement when you're getting into these really low vol regimes, like less than 12, or really high, greater than 30. The correlations break down. Like there's a lot less. It's a lot more random day to day in terms of whether volatility and the market are going in opposite directions. It's more like what we're seeing now with market up, vol up. That's because we're sitting in we're on like the lower end of this range. We're on the VIX is at 1727 right now. So we're kind of in the lower half of this kind of regime. And you can see, when your correlations are tighter, when you're in quote unquote normal volatility. When you're really, really low volatility or really, really high volatility, correlations get a little bit funkier.
Absolutely. And that's what we look for too, right? Some of that volatility funk that you just talked about. Like if we're looking to sell premium, we want it to be high. That's what we're looking for.
Yeah. I think this.
But we want to catch the higher end, not the middle high end, right? I mean, which is
the middle high end is good too.
But that's where you always are.
Yeah, but
right?
you want to avoid the super high end or the super low end.
No, you want to avoid when it's low and getting hit when it goes high.
Yeah, when you're short vol.
Yes, when you're short vol.
But the super high end, you have to size appropriately.
Yes, because
there's
one that starts acting like 3 because volatility is 3 to 5 times higher than it normally is.
Yes.
And you're not going to be used to that type of swings in your account if you were usually trading 3-4 contracts in something that has super high implied volatility than 3-4 contracts with something that has its normal volatility, its normal expected moves. The numbers get pretty big. And that's why, I've always talked about I don't look at the top of my trading platform when I'm trading 9 times out of 10. Sometimes I'll look at it when I really want to hurt myself, but not usually. I don't want to be skewed by that number.
Yeah, for sure. Yeah.
Anyway,
takes the emotions out of it.
Yes, it takes
a little bit.
Yes, a little bit. Not a ton, but a little bit.
Yes. I think we skipped one. Yes. So here, regardless of where vol is at, the probability of seeing a down day in both the VIX and SPX was around 10%. This means market down, vol down. However, the probability of seeing a move higher in both dropped from 16 to just 4% when vol climbed above 30. So you typically see, which this isn't a shock either, the market up, vol up when vol's at lows. Which shouldn't shock you. Like we're seeing that today because you have markets at highs, vol low-ish in the lower end of where it's been trading. they're both going up. It doesn't necessarily mean anything, but it tells you, where we are with markets.
How low can volatility go is really what it comes down to. At some point, volatility.
The 8 handle. I remember. VIX.
Yes, you are right. It could go as low as 8. But at
8.12.
some point in a short period of time when you just had vol in the 20s, how low can it go? Now, it can stay here for a year and continue going lower. We don't know what's going to happen in a year. But at this point in time, you get that 18 vol, 17 and a half vol. It doesn't get a lot lower than that in this time frame.
For sure. So here, this just gives you kind of a breakdown of when the VIX is at a certain level, the probability of an update in the VIX and SPX. You can see when volatility is at the lower end of the range, you tend to see more occurrences where vol up, market up, like we're seeing now. When volatility is high, you're not typically seeing both of those go in the same direction, meaning the market's probably going down and vol is probably going up. That's typically what you're seeing there. So the probability of down days in the VIX and SPX, this basically means, market down and vol also contracting. You can see across the board, there isn't much of a pattern here. And it tells you what you need to know about markets and volatility is that when you're seeing volatility, it's basically everything. Everything's kind of moving in the same direction here. When you have lower volatility, you get kind of that goofiness of correlation where sometimes vol just increases because it's low and markets continue higher.
You bought your MBT at 68.2 in the orders. It's 69.1 3/4.
Well, you want me to take that off?
I don't know.
There you go.
Thank you.
You happy?
You could have kept the runner.
Well, I got IBIT, so I got enough of a runner. Yeah. I got no risk to the upside.
Good job out of you.
Cool. Let's do a couple takeaways then. Volatility in the stock market retains the strongest negative correlation to price when it trades within roughly 80% of its historical range. So when we're in the 12-ish to like 30-ish range, you typically see market up, vol down. That's typically how it goes. When you get outside of those ranges, when you have really low volatility and really high volatility, the correlations become a little more random. You could have, when volatility is super high, above 30, and market goes down, 30 points, you might see vol contract on that move and have both of them go in the same direction. Same thing on when volatility is low. Like a day today, you got, vol up 0.6% and the market up 0.2%. So you're seeing market up, vol up. Those, when you're at the extremes, they can go together. And so when vol gets very cheap or very rich, it's common to see a slightly weaker correlation. Weaker correlation means a higher and unbalanced frequency of seeing a move in the same direction in the price and volatility. It's playing out right now. Vol up, market up.
Vol up, market up, and I know it's only up 12 cents. That's not a lot at 18.40 and change.
But it's absolute terms. I mean, that's how you look at it.
You have to look at absolute terms. Yeah, and I always get a little bit, that's not the norm as you just described, but it's too small of a move right now. Minuscule move to me.
To make it tradable. If it was up 2%, if you had a 19 handle on all futures, you'd probably say, you know what, we're done with this.
Yeah,
we're done with this move
right
to
now.
the upside. Yeah,
for right now.
Yes.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. What we got coming up next? We got our boys from Tasty Trade coming in. We'll be back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nikki, we are back, son, on a pretty kind of complacent market movement here, right? Let's just go over it real quickly. I mean, we go across the board here. Last time I've quoted them pretty much all morning long. We've been on the show since the opening for about an hour. We really haven't had too much two-sided action in anything that's moved here. You could see that when the futures aren't ticking back and forth, that markets are pretty complacent. I mean, we're really just digesting these basically all-time highs in the markets. A little surprising after the volatility that we saw just 3 days ago. It seems like it was forever.
Moving quick. Volatility moves quick.
Volatility does move quick. Volatility does move. You know who else moves quick?
Who?
This man! My man Q. What's up, brother?
Fellas, how's it going? That was a good one. That was a good one. I like that.
Yeah, I try.
Are you quick? That's a good question. Like, are you really
extremely. I'm probably one of the most athletic people you ever met, for sure.
If you do say so.
So
yourself.
modest. My God. I love it.
I
can see you be, but you're
especially of the Jewish origin as well.
Of
Like,
course.
we're not a very athletic.
No quantifying it. We're all one.
No, but
here.
that's normally
okay.
that's like eighth grade is usually the peak. That's when the Jewish athletes kind of
from your experience.
Yeah, from my experience.
Like middle school basketball.
Yeah, everybody's the same height, the same size.
Exactly.
Like eighth grade, that's where they're like their speed and quickness and like really gets them. And then after that, you get to high school and then you kind of
get a little awkward.
Yeah, it does.
No, I'm
focus
pretty
more on school.
Yeah. Are you flight? Are you fast? You good?
Yeah, I'm pretty athletic. Yeah.
Fast or quick? Because those are two different things. Like
I would say I'm definitely quick. I'd say I'm also pretty fast too, but my reaction time is good.
Speed has never been a Batista attribute, I don't think.
No.
I mean, we usually carry a piano on our back when we run or do anything.
Yeah, we got the ass out run.
But slow and steady wins the race.
Yeah.
I like that. Yeah, exactly.
Yeah.
It's about
we
how
always
far
had power. It was a thickness.
Yes.
We had it with thickness to
But
us.
your grandfather could run like a deer.
I don't know about that.
No. He got away. He got away a few times.
Did he?
Got caught a couple of times.
Okay.
He got away a few times. He could run like a deer.
That's good.
He really could.
That's good.
Yeah, no, so like middle school basketball though, that was my thing for sure. And in high school, the little rec league, with all the other Jewish kids from the Upper West.
I don't mind like Craig, who was just in here from the CME. He peaked in high school. Now you're saying you peaked in middle school.
That's what it is, though.
It wasn't my choice to peak in middle school. It wasn't my choice. It just happened.
It just happens. It's part of it. But it's a huge peak. Like it's always the top.
Right. I can't wait till we hear with G Money where he peaked when he comes in after you.
He's still peaking. Every day is a new peak for my man.
G Money, you know, he's just like the market.
It's
always
just
going up, you know.
Positive drift.
Positive drift for G Money.
We should call him Positive Drift G Money.
We're
gonna have to write that down. Make sure we ask him when he peaked.
No, for me, I was like the meme stocks, you know, peaked back in the day, you know, and then just forever lower. But G Money, he's S&P 500, always on the rise.
I could tell the market's a little bit more complacent today because you're willing to sit in here and talk with us. Yesterday, or well, not you too much yesterday, but the day before, you are like, I gotta get in, I gotta get out. My phones are ringing.
Yeah.
You were earning your
Today's
good.
I'm happy. You know, the reps are happy. They're finally, you know, getting a break in between calls, which is not always super common for them. And yeah, all is good. We're all good on the trade desk.
Although we have some sad news, no webinar today.
Yes, no webinar today. Unfortunately, no webinar today. However, we do have a great one coming up next week.
Next Wednesday?
Next Tuesday.
Tuesday, sorry. Yes.
Tuesday. How many weeks in a row have I been coming on Tuesdays saying we got a webinar?
I've been carrying that sack for months now. I know your pain. It's every Tuesday.
Every Tuesday. It happens to not be this
Do you
Tuesday.
know the web address?
Well, if not, I can help you out. We've got tastytrade.com/webinars. We've got tastytrade.com/demos, and then tastytrade.com/demo for Nikki. Or wait, you like it with the S. You like it with the S.
Because because there's more than one.
But as I always like to say,
there's multiple demos.
As I always like to say, if you want to find it, you can find it.
Yes.
Easy to find on the
No 404s.
No 404s. No 404 not found.
Nope.
But next week, if you want to sign
This
up.
is really the important thing. Who's showing up for you next week?
Yes, next week we've got the portfolio margin demo. So if you've been thinking about enabling portfolio margin, maybe condensing some accounts to get portfolio margin, you can do so. And then the threshold for PM is 175,000, and then you just need to maintain above 150. And then on the demo, we're going to have one of the heads of the margin team, head of portfolio margin, Peter Klink.
Head of Margin Island.
The mayor of Margin Island.
Well, the mayor is Bob.
I don't know about
Bob's the mayor.
I don't know if there was a vote for that.
No, I probably there wasn't a vote. He's a dictator.
That's true.
But Klink will be on the webinar, and he's a very high-level individual, you know, so I will be his translator on the demo as well. He's like the one who invented like all the margin systems, though, like from back in the day that all brokerage firms use now. He's the one who sort of invented that stuff. And so
He really
we'll have
is,
him
by
on.
the way.
Yeah, he is. Yeah.
Someday they will write a book on him.
Yes.
Not now, but someday.
And if you ever talk to him, he'll make sure to tell you. He'll be like, yeah, you know, I invented all this. Yeah.
He did. He was instrumental in all of like looking at the cash balances and everything that we've put in the back end.
And make sure everything aligns with the clearing firm, because that's very important as well.
Oh.
And especially
He's
for
a lot
the futures
smarter than he
side,
looks
too.
and sounds, by the way. If I I'm serious. No, I'm serious. If I had one person, I mean, there are a lot of great ones there, but if I had one person,
For your one phone call?
I had one phone call for this kind of thing.
For trading in general. That's
And
Sure.
risk. Trading and risk.
Yeah.
Risk.
I mean, he's one of our
He's a
risk
savant.
guys, for sure. Yes, so that's why I'm on there to also translate for him.
Yeah.
Because he'll just be like, oh, do this, this, and this, and then expect everyone to understand it.
Right.
I'd be like, all right, this is really how, you know, like this
There's
is
a
where
lot
we're
in
going
that
on.
brain.
I'll draw my boxes, draw my arrows on the screen and stuff like that to make sure you understand like the cap rack risk analysis.
Right.
Because he just moves so quick. So that's what I'm there to, you know, slow him down.
Yes.
Make sure everyone
slow him down.
understands it and stuff.
Slow him
But
down.
yeah, portfolio margin.
And you can sign up whether you're a customer or not. So if you
Correct.
want
Yeah, to see how the margin
platform,
system works. Yeah.
ask some questions.
And talk
sign
about
up.
concentration risk too, if you remember.
Yeah, we'll
on
talk
that
about
too, because
concentration.
that'll
That's happened a
change.
lot with like the metals recently. People getting concentrated in like SLV and GLD, trading those.
Same number of contracts that you were trading, you know, if you hadn't been trading, let's say gold for argument's sake, you trade the same amount of contracts in an SPY or an SPX, and all of a sudden you do the same type in gold, you could have had concentration risk, which would be using a lot more buying power than you would expect. Same amount of contracts in something else. Plus, you would think they would offset a little bit. So it was really interesting dynamic that happened recently, and it's going to happen again sometime in the future. So we should
Yeah,
talk
maybe
about
like I shouldn't maybe just talk about that on here as well, like concentration risk and how that works, because it can be a very complex topic, but it's actually like really simple the way the numbers work, and there's very easy ways to solve concentration risk as well.
Awesome. Awesome. Well, maybe we can do that, but you can certainly check it out on your. We don't want to avoid. We don't want to.
Yeah, you can't give them the meat before you gotta come to the.
No, but give them a little taste.
Yeah,
give them a little taste. This is just one of the tidbits you're gonna get in the demo.
Good.
All right.
Awesome. All right, well, let's get to your list
here. I've had enough relaxing for the day. Let's go to the list here. Top 20 symbols going through the system and their IVR. At number 1, we've got Tesla 2, Microsoft 29, Amazon 22, NVIDIA 24, SLV 72, Micron 61, GLD 44, iBit 67, Netflix 27, Google 18, TQQQ 24. TQQQ 27, TLT 11, AMD 32, Palantir 17, Meta 17, DDOG 47, Spotify 15, SNDK 71, Oracle 102, and SoFi 12.
Good job out of you. Good job out of our viewers trying to pick some high implied volatility, plus go to a little bit of liquidity. Metals are still in there because they're still in play. Matter of fact, gold is down 40 now. That's about as low as it's been. It was flirting with its highs just a moment ago. But I'm going to let you go right now. And I got to bring in this man. We're at the top of the mountain. I got my man G. How are you, brother? The
peak.
Pretty good. Yeah, no, I don't.
So are you still, I know you were listening to the conversation a moment ago.
Also, we need your athletic ability too. I want to know this too.
One, don't plan on peaking anytime.
Never.
There's a continuous peak going on. Existentially, that's, one of my biggest fears, I think, as well. But
let me tell you, it comes real quick. Okay. Let me tell you, one day you're on top of the world, and then one day your freaking back hurts, and you don't know why it hurts. You didn't do anything to hurt it, but you woke up and it hurts, and then that's it.
Well,
the man's throwing,
and then you're basically dead.
Throwing truth bombs at you.
I believe you.
And then your hair, you have this nice full head of hair.
You have great hair.
It gets real gray.
I think
people start calling you Unk.
Oh yeah, that's when you. That's when you know.
It happens really quick.
I do believe you, but safe to say, I don't think it's in my near-term future. I had a rec basketball game on Sunday, and turns out I still got it.
Wow.
My roommate's actually in the chat, Big Griff, said he packed me a nice water bottle. He works at Gatorade, so a nice performance Gatorade bottle.
Okay, I'm watching the chat. So Big Griff?
Yeah.
I'd like to know his skill level. What kind of player are you? Are you like the scrappy, like you're like the, I could see you as like the guy that like gets a couple steals every single game, like a couple little fast break kind of plays.
Let's just say I play with a mouth guard now because I'm historically a bowling ball.
Oh, really? Okay.
Yeah, I'm always on the ground.
Really?
Yeah, going for those steals.
Okay.
This Sunday.
Because you got cat-like reflexes. Easy for me to say.
Yeah.
Don't ever do it again.
Traditionally just barrel into the basket, but this Sunday the long range weapon was firing.
Oh.
And now my favorite thing to do is talk smack with the mouth guard in because I think it's hilarious.
Yeah,
I got six.
Yeah, we need pictures. We need pictures of the rec.
Okay. I wear a headband.
Yeah. Rain Man. Like that sort of thing. Amazing.
What's that movie? Polly something?
Yeah.
Along Came Polly.
Along Came Polly. Rain Man.
Yeah.
Yeah. So I'm still on my journey for, continuously getting faster, stronger, and bigger.
Yeah.
So you should.
Yeah.
So you haven't peaked. You're still on an upswing.
I really hope not.
I really hope. This is not all that I bargained for. I wanted more. Promise me more.
But there's
just be careful. I sit next to Gus. Gus has been talking about his back. I'm like, bro, you are like 25 years old.
I was gonna say he's young.
Yeah, he's young. I'm like, wait, what is wrong with you? This can't be happening. You can't let this happen.
But he's lifting heavy like Q. So they kind of do it to themselves sometimes.
I guess.
I don't know what happened. I just tried to lift up 500 pounds with my back, and now my back hurts.
Yeah.
Might be asking for it.
Cause and effect.
Pretty clearly.
Yeah.
Cause and effect today with the U.S. dollar. would be early morning stress from this retail sales data coming in flat. Retail sales, kind of a mid-tier U.S. data point, but around the holidays, this was coming in from December, so we expect a lot more activity, holiday shopping. That came in month over month, expecting some gains of around 0.4%. That was enough to push the U.S. dollar to its recent lows, just tracking the euro dollar, the most liquid FX pair offered and traded globally. That got pushed up to around 119.30, which is the highest we've seen in February so far. But now throughout this U.S. session, as U.S. markets came in, we're starting to get a little bit of a bounce in the U.S. dollar, but still down on the day. Mover of the day.
A whole lot more.
Yeah, mover of the day is this U.S. dollar Japanese yen. Yen's starting to get some strength back. Kind of counterintuitive of what happened over the weekend, where this
election talk, right?
Snap election, and the thinking going into the weekend was we have this pro-stimulus head of government looking to get more share in the government in controlling power.
Big 2-day rally in the end. I mean,
got exactly what they were looking for.
Yeah.
And so
off of lows.
Exactly.
I mean, I know not exactly lows of 63, and we were close to the 63 and a half or something like that, but amongst friends, basically off of lows. If anybody's long the yen, which I know a lot of people we play a little bit of a contrarian role here, trying to catch a falling knife. We're playing it from the long side. This is a welcome rally. The point is, what are you going to do now?
Exactly right. So drifted up into this news, but markets giving Japan broadly, stocks, bonds, and the yen here, the benefit of the doubt that even though a pro-stimulus government might be, in theory, weaker for the yen, a lot of this political uncertainty out of the way and giving this government an honest shot at what it expects to revive this economy for now, leading to robust strength. And you're absolutely right. Just from Sunday's open, we're up 2%. This yen is in the spot market, which is, no small move, up $1 today alone. So really no stopping it this week so far. Just keep seeing a bunch of red candles in this US dollar Japanese yen. But now we're right back into kind of the middle of the range from last week. So it'll be interesting to see where we settle. Perhaps a little bit more room to run in this pair compared to other US dollar pairs. This euro hasn't had much above, 119. That's starting to settle in here. This Australian dollar,
it's parabolic.
Yeah, keeps
up every day.
Keeps cooking, and now
Takes money from me every single day.
Now we're pushing right up on 71 cents, which is the high we hit in late January. So if you compare, some of these markets, you're thinking, okay, the euro dollar was stretched all the way to above 120 in the spot market. Now it's still down 100 pips, around 119. This Australian dollar, US dollar was pushed right up to 71 cents, and now we're back. So looking at that,
I know that nobody knows a reason, but why so much strength in the Australian dollar?
Right, some of the metals are probably playing into that.
Yep, some exposure to metals, but also just a lot of uncertainty between these two countries, kind of out of the way. And now the fundamental story picking up for this Australian dollar. The Reserve Bank of Australia hiked interest rates last week. First major central bank that went through the traditional easing cycle that we're still going through, and many other central banks. They have had strong enough, sustainable inflation to support a hike, which all else equal for overnight interest rates and currency markets should support more demand for the country or for the currency because you're getting a stronger yield for holding it. So fundamentally, this backs the Australian dollar, but as we know, U.S.-centric traders might take this for granted, but the U.S. dollar, even though every one of these currency pairs is, in theory, equally weighted, an exchange rate between one another, this U.S. dollar being the global reserve currency, that storyline tends to take hold when it has a lot of drivers behind it, and a lot of drivers in terms of economic event risk up this week. We've got an action-packed end of the week here with
CPI.
non-farm. Yep, CPI on Friday, but last week's non-farm payroll report coming out tomorrow morning. So we'll get a snapshot of both dual mandates from the Federal Reserve, what they're responsible for, inflation and employment. But, you know,
Got bonds moving. I mean, bonds
Yeah.
are up
Yeah, you
almost
do
a
have bonds
full point.
moving.
Yeah.
Telling you, maybe you get some not good numbers.
Yeah, there's also, I mean, man, there's so many dynamics to try and get behind this, but we are seeing, you know, a slight steepening of the yield curve, and now we're kind of getting into a lame duck Powell here. So while these numbers will be important for speculators to try and project where interest rates go in June throughout the rest of the year, it doesn't look like we'll get much traction until May, and we get that new Fed chair, and perhaps get a whole new dynamic.
Or Jay Powell just says, I'm not leaving.
Not leaving.
Not leaving.
That'd be awesome.
Now you
that guy.
now you can't leave.
Yeah.
Right. Right. That'd be
But
good.
yeah, so a lot to look for in terms of U.S. dollar catalysts. But, you know, from a technical perspective, looking at the U.S. dollar as a whole, it's looking like a lot less in the way of further dollar weakness, and a lot, considerably more room, more work to be done to repaint a more cleaner, bullish picture for the U.S.
I would
dollar.
certainly enjoy that.
Yeah.
If that ever did happen. Seems like it never, the dollar has been an awful long.
Yeah, no, it's been hard to get in and out of there successfully. Only a few.
I have not. I am still in.
I mean,
unsuccessfully.
Mikey Butler's been able to do it. So some people around the office are starting to say maybe it's a skill issue.
Maybe it's a me problem.
No, nonsense.
I've peaked on my dollar trading. Is what you're telling me?
No, young Padawan, you are.
No, I got
much more to learn.
Yes,
it can happen. You know, you can peak relatively early for you.
You got anything else that you're looking at that's not dollar denominated?
I mean, if you are looking to play some of this medium term, longer term Japanese yen, you can do so without that dollar component.
Yeah.
You know, we have highly liquid pairs like the euro yen and pound yen.
Yeah.
So those might give you some unique exposure. Additionally, you could go into some of the commodity currencies, New Zealand dollar.
The New Zealand Aussie dollar.
Yeah, that one's
kind of, because those are highly correlated.
Exactly right. And yeah, we're seeing the Australian dollar continue to take it to the New Zealand dollar. Again, they're just a little bit clearer to compare the fundamentals.
Yeah.
And Australia outperforming. But towards the end of the month here, we've got a New Zealand bank decision, and we'll see if they can support a similar narrative for resuming hikes, or if there is some fundamental differences as appears to be priced in right now. But we've got a down day here in that pair, but we're still at
highest.
Yeah, I got to zoom out here.
Yeah.
We're at the highest this exchange rate's been since 2013 right now for those highly correlated pairs. So perhaps there's some narrative that if you're looking for a lower volatility pair, that high correlation, we definitely see it play through in the euro pound, a lower volatility pair. So whatever you're looking for, it's happening in the spot FX space.
I dabbled in the short the Aussie against New Zealand.
Very nice. I wish you great success, sir.
Thank you very much. I appreciate
And they're going to laugh at you on the trade desk.
Yeah, they're going, this sucker. Got him.
Maybe the FX markets are moving a little bit more than you would expect in one direction. Our markets, equity markets, have been pretty tight overall today. So tighten up your expectations too, is the way I look at today. We're going to take a quick 90-second break. Even the S&Ps are up 13 handles, a tight 30-ish, 35 handle move top to bottom overnight into today on the E-mini S&Ps. pretty much across the market here. We're going to take a quick 90-second break. We're going to come back. We're going to bring you to the floor of the CBOE with Liz and Jenny.
And you know what? It's always electric when the ladies are live.
Threw up in my mouth just a little bit. We're going to
Take
take
us
a
out, please.
when we'll be back in 90 seconds. Peace.
Peace.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. Hold on. She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. Same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together. Yep.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Rise higher, ye Taurian markets, I will thee ride. Oh, let the horned bull now be thy guide. Increase the yield, as the longs have long planned. Be not inert in flowery field like Ferdinand. Reward the longs their bulldog-like persistence. Like Lord Michael of Jordan, soar beyond resistance. Reward those who see upside positivity, as if in some ill-advised Pamplonian activity. Trip thy hooves o'er trading streets most stony, cobbled with the confidence of masters Tom and Tony. Climb with ease the line of Tim Knight's profit chart, and with thy rise make proud Slim's technical heart. Gore the matador of pessimism with thy horn. Let red capes of resistance now be torn. This market yoke to wagon now could pull to follow up the thundering of the bull. In market glory let us be arrayed. Oh, hear this exhortation now from Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade. right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Hello, everybody, and welcome to the Tuesday edition of the Liz and Jenny Show. My name is Jenny Andrews. This beautiful blonde is Liz Deerking, and it's kind of a quiet Tuesday down here on the trading floor.
I would argue it is a quiet Tuesday on the trading floor. I mean, they do put on a show as soon as we get on, but it's been pretty subdued down here. SPOOs and SPX have been. I mean, we're staying within a pretty tight range, I would say.
Yeah, right. We've been in this tight range of like up 17, up 13, up 15, up 10. We're not moving too much. We're not moving too much.
At 9 o'clock when I put on my SPX, we were right here, and we're still right here. So no harm, no foul.
Right. Yeah. SPOOs are up 11. Not a lot going on. I don't know how the market's going to be all week. We've got CPI on Friday. We have some earnings. We have some decent
we're
earnings.
We're going to be live on the morning show on Friday during CPI. What could possibly go wrong with that scenario? I'm excited because we get to trade our SPX live too. We'll be at 9 o'clock.
I am very excited to do the morning show on Friday. So tune in bright and early on Friday. We'll be able to put in our SPX trade that we put in every day at 9:05. We'll be on live when the CPI number comes out.
Yeah.
I wonder if we'll have any special guests on Friday.
And then on Friday, Jenny, I don't know if you've, I know you know this, but then after our live morning show, we're talking to the University of Michigan's Trading Club.
Oh, yeah. It's one of the guys down here, I know his daughter's going there, and it's on my daughter's list. So
we've been meaning to talk to him. Yeah.
So that's exciting. If you're at the University of Michigan and you're in their trading club, we're going to be speaking to you on Friday.
Fun fact, I believe it's the short-term trading club. So we're going to be talking a lot about SPX.
I love that they're called the short-term trading club. That means they're trading these 0 DTEs.
Either that or they're in and they're out. They're looking at something. I want to know what they're doing. They want to know what we're doing. It's going to be a fun thing on Friday.
So we are in the SPX pit. We hear what's going on. What I've heard quoted more than anything today is the stupid.
Correct. So meaning they'll just be like, that's stupid. And they don't even give
they give two strikes. They'll say like 69 half or 95 half or half or whatever.
These professionals behind us will drop the front half of the strikes, right?
Exactly. So if they say half, they're talking either the 69.50 strike
I'm gonna go to SPX.
Or the 70.50 strike.
Let's put our money where our mouth is.
Yeah, go to the trade page.
So I'm going to clear this out. So if you're talking, and you were in October, weren't you?
Well, they were quoting some stupids in October. I heard more than one stupid quoted today. I went over and asked the guys because in our world of retail trading, I think of the stupid as we sell a put spread to buy a call spread.
Or revert, or the opposite, or the sell a call spread to buy a put spread. Yes. So either way,
right?
It's bullish or bearish.
Right. Or sell a put to buy a call.
Yes.
Whatever.
Yes.
That's what we would think of the stupid. And so I went over to ask the guys, and it's just when the stupids they're quoting, it's just two short puts. It's sell two different puts. So whatever strikes they say is just sell two puts. So we saw one of those go up shortly before the show, and you can see it here, the 6,600 in October.
Hold on.
Oh, what a beautiful beach, Liz.
So I highlighted both so that you can see the volume on this is 400. Now this is a smaller one. There's lots of other bigger orders that have gone up, and we'll go to those too. But
so when they're quoting the stupid and they say I feel like they didn't even include the one. It was just the
even.
Well,
maybe
I don't know.
Maybe they said 600, 100. We
No,
don't know.
they didn't.
But
They
did
never
drop off.
even say 100. They don't. They talk in code.
7166 is what he said. It's my guess. 7166.
7166. You might be right.
Yeah, 7166 stupid. Jenny, what's your market?
So the customer was buying these puts. The crowd was selling the puts. The customer was buying the puts. And again, when we traded on the trading floor, prices were a lot lower. Prices of everything were a lot lower. So things weren't trading in the thousands. So when we quoted anything, it didn't matter because everything was just like double digits.
Fun fact, I don't even have to go that
maybe
far. I'm just
triple
going to go
digits.
20 back down.
You're going to go back to 1997?
This is as far as I could. In the Wayback Machine, all we can go is 2006. So think 10 years before this.
And here's my proof. I brought it today to show you. I brought this today to show you. Here is my, again, not my first ticket ever, but the first ticket when I was actually trading on my own and not trading for a firm.
That's correct.
So you can take a look.
That's crazy that you went out on your own and we were still using tickets.
Yeah. I think. What?
I think that guy's still on the trading floor.
HAR?
Yes.
Do you think he's here?
I do.
Is there an HAR on the floor? You think so?
I do. It's one of the Harrigan brothers.
Really?
Yeah. If not, his brother is.
Gary, is HAR still on the floor? I've brought my first ticket.
Yeah, no, definitely not John Harrigan. No.
Yeah, one of the Harrigan
he's
brothers.
not.
One of the many.
Yes, one of the many.
Sorry, they would have really taken a turn if they were like, sorry, he died.
I know, Jesus. I mean, that's terrible, but yes.
Well, he's not here anymore, but this was my very first ticket. Liz got very excited thinking.
I think one of his brothers still is, though.
So you have to write the badge of the broker on here, and that's what Liz saw, HAR. Thought he was right behind us.
The Harrigan. I was like, Harrigan, show yourself.
There were a lot of Harrigans on the trading floor. There definitely were.
Southside Irish represented down here pretty well.
Definitely. Anyway, so my point here is let's take a look. Pull up, you know what? Pull up a Bristol Myers, if you can, BMY.
Yeah, because this is the pit you were in when you went out on your own.
And
BMY trade.
If you think about it, this was in the 90s. This happened in the 90s. And the strike
There's
was...
no date on it.
Doesn't matter. It's here. It's at the same price. The strike was 50. The strike was 50. And if Bristol Myers have never had any splits, that means this stock hasn't moved much since the 90s.
You have the 50 puts?
It's a 50 call.
What strike?
I sold 2 50 calls, 2 December 50 calls.
2 D's 50 calls?
Mm-hmm. For 5.5.
Oh, well.
It's about, yeah. Well, they would have been, I doubt they were in the money. But you can see, like, the D's 52 puts, they're close to that price.
Yeah.
Or the D65 calls, 5.5. It would be like selling the D65 calls, 5.5.
I mean, how is that so preserved? Did you have it in a book?
I found it in a file. Took my first ticket, put it in a file. The file says JNY Trading.
It looks like there's going to be like flowers pressed in the next page next to it. That's how good it is.
At 220. At 220. So that I think was that was
220. You waited that long to make your first trade. That's how nervous she was, ladies and gentlemen.
That I think is the most important thing from this ticket is that this was my first trading day on my own. And the market opens at 8:30.
A 2 lot at 220.
Yeah, so I all stood there all day. It probably cost me $1,000 to stand there for the day.
Yeah.
If my seat was, I'm kidding. But my seat back then was probably $8,000 a month.
Yeah.
So let's say my seat was $8,000 a month. I don't know what that day cost me. And at 220 at the very end of the day, I traded a 2 lot.
Yeah.
For $5.
I remember being so nervous making my first trade. I remember going in there, and this is so embarrassing, but it was in, I think it was in Celgene. Yeah, Celgene. And I just remember being so loud because I was so afraid they wouldn't hear me. I just remember screaming at the top of my lungs, and everybody's like, fine, all right.
Oh my gosh. So, yeah, it was very nerve-wracking making your first trade.
Yeah.
You could see how nervous I was. I scratched out my first thing
there
I wrote.
Was 2.
Yeah. Anyway, can't believe didn't make my first trade till 2:20. I sat there in the pit from 8:30 till 2:20.
Yeah?
I bet I never even went to the bathroom or lunch.
No, I bet you sat there all day long. But a lot of things have changed. Now you don't have to worry about people around you. Now you get to decide what you want. Somebody had to come in, a broker had to come in and ask for your market in order for you to be on it.
In order for me to get on a
Yes.
ticket.
Yes.
The guys in the pit probably felt bad for me. They were like, give her a 2-lot, let her on this ticket.
Oh, when I opened my mouth and screamed as loud as they could, they were like, all right, all right, all right.
Oh, but now, right, I've probably already made at least 5 trades today, and it's only 10:09.
Yeah.
We've made, how many trades do you think you've made today? Well, not as many on their like SIBO days, because we're busy getting set up for the show. But,
Yeah, I think they are a little bit less.
But I sold puts in XYZ. Liquidity be damned.
I know, she did say that. Hold on, let's go to XYZ. We do have a lot of stuff to do. We do have some management that we want to do today. We are taking live tweets. We are going to take a look at some of the most heavily active traded things today. And we also have Kai's Research Corner.
So, and I kind of joke, liquidity be damned. We just did a study on how important liquidity is. It is very important. XYZ, I heard Nikki talking about XYZ this morning, or he mentioned it, and it's something that I was in last year all the time.
It's not too bad. So if you're going to go through the whole liquidity, you've got 1.79 million shares. You have very little volume, by the way.
I just couldn't believe how wide these markets were compared to, and they're tightening up now. I think I did this right at 8:30.
Right at the open.
We're right on the open. These
Yeah.
markets were wider, and I thought, geez, the markets have really gotten wide in XYZ, which is block or square, however, whatever you want to call it. And I just sold.
But look at how little volume there is. What did you sell? Were you before
No, I did
earnings?
the 10-day. I wanted to get back in. I used to be.
Yeah, look at the volume. I mean, the open interest, there's at least a K next to some of these open interests, which is good. But the volume today is very little. What number can we assign to you? Which did you sell? The 56? Are you the one lot?
I might be the one lot. I might be the one lot. I think I just sold the 56 for like I don't know what price.
I figured it would be you. That's your volume.
I only sold the one.
There's your little volume
I want
right
to
there.
keep track of it. I used to get in and out of Square, and I want to keep track of it. They have earnings. So I thought, I don't want to forget this. They have earnings next week. At the end of the 10 days, if I get put the stock, then I'll have some stock and I could sell strangle around it on earnings. But I wanted to dip my baby toe back in. I think that might
you
be my
did.
one
You
lot.
got
I'm the only
your
one.
one.
I'm the only one. Because the buying power is not great in Square. If you take a look, $2,000 for.
Yeah, that's not good for a $56 option.
No.
Okay, now while we're in the platform, Jenny, let's do a little bit of cleanup. Now I know that the 3 that we have are in a line, ironically, that we want to take a look at.
AMD, Circle, and Datadog.
Yes.
Okay.
Datadog, let's go bottoms up because we did this yesterday.
Sure.
So Datadog, earnings play, we just sold the 90 put. We sold it for $1.10. It's now 2 cents. That's easy peasy.
I mean, Datadog is up $18. So any puts that were sold for earnings are full winners. It's really up quite a bit. So we'll close that, that's fine, $90, $100 in Datadog.
Oh my goodness. It's better than a sharp stick in the eye. I really like collecting $100 on overnight earnings trade, not worrying about it.
And not even worrying about it getting out the next day.
Not
Sure.
sweating it. Okay, go back to the trade page.
So that's Datadog. Did you get out of it? I mean,
yeah. No, it was 2 cents.
Okay. Circle is. We started talking about this at the end of the show yesterday. We were out of time. We were getting the hook, so we thought we'd table it till today. You could fire it up, Liz. Start up what we're gonna do, and I'll push out the trades on the follow page.
Circle's. I'm just going to the trade page so people can see this. We have a short in the Feb 20s that is still worth about $1.70. It's the 65 level. We are up money on this trade. So in order to, you can kind of take a ratchet position to it or reestablishment position where you can take a little bit of risk off the table. Our trade price was $5.40. We can sell it right now and take $294 out of it. We're going to actually adjust because we're in pretty decent shape with this. Your short is in the 10-day cycle before earnings, which means if we adjust right now, great, because upon earnings, we can then sell the earnings cycle
There'll be
in
more.
17 days.
It'd be nice to wait and not sell that earnings cycle option yet, because that premium should get pretty juicy right before earnings or day of earnings. So if we adjust a diagonal, and can you go back to the position page? What did we pay?
So we've got
paid
$8.34.
We paid $5.40.
Oh, trade price.
Can
yes.
you pop up?
No, but you are you have to understand too. We could close it right now for $293 in profit.
Now, Liz, I want to. Let me take a. I'm just looking.
Here, I can go back.
No,
I'll go 7
I'm
days,
trying
30
to
days.
look at our. If we've already moved it once.
14 days.
But
yes. Yes, we have.
No, the opening trade was this 65.55 for 540. What we closed was the 80.65 put spread that we had.
Okay, so then we reestablished. So we are doing okay in circle. Now, I'm going to walk through a couple options.
We've made our money back that we lost on that put spread.
But I don't mind being in it through earnings if we can take some risk off the table. Now, there's two schools of thought here. You can take and just reestablish. So you're going to bring the longs to the at the monies, and then you're going to reestablish by selling a new. There's a lot of strikes here.
A new strike.
So we're going to take in. I'm going to go up 178. It was better earlier. We can take it.
Or you can move it down to 67. Sure.
205. Sure. We're taking in $2 in credit. We gave ourselves $2 in additional profit potential.
So you see, we paid $5.40 for the original diagonal. Now we'll take in $2. So now we've only paid what did we pay? $5.40. Now we paid $3.35.
The other option is, if we do that, you can take more credit in. I'm going to get rid of this for 1 second. The other option is going out into the earnings cycle. Then this would be our earnings trade, and you can actually go all the way up to the 70 and take in 248. That's our earnings trade then.
No, I kind of like the 10-day.
Because we know there's going to be more juice if it goes
again,
up.
If we paid $5.40 for the initial diagonal, now we're going to take in $205. So we've got $335. We only have $335 invested into this trade, and we've got a lot more profit potential.
A lot more profit potential.
Well, not a lot more profit potential in the 10 days because our spread's tighter, but we'll have the ability to then roll that 10-day out into the earnings.
I kind of like the earnings setup diagonals.
Yeah, I don't mind them. I don't mind them.
Now you'll notice, speaking of liquidity, these are slightly wide markets. Look down here because I think everybody can see my mouse when we're at the SIBO, which is great. We got to have that fixed when we're at home. But it's about 116 at 320. 217, I'm locking it. We're taking in 217. I will adjust it down.
I didn't think we'd get filled, and you did. I mean, I didn't think we'd get filled right at 217.
I didn't either.
I'll tell you what might hit. The ES trade. So if you take a look at that ES trade, these markets have been wide. This has been bouncing around.
It is bouncing.
When SPOOs were up, we saw this not looking too good when SPOOs were up 14, 15, 16, 17. But now with SPOOs only up 6, it's
not bad.
It's interesting, and again, I think these are wider markets because we saw this trading close to 21, and so we threw in that 20 and a quarter offer to get out of this for just a $100 win.
No, but you're watching it bounce. So the markets are slightly wide where you'll watch, and this is what happens too with wider markets, you'll watch it bounce from like down 120 to down 70 to up 200 with the wide markets. That doesn't necessarily mean you're going to get filled that price, but we've got something in just in case it hits.
If the market comes down a little bit, we can get out of that. Because I hesitate, who knows? This goes through till Friday. And who knows what the market's going to do Friday?
Yeah, nobody knows.
If it rallies up, that's going to hurt us. This position's going to lose, and we don't want to take a loss on it. So we're going to try to get out for a win if we can.
So that's in there. We've got our working order in, and that's just a day order. I might change it to a GTC later because you can get filled at random times with these options.
Okay, so far we're out of Datadog. We've adjusted Circle.
Want to see our calendar miracle?
This was an earnings calendar in AMD. Take a look at AMD. On earnings, AMD really took a hit, and it has come back. It's making a comeback, and it's coming right back to our 217 calendar.
That's a miracle.
Yeah. So look at that. We paid $1.60, made $111. Going to close this for $273.
Yeah.
Great, Liz. Wonderful work.
I'm going to take a fill on that one. That we're going to close. That was a calendar where we were almost at full loss, so you just leave it. When you have nothing left to lose, hold on for dear life.
Hodl.
So
that we're going to get out of. And that was an earnings trade that came back, right? 6 days later.
Yeah, it did. Hold on. These are pretty wide markets, too. I feel like we're dealing with wide markets ever since we did a liquidity.
I know. I don't understand it. Like, what's going on? Markets should be getting tighter as
Okay, we're filled. 272.
Okay, we're out of that. Another thing I wanted to possibly get out of is our USO. If you take a look at the recent oil move.
So USO, I just flipped everything over so you can see top down. So now USO is right underneath the second one down.
And go to the chart. So oil's had quite a run up in the last 2 or 3 weeks. You could see that from the beginning of the year till now. We saw this more profitable at one point, then it kind of gave some back. Now it's popping right back up. I think $220 on a one lot in USO is pretty good.
And let's talk about this too. Now, granted, there's 10 days left, and the short still has $200 left in extrinsic value. So this has $200 in wiggle room. We know that we have a zebra in the 38-day. The 71.75 zebra is a stock replacement in the 78-day. That was ratcheted up once.
Right, because you can see we've got different days. Like 14 days ago, we adjusted that. So we know we've made even more than 227 on that trade. But I kind of feel with where oil is right now, we just take it off.
We can absolutely take it off. So I don't mind either. As traders, so some people are going to put in the zebras as a stock replacement, and that's what they want to do is just keep a long-term position where you're chipping away. We're traders. I'd rather get in and out with the moves.
Let's talk about the rules of a covered call. If you have a covered call and the stock starts going through your covered call, that's when you have to move that call out and up.
Okay, so you could close it. You could close it and move it to. I'm just going to show you. Could move it to this cycle and sell the 60, 86.
But then what if you just move it to the 80? Let's take a look at this. If we move it to the 80, we take in $1.40 credit, and if you ratchet up the zebra, how much credit do you take in?
Okay, so you take in $1. Moving this, you take in $1.43. I have to clear this.
So if we move that call out and up,
and then I'm just going to go where you're going to take the zebra, so the 38-day, and ratchet is closing a zebra. So close the zebra, close it completely. And then you're going to sell another one with...
Yeah, you put on another one, sell the 50 delta, buy 270 deltas.
I don't have the deltas. I just did extrinsic value. Because you can see. And you're going to take in 217.
So you're going to take in 217 to ratchet the zebra, and we were taking in how much to move that call?
143.
So 343, 350, 360. You're taking in 360, and what did we put into this position?
I just want to see something.
Originally, pop out the side to USO activity.
USO activity, we $7, and then we took in 283.
So like 4 something, and now we're gonna take in 3 something.
Honestly, let's just close it.
I don't know.
I mean, it's been a real joy going through that math, but let's just. I understand having the position on for free, but I'd like to take a profit.
I think with the run that USO has had, the run that oil's had, let's just take it off.
And
I want to look.
If you want to, so Jenny, hold on. I'm going to close this. I kind of agree with you. And if we wanted to get back into USO, here, I'm just going to close this. We're getting $1,000 back.
So there was that day that someone said, oh, look, something about oil's going to move. Oil's going to move one way or the other. And at the time, we bought a straddle. I think someone else was doing it, and we don't want to miss out on anything. So we bought the oil straddle, and that straddle is a loser.
What day was that?
How long ago did we put it on? I have no idea. I don't have my days. I don't have my days on
That
here.
is the day when another network didn't know what buying a straddle meant. Remember that?
Right, so we walked through. But anyway, that straddle that we've had on for a long time hasn't done anything. Where a little USO covered call zebra
made a couple $100. Yeah. Now that being said, take a look at this. So when things change too, so we got the move we're looking for in USO. USO is a 57 rank. If you wanted to get into something in USO, you can sell premium now.
It was only up $1.
Oh wow.
We've got to be getting close to getting filled on that. Yes, because look, it says it's marking 22.88, and we're trying to close it for 20.25.
Yeah, but it'll bounce around. Now it's 18. Do you see what I'm saying? Like
I know.
We're right there on it. We'll let it work.
That's why I prefer. I know that I prefer the SPX. I prefer the SPX 0 days. We get in and out.
It was double the size though. We originally quoted it in SPX. Remember, Punish Pixels was screaming at the screen. We originally quoted it in SPX. It's a half. It's a half, which is nice.
Right, half
but
the
it's
size
not
of
as liquid.
SPX.
But it's not as liquid.
It would have cost us too much. But it's surprising to me how wide these markets can be and how we can be trading near our closing price and still not filled.
Yeah.
But it's interesting. SPY's more liquid. If we wanted half of SPX, we could have done 5 SPY.
But what's crazy?
But then the margin.
So there's always these like
know.
different little nuances. I just wanted to talk about finish UXO real quick. We closed it. That's a closing order. But if you wanted to be in something in USO, you've got a 55 rank. You can go to the 38 day and sell premium in it now if you wanted to. So
yeah, but let's just stay.
Look at that, Jenny. Do you want to talk about bad? Look at the buying power effect for a 70. Shame on them. For a $77 product, $3,000.
Okay,
it's 50%.
so can you put Delta back on? Can you go change volume to Delta and go back to the one you were selling?
Oh, I was just selling like a.
So 18 Delta. I just want to show. So this is 18 Delta. You're getting $92. Now go to MCL, micro crude.
Yeah. So once you see the slash, you're going to get some margin relief.
Go to the March and sell the 18 Delta. Go down to
you're going to get
Delta,
a lot better.
And you're going to get, not too far off from the price.
$400.
And you're using $400. So that's why some of these futures, the margin is really beneficial. But and that's just comes from time.
Hold on. Let me change this back to volume. I want to see. Yeah, there's no volume in these. They're very illiquid. They're very thinly traded. It is so quiet.
You were getting very quiet. Liz was getting very quiet, and I was going to say this is the quietest I've ever heard you. But you could hear a pin drop on the floor right now.
Yeah, you can.
I don't know what is going on, but you could hear a pin drop. It's so quiet. So what if a newer trader would say, how do I know? Like, how do I know if I want an oil position, should I trade USO or MCL or CL or what to trade?
USO used to not be a trading vehicle for us. It just wasn't for the longest time. We would stick with the MCLs or something else, or an individual product instead of USO. It was just non-tradable for us.
You're right. We used to do the individual oil products.
Yeah, because USO is and it makes sense. It's so much buying power.
It's crazy buying power compared to going into MCL.
Take a look at this. You can do the Jade Lizard in MCL for $400.
But after this run up in oil, if you go to the chart again, I really don't feel like doing a Jade Lizard right now. Let's just
Do you know what I've been doing when things have run up and they've got good? Well, so take a look at this. You look at this chart, and if I blindfolded Jenny and didn't tell her it was MCL, you would not expect this to have a 57 IVR.
No.
Unless I told you it was a commodity, then you might guess 57. Right. But what I've been, my go-to move has kind of been looking at things that are up like that and doing, because keep in mind, everything has a relationship. So a Jade Lizard and a downside ratio spread. So I kind of agree with you. With the big move up, it's sometimes easier to do things like this. I did it, not that, you want to collect more, but I've been looking at downside ratio spreads, because if it comes down, you make more. If it continues to slide up, you get to keep the credit.
Sure. You can do a downside ratio spread.
You can even pull it up. It's only 62 cents.
I know, we're not getting enough. It's a long time. If you put on ratio spread and you're not getting much credit, then you're putting that trade on to hold it and hope it comes to your strike.
Yeah. You're not getting that much credit for a ratio spread. That's okay. We're out of USO. We'll live to trade another day in that. Now, it is 26.
10:26.
Do you want to jump into Kai's?
Hey, let's go to Twitter, because on Twitter.
So this is Bob on Fire. We are on Last Call today. If you can't get enough of us two knuckleheads today, we will be on Last Call every Tuesday. We're going to take a look at all of these earnings trades in Last Call.
And if you refresh, Jack Tucker came in above Bob.
Top down?
Yeah, top down. If you go top down, we've got Jack Tucker coming in, 3 double tranches today. Which I love to see. Love to see you, Jack Tucker. 3 double tranches in the 0DT SPX.
Look at this.
Yeah. 3 double tranches collected $35,000 in premium, setting GTCs around 40% and watching positions, and the Liz and Jenny show.
I love when he says that. Thanks, Jack. We love you.
Yeah, and again, these guys, I love to see you, because you're keeping them in business.
You are. Okay, I'm going to click on this, and then I think I can get out of it, too. I just want to show the tree that he's got going on here. Mm-hmm. Look at this. Look at all of his positions in there. He's got the tranches, and this is his win range right in here.
I know.
It's kind of crazy.
6950 to 7,000.
Yeah. And then
So-
here's his strikes. He's pretty tight.
Well, tight to the downside, because let's say he put these on around 9 and SPOOs were up 15.
Yeah.
SPOOs were up 15 around 9 a.m., so that's why his puts are kind of close.
They're kind of
right
tight.
now.
Yeah. Okay.
Because we're only up 5.
No, I love it. Thank you very much. And then I know Jenny posted something on Twitter.
And we'll get to Jackie's after. So This has been, if you have not been watching the Miami basketball games, they are like crazy. When I say so crazy, they're going to be on ESPN Friday night, late, 9:30 Eastern time.
I'll be watching. I'll be wearing red and watching.
8:30 our time. The students there, if anyone who's been to Miami or visited and gone out to Brook Street or whatever, the students are nuts. The stands are crazy. It's fun to just watch.
Yeah.
It's fun to just watch and see these kids. But they are still undefeated, and Friday night.
Well, Jenny and I now have a wardrobe for Friday. We're wearing red, and it's not for you, Ashvin. It's for Miami.
It's for Miami, Ohio. The only undefeated team in Division I right now. So we'll see. They have not made the March Madness.
I mean, they're not a huge basketball school, are they?
No, but this year, they got
a dream team this year.
Well, they got a new coach. I don't know if it was last year. Like recently, they got a new coach. And they're awesome, and the people they're great, and we'll see how they do. We'll see how they do this year. It'll be fun just to be in.
It's a good Cinderella story. Everybody's rooting for them.
Yeah, everyone's rooting for them. I am. My husband.
I'm rooting to have the swim team there again. That's the only thing that I want to see.
Oh, the swim team's at every game.
And they're in their Speedos and their caps.
Yeah, swim team's at every game. They're so funny.
No matter the weather.
Tune in on ESPN Friday night. Can't wait.
I know, I love it. And then Jackie comes in. We love Liz and Jenny. Thank you. We love you too, Jackie. Sell my cash secured put in Microsoft is working well. I took off the Microsoft, what we went over yesterday. I put it on and took it off already.
Let's take a look at Microsoft again, because did you hear Vanetta mentioning them in the news today?
No, what was the news today from?
Oh, something about how like now IBM.
Microsoft's less than IBM. I did hear that.
Yeah.
We did put something on Microsoft. What do we have in here?
Oh gosh, we have an old put spread that is so deep in the money. We put it on 42 days ago.
It's not that far.
465, 475?
I mean, it's far, but it's not like I expected it to be more than $40 away from it.
Yeah. So,
yeah, but the spread that we did yesterday where we walked through that email, I put it on after the show, I'm already out of it.
Nice.
Yeah.
Right, we had a little pop today, up $7.
Yeah.
Right.
So it was a Bob on Fire trade that we went over yesterday in Microsoft, and that is true. So you almost get half the move. If you get it right away.
With that Bob on Fire trade, if it's up $6 or $7, you're probably up $300.
That's what I took it off for. And I was like, I might as well take it off. Okay, so what was Jackie's strike? Let's look at his trade or her trade.
No, it just
cash secured put. So it's a 415,
220
220 expiration. So 220 right here.
Coming up.
415?
Can you believe we're already in Chicago today, people are walking around without coats.
In Chicago, if it is over 35 degrees, people think it's summer. My son called me yesterday. He said there was still 3 inches of ice in Kentucky, but everybody's walking around in t-shirts and shorts.
I met Liz at the train station today. I did not wear a coat. I walked out, the sun was out. It was 40-something degrees, no coat.
Which is crazy because you wear sweaters in the middle of summer.
Well, it felt nice. It felt like spring.
In Chicago, it's very confusing because if it was like this in the fall, you'd be in a parka.
But today, after negative temperatures, to have 40 degrees now,
it is a big deal.
It feels like spring is coming. So I can't remember. Did you ever see what happened with the groundhog? We were in Mexico
with Punxsutawney Phil.
Yeah,
I don't remember.
I don't know if winter's ending sooner or later.
I don't think they tell you in Mexico what happens with the U.S. groundhog.
Oh, one of our friends, I think they were trying to explain to to Miguel, our friend we made in Mexico, about Groundhog Day, and he said that just sounded crazy.
Oh, I'm sure.
I'm sure it does.
Was it before or after she has to get on his shoulders?
I've got a groundhog in Michigan City Mitch, we call him. He's got his little den right by our beach, and he comes in and out.
Well, you're going to have to ask what Michigan
City Mitch.
Does it matter if he saw a shadow or not?
I wasn't there on Groundhog Day, but I don't know if he was out or not.
Okay, so in essence of time, let's jump into Research Corner from Kai. Okay? That is not a trade. That is somebody making fun of somebody else. Just a little off
Lots of shenanigans.
The robot nailed a backflip.
Oh. You've got a different show on that TV. I'm surprised they don't have the Olympics on.
They do have the Olympics on back there.
Oh, okay.
Yes.
Usually the Olympics are big down on the trading floor.
Yeah. I mean, there's 3 massive TVs, so they have one with news on. about the and the other ones have the Olympics.
All right,
Okay.
Research Corner. Let's see what is happening. Look back at last week and I look forward at this week. So Dow closed about 50,000 following a tech-led drawdown earlier in the week.
Yeah, I mean, the Dow was the belle of the ball last week. Tech faced sustained pressure as AI fatigue and spend concern pushed the NASDAQ to the worst performance.
Well, it's rallying back.
It has rallied back. Now, this is something that's done this is last week's.
Right, and if you go to the chart of the NASDAQ, you can see Friday. So Friday started the rally back. Like if you take a look, it was falling.
Oh, it went.
Yeah, right. We were out of town. The market started falling.
And I would argue Friday's a rip your face off rally.
And Friday was a rip your face off rally.
Yeah.
Yeah. Followed by Monday, another rally.
Another little rally.
And
then
today, who knows? Today we're not really doing much.
Today an unchanged day. Whoops, sorry, wrong way. Okay, so then Bitcoin sell-off outpaced equities, signaling crypto-specific stress and a liquidity shock.
But that's made a nice little comeback.
Kind of. I'm just going to go to IBIT only because we're going to talk about it.
Because it was down to 60,000. So to go from 60,000 back to 70,000, that's something.
I mean, IBIT is right here. So this is as low as it got, and that was low in IBIT. What does it say? I can't even read that. So it got to as low as like 34, which is low in IBIT.
It got really low because do you remember the day I took my stance and I was like, for my birthday, I'm buying myself
half a
Bitcoin, and then I felt like Bitcoin was rallying. And my husband is like anti-crypto. So he's like, how's your crypto doing? And
that's his voice.
And I said, well, let me look. I know it's up because crypto's been rallying. I know it's up. And it's not, my position is not because it's still down from where I bought it.
I know.
But I felt like we were rallying.
I know. Hopefully we get a little bit of boost under there. But what has come back is Bitcoin implied volatility. Take a look at this IV rank. We haven't seen that in IBIT in a long time.
Yeah.
Okay, so kind of going.
Wait, what do we have?
What do we have in IBIT?
Do we just have stock? Is that all we have?
No. We've got a lot in IBIT. We've got.
a jade lizard around our stock.
We have our jade lizard around our stock, and that is working according to plan. I believe that jade lizard is fine. That just got a couple. It's 10 days, so it's out farther in time.
Back to the research corner.
Oops, sorry, wrong way. Okay, so back to the research corner. Number 2. Today we had retail sales, and that was at 7:30 this morning. What do we got tomorrow?
Jobs report.
And then Jenny's on pins and needles for Fridays.
CPI.
CPI.
The only reason I'm excited for it is that we're going to be on the morning show live during the CPI report.
She called me. She's like, I think there's some news or something while we're on.
We're on the morning show.
Yep, it'll be fun. Okay, and then index weekly performance. This is the week before and last week. So if you take a look at this, it's kind of a tale of two cities last week. You had the S&P down, the NASDAQ down, but look at the Russell on the Dow.
Right.
It's pretty interesting.
You know, I think there was another year that started off like that. Another year where all the Dow stocks were just rallying in the beginning of the year. I only remember this because I remember having a discussion with Victor Jones.
And what was the discussion?
About the Dow stocks leading the rally, and it was early in the year, and I can't remember if it was January of 2025 or January of 2024.
I have no idea. We can take a look. Back.
I don't remember how long ago.
But what did he say about it? Like, what were you just like?
I just remember talking to him at the table.
Facts.
I just remember talking to him at the lunch table about.
You're like, Dow is up, S&P's down.
I just remember talking to him about the rally in the Dow stocks versus everything else, and that might have been 2 years ago.
It probably was.
Yeah.
Sounds about right. Okay, then next up, I like assessing this too. So the week of 2.2 and the week of 2.9, the expected move in SPX was very similar.
Yeah, very similar.
And you take a look and you see the actual move, and then you see that the VIX is very similar.
And guess where the VIX is right now?
17.5.
So you see 17.4, 17.8, right now it's 17.5.
Was it really 17.5?
Yeah. Yeah.
And I want to see where, so 2 days have gone, it is now Tuesday. Let's see what the expected move is for SPX. So SPX table, you go all the way to the for the week, so that would be 3 days from now, right? Mm-hmm. And it's now 77. So this makes sense. A couple days have gone by, and a couple points have been taken out of it. 72.
We've got the NASDAQ red.
Really?
Yeah. SPY's up 5, NASDAQ red, still not getting filled on our ES.
Okay.
But you know what? 69.25, and we're 12 points away from 7,000. Every little bit down is going to help that position.
Yeah, well, and we need the markets to kind of fall in line.
Okay.
Okay, next up, so this is what we were kind of looking at. I mean, I'm looking at the bottom corner right now because we already addressed it. Bitcoin IVR is up. Now, it's not up 77%. I just need to clarify that because Jenny and I were very confused in the beginning.
And it's not even 77% now. It's less than that because we just looked at it. It was like 50-something or 60-something.
No, we looked at IBIT. We didn't look at Bitcoin.
It's the same.
Let's take a look. Oh, it is 40. Wait.
Yeah, it's not like when I think last week when crypto was still crashing, it was higher.
It was higher, yeah.
It was higher, but it's
We
not
did get a
quite as
little bit of high
high.
volatility.
But it's still high, and it's higher than it's been. We had really
Because look at the week of 126. It was only 37%,
Right.
and then it jumped to 77. That's
Right.
that's a big jump, right, Jeff? It's a big jump.
27 to 37?
Yeah.
All right. What do we have going on?
So now, but look at that. Everything else has fallen. You
ranks.
see what I'm saying? The ranks have fallen. Bonds, gold.
All
Bonds,
right.
gold, oil, natural gas. They've all fallen. Okay.
Moving on, biggest S&P movers.
AMD was down 12%. Look
Now
at that.
now
What a
it's
difference! What a difference 6 days makes.
Yeah, now it's coming back. I like to sell puts, so I like to look at what's down, and then I'll take a look at those.
Bristol Myers, your first ever ticket is on there too. BMY is up 13%.
Should I sell some puts in Bristol Myers?
Yes, just to have in your account for the rest of your life.
I might.
Yes. I mean, like I said, this is past looking, so we're going to go to the next one. Okay, the VIX spiked to a 2023 intraday, the highest level since last November. And average daily realized volatility reached 1.48% to top 20 percentile reading over the last 10 years, well above the 1.1 average. So yeah, last week we crashed, and the VIX spiked
to 23.
I used crashed loosely, but you know what I mean.
But yeah, by 23 VIX, that's a
big.
decent move. That's
Yeah.
a decent move. So and now things are settling down, and VIX at 1750. Cancel crash.
It's funny because 1750, I mean, I'm so tuned to the doldrums of like 10. So I was like, 17's not bad. It's not bad. It's not great, but it's not bad.
Well, you saw like Bob's, or you saw Jack Tucker's Iron Condors, how tight they were because the VIX is only 17.
Yeah.
But if it makes sense, if VIX is 17 and you're a narrower range, we're not moving as much. Like today, we've had a very tight range today.
Very tight range today, and we're still in a tight range.
Yeah.
We're still
All
in
right.
a very tight range.
What's next?
Okay. Now, the Dow performed exceptionally well during the last swings, reaching new highs on Friday while other indices lagged, especially the NASDAQ. They were asking if there's Dow 50,000 hats. Do you remember the 10,000 hats?
Do me a favor. Let's go to the platform. Go to the watch list.
The watch list?
Yeah. Go to the watch list.
Fast movers? What do you
I want to see exactly what's in the Dow.
Oh. I don't know how to do that.
Market indices. Go down to market indices and go over to
Dow Jones Industrial Average. There you go.
Yeah, I want to see what products are in here, and what's been curing the Dow to
Here,
this
I'm going to
rally.
go to what's up. You've got Home Depot, American Express, Microsoft is up, Goldman Sachs, Visa, Sherwin-Williams, Walt Disney, Honeywell. These are your companies. These are your everyday names.
And then
Procter
scroll
&
down.
Gamble, McDonald's. McDonald's has earnings today too.
Is that the end of the list?
Yeah, there's not a lot in the Dow.
So I just wanted to see what.
So you've got financials in there. You've got Nike. I mean, it's literally if you covered the symbols on all of these, I bet you could guess them. That's how normal these names are.
I just wanted to see what's on here that we might have positions on that we actively trade that.
Well, the only thing we have, and you can see because the little dots, and that's what I love about our platform, the only thing we have in the Dow is Microsoft.
Right.
Currently.
But usually we'll often have.
We usually have Disney.
We'll
Boeing. Look at Nike occasionally. You got to see Caterpillar.
I used to trade 3M like crazy when it was down so low, and
look at
Tim Knight would
Caterpillar.
Oh, Caterpillar. There's a lot. I mean, type in 3M. Take a look at 3M. Take a look at.
This is what's leading the Dow.
It seemed like it was a bigger rally, but just recently it had a really big rally. Look at Verizon. I think that's also had some kind of crazy rally. What is? Look at that bad mark.
That's a bad mark.
Yeah,
you can't. We know
that's so
that.
funny.
You know that. But that's a
This
rise.
chart
that's
looks
not a
strange, doesn't it?
Yeah, because I think what 1 day 20-year indicators.
This isn't the first time. The last time I looked at the Verizon chart, I thought it looked strange.
Yeah, because the Caterpillar chart looks fine.
Yeah.
I don't know.
Walmart. Take a look at Walmart. It looks like the Caterpillar chart.
Yeah. Yeah. So that is what is raising the Dow, and that's exactly what you're seeing right here. This straight up move.
All right.
We need Dow 5,000 hats.
50,000.
50,000. We have Dow 10,000 hats.
I remember when it was 10,000.
Yeah.
We had the hats.
Just write a 5 on it if anybody's got the hats. I bet do you know what I bet?
Change the 10 to the 5. Just
if
add
you go up to there's almost like a little bit of a museum. I bet there's a
10,000
hat.
Probably.
Yeah.
And there is a nice museum so we're in the
Old Board of Trade.
Old Board of Trade building on LaSalle Street, at the end of LaSalle Street, with Ceres, the goddess of grain, on the roof. And there is a museum on the main floor now that people can come in. It's really nice.
I'm just surprised they don't serve more grain at Ceres.
Would quinoa be considered a grain?
I guess.
Because that's my favorite salad here.
They do have quinoa. We do eat it Ceres every day. Okay, so then let's keep moving forward with this. Silver swings wildly. This was the day we were sitting at the pool in Mexico, and Jenny looks at me and she goes, "Silver's down 31%." I was like, "No, it's not."
That ruined my day.
It kind of reminds me.
Give me another margarita.
I was like,
that ruined my day.
It kind of reminds me of the day. You're like, "No, it's only 5." And you're like, "No." I was like, "No, it's only 3." You're like, "No, it's 31." I was like, "No, it's only 3."
So yeah, that big down move was the day it ruined my day in Mexico. Now, last night. Oh, okay. I finished Landman last night.
Just now?
So now I finally know when you said like CTT or whatever.
Yes.
Yeah, no, I finished it last night, so I finally heard that. But and when they were at the pool, when the girls were at the pool, they were all wearing like gold necklaces and earrings and bracelets and jewelry. And my husband said, "This is so weird. Why did they all have jewelry on at the pool?"
Everybody in Mexico did.
I said, "Take a look."
Who didn't have any jewelry on in the pool?
We missed the memo that you're supposed to load up with jewelry when you go to the pool.
Never.
Every one of our friends they were loaded in jewelry at the pool. It was the weirdest thing I've ever seen.
Yeah, I agree.
We were the only two. I don't want to say we're the only two normal people in the group, but kind of.
I hope they're all watching.
Nobody watches. Next.
Yeah, they did have a lot of it. Okay, a bloodbath week for crypto. Way to rub this in. This is what ruined my trip in Mexico.
Yeah.
So hers was the silver, mine was the crypto. But yes, Feb 5th. The 14.8 historical volatility was near the 95th percentile.
And I'm acting like I'm loving this, but this might be our last option jive that we do on a Tuesday, because this news, all this news is so old I can't.
I know,
take
that's
it.
why we got to keep moving past it. And these are the large movers from last week.
And I love that Kai sends this to us, but it's just old news at this point.
The earnings in review, I like this. It's been 50-50 for 2 weeks. So 50-50. And I'm telling you, we watched some of these earnings last week where if they gave you the earnings print, it would go the opposite direction.
Yeah, you wouldn't know what to do with it.
Yeah.
You wouldn't know what to do with it.
And then that's up for this week. So today, Jenny, we've got, I don't know. Oh, before the market opens, that is. We've got a lot more than this.
Go to Bob's list. Go to Bob's list, because...
We've got a lot more than this.
I like looking at Bob's list. Today we've Hood, ALAB, Lyft, Ford, Upstart, Gilead, Net, AIG, Shop, VRT, there's so many. There's so many on today's
list. And McDonald's. I want to see what McDonald's is doing, because that's a Dow. That's another Dow stock. And McDonald's looks like it's got a little bit of volatility to it, doesn't it? But
21 rank.
$326.
Yeah.
You like to short it at 100. Are you shorting at 300?
No, when we started the show, I used to sell puts in McDonald's always in the 90. It was like in the 90 handle. And I don't know how many years ago it was, a long time ago. And I don't have a short McDonald's position, but sometimes if I'm trying to offset some of my deltas with short positions, my short calls would always be McDonald's and American Express. I don't know why.
Yeah, I don't like American Express either. I was short that too.
I don't know why. But right now, I do not have any. I have no short. I don't think I've had a short call other than my silver short calls. I haven't had a naked short call in a while.
Oh, I listened to Tim Knight yesterday and I shorted some things. Hopefully we're just early.
Yeah. Yeah. All right. Now
we've got about 5 minutes left, so we will. So just to kind of go back to this, we are on last call today. So we're not avoiding earnings for today. We are going to take a look at it. We're going to take a look. I want to look at Hood, Lyft, Upstart,
and Shopify. Those are the 4 that I want to look at. We might do something in McDonald's, but we'll take a look at that later.
I'm just looking at our watch list and looking at the Dow and looking for high rank. Take a look at, let's pull something from here that we don't have.
Okay. And I also wanted to see
PayPal. Are their earnings over? Oh wait, I'm in fast movers. I was like, PayPal's not in the Dow.
PayPal's not in the Dow.
I've got the fast movers list up.
I want to look at the Dow. I want to see what their Ivy rank is. Not Dow. DIA. I typed in Dow. So 15 rank in diamonds. It's a $500 stock. Let's take a look at that. It's gone straight up, but this has been something, and it's like slow and steady wins the race. This has been something that they've been looking at. That's Olympics.
Is it?
Yeah.
Oh yeah, there was speed skating.
Speed skating. I love it.
Skating. All right, let's find a trade. Let's find a trade and pull a TP. Like go back to the market watch.
And you want to go to PayPal?
Oh no, that was in the fast movers. Take a look at PayPal.
I want to do something that's in the Dow. We don't have any Dow stocks. We only have Microsoft. So let's go back to the watch list. We're going to pick something from the Dow list, and I'm going to go Ivy rank top.
Okay, so we're going to do. We have 6 minutes. Let's do 3 trades. Can we do 3 trades?
Weird that Nvidia's in like every index. It should be pulled from the Dow.
Yeah, I kind of agree.
You know what I mean? Okay.
I have a hard time with most of these because if they're all at the top of their range, I don't want to get in. Where's Boeing? Boeing 243. Yeah, let's take a look. Let's just sell a put spread in Boeing.
Boeing is not near the top of its range.
It's not near the top of its range.
And there's not earnings on the horizon.
But it's only a 9 rank. Maybe a diagonal.
Yeah, you got to do a diagonal.
April, May diagonal.
April, May. Let's go March, April. Is that okay?
Oh, that's what I meant. March, April.
Okay, good. So it's like so diagonal setup. We can tweak the strikes, but let's go with 260, just the expected move. We'll tweak from there, and then we're going to go to the April.
That's kind of expensive.
It's going to be $1,000. Now we're willing to use $1,000 on a put, and you have profit potential of.
Let's see the chart.
$500. I think you can get $500 another way.
I'm telling you, go to PayPal. I know where it's not in the Dow. It was on the fast movers list. Look at the move they had on earnings. Look at the move they had on earnings.
Okay.
You can go to March and sell a put in here. I think this is going to be a good return on capital.
$600. So that return on capital is pretty good. I'm not a fan, and I don't know what's happening when we're opening these things, and it's using thousands of dollars.
Right. So it was just accidentally. I was in the Tasty Fast Movers watch list, and this caught my eye because it's been beaten down. This is what I like: products that have been beaten down. You could sell a put in here, not use a lot of buying power, and it's slow and steady.
I'm shipping it. You know what else I want to look at? We were glancing today on the train at it. I know this is not in the Dow. For sure, this is not in the Dow. The yen.
Well, there's nothing to do now because it's popping up. So
no. But you remember when we had the yen? The trend is your friend.
I got out of my yen today, so I'm waiting. Every time it pulls back, I get back in.
It's got a 37 rank.
Liz, I think we missed it. I would wait. Oh, or if you want to do a downside ratio.
It's too much.
Spread.
I just want to see how much it was. It's too much.
Yeah, like with the move up in the yen today, I think anyone who put on a bullish trade is out.
The yen, the trend is your friend. I wonder what our young Glenn is doing. I haven't seen Glenn in a while.
I know, we miss him. We miss Glenn. Take a look at, did we sell the puts in XYZ?
Yeah, we got filled immediately, I think.
Well, that was today, PayPal. But what about XYZ? You know how we looked at XYZ earlier?
It's not in there.
Did we decide not to?
No, we didn't because it was so expensive. That was $2,000.
Okay.
So if you're going to take a look at those puts, I'm just going to grab anyone. I'm not cherry picking. You just grab that. It's going to be $1,500 for the 5. This doesn't make any sense when we just got $1.37 using 400.
So far, we closed Datadog, we adjusted Circle, we closed AMD, we adjusted USO, and we sold puts in PayPal. Let's get one more trade in the books for the morning.
That's pretty good. Do you know what I have always have in my account? I don't believe we have it in here. Let me make sure we don't.
Oh, and JD's low.
Yeah, JD's really low. So it's low and it's got a 25 rank, and I want to make sure we didn't have it.
This is a good Jade Lizard candidate, or just puts.
So you can sell. You could just sell a 28 put. Oh, it's $900. See, that's what I'm saying. You got a $28 stock with $900 there. The way to thwart that is sometimes I'll do this. just because it's a low risk, it hasn't been going, and it's been kind of staying in, like, you see this little bit of a range.
I know. So, okay, I'm just going to bring this up just because. Now I know we're getting $1.20. If JD goes up, we only make $20. If you look at the chart, JD's really been beaten down.
It's not that beaten down. It's slowly going down. So I've been selling and selling and selling and selling and selling and selling and selling. It stays within like this little bit of a range every time I reestablish.
I'm tempted to do a zebra in here.
Oh, well.
Just to have just to give us some, we're going through earnings. Give us some profit potential.
So this is a very
It'll be a cheap zebra. It'll be cheap.
We can pay a little bit.
Can you go change volume to delta so people can watch the sell at 50 delta, buy 270 deltas?
Okay, I just wanted to wash it first, and then I'll change it to delta. So here we've got you've got $1 in extrinsic value, so I know I'm paying a little bit of extrinsic value.
That's fine.
So just keep that in mind.
But for $288, we can control 100 shares of JD, and we've got earnings coming up. So if it goes up on earnings, great, we'll make money one for one. If it goes down on earnings, we only have $288 at risk.
And everybody hangs their hat on deltas and sends us questions about this. So I was glad we did it without the deltas. I understand we're giving a little bit up. Now I'm going to change it to deltas and see. So we're close. We have the 58 and 70. So you could go to the 50-70 and pay $334. I like the 288.
I feel like we need to make more money than, if it runs up on earnings, I don't want to just make $20.
I agree. I didn't know it was going through earnings. But I have been premium selling in JD, and it's been very good to me. And I know it looks like it's going down, but it doesn't necessarily. It's not like a violent move down. It was like a...
Right.
So if you take a look at this chart, I mean, don't get me wrong, it was violent up here. But then through this range, it's a very, slow grind, and that's good for premium selling.
And don't you have the stock and just sell strangles around your stock?
No. I gave up all my stock in the new year,
did?
and I've just been selling premium. I've been doing Jade Lizard, and this is perfect for that when you look at this.
Yeah, right, and I could see that working over time.
Yes.
With earnings coming, I didn't want to cap our gains.
I love it.
With that. I didn't want to cap our gains with that call spread.
Nobody wants to cap their gains.
Well, or the zebra. I'm going to push that out.
I know we are out of time, and we have to close, but Frank wants us to look at Marriott for our train conductor. Thank you very much, Frank.
It's up so much. He's on vacation right now. He has no idea that his Marriott stock is up $30.
Unless he's like us, a junkie who checks at the pool in Mexico.
I guarantee you he's not checking his Marriott stock at the pool in Mexico.
All right, Jenny, we are out of time. We will both be back on Last Call this afternoon at 2:30 Central Time, so tune in.
Yes, and we'll be back to the SIBO tomorrow, right back in the SPX pit. So if you don't see us later this afternoon, tune in tomorrow morning.
Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny Show.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Show you the way. Saw you talking to somebody, telling them it'll be okay. Got a sign that we're running away. 'Cause you know we're getting lazy now. We gotta show you how. We'll do it even if it's not allowed. We gotta show you how. Sweet and sour, you pucker up. Give me kisses, wish me good luck. Diving in now, bobbing for fun. Golden hour, hop in the truck. Getting late, yeah, we scramble up. But we never give up. And you know we're getting crazy now. We gotta show you how. We'll do it even if it's not allowed. We gotta show you how. Yeah.
Hey, what's going on, everybody? Welcome to Option Trading Concepts Live. My name is Jamal Chandler. I am joined by Thomas Westwater here today, as it is Tommy Tuesday. What's going on, man? How you doing?
Well, the Super Bowl's over. You know, it's we got a couple months of not a lot of sports, but
Is you having a dog in a fight in that?
no, this is like the first year I haven't made any bets. I don't know. I just wasn't like that into this one this year. But,
Yeah.
we had to cancel. Like we were going to a big Super Bowl party, and the family that was throwing it, they all got the stomach flu.
Oh,
So,
yikes.
just canceled that, you know, so we just watched it at home and kind of chilled, and
Yeah.
wasn't too exciting of a game, so I don't know. Yeah.
I know, it really wasn't. I went to a friend's house. We were watching it there with a couple of people, and really kind of glad. And it was kind of a last minute thing. We did just put it together maybe 2 days prior, and I'm really kind of glad because that was definitely a boring Super Bowl. I'm telling you, I keep saying it, and I keep saying 5, 10 years, but honestly, maybe in 2, you will not remember who was in that Super Bowl, and you will not remember who won, unless you're from Seattle, right? Unless you're from New England, you'll remember it. Outside of that, I mean, it's what kind of they would want in a Super Bowl. You got both coasts engaged, right? I mean, the middle's going to follow suit. Just didn't work out, man. It just didn't work out. Commercials, nothing really caught my attention either.
No. There wasn't anything too crazy. Ring, you know, they put out that one. People aren't really liking it, the facial recognition and stuff. But
Oh no! Other than that, it's almost spring. We're going to be in the 50s here next week, and we're gaining, I think, 2 minutes of daylight every day now. So
When's time change?
the time change? I don't know when that is.
March or something? It's probably March this year.
Maybe March. Spring forward.
Are you one of those proponents of we should never do time change?
Yeah, I think we should just keep it. Once we spring forward, just keep it like that. Because I like more light at night. So like in the summer, you're out around the house. It's 8 o'clock. It's still light out. That's nice.
True. It is. The other morning we woke up, I just saw the most beautiful sunrise, man. And I usually don't pay attention to things like this, but it was like one of those kind of like this color we got over here in the corner. It was like a pink sky. It was crazy. It was gorgeous. But it also kind of can mean weird things, right? Like what was the pink at night, sailor's delight,
right.
Red in the morning, sailor's warning, whatever. It was kind of one of those. It was like beautiful, but it's like, something happened. But maybe it just meant we're about to get this warmer weather, which again, we got 40s here today. It's kind of nice.
You start crying?
I did, a little bit. Yeah, a little tear came down the eye. You know that? But yeah, as far as sports, I guess we're onward to, it's true. As Jared says here, we're onward to NCAA and PGA. Let's go through markets real quick and see what's going on, and then we'll talk a little bit about the most interesting thing in commodities right now, which in this case is the WASDE report, and eventually take questions from you guys in the chat for sure. But if we can pull up the platform here and look around the horn, exactly flat. That's right. Since we pulled it up, we're basically flat here on the S&P 500, 69.84. NASDAQ slightly down, Russell 2000 and Dow are up. So I guess there's a little bit of divergence here. Again, you see the 10-year. That's probably the biggest story maybe today. 10 years down percent and change. Volatility holding in there, if you will. 1845 bid on the G contract, 1930 bid on the H contract, 2015. So strong contango there. Bonds, like I just mentioned, I mean, I didn't notice this right away. It took me a couple of seconds, but then I realized, wow, CN, 112 and change. ZB's back to 116. Do you know what's going on in bonds? I have no idea, honestly. Is this all based on retail sales?
Yeah, I think it has to be the weak retail sales. So December came in weak. That put us on the back foot for the end of the year. That softens the projections going forward. And January, we had that really big storm across most of the U.S. So that's supposed to dampen sales too for this month because everyone stays inside, they don't go outside. So we got 2 Fed cuts fully priced in. That third one now coming up a little bit from that weak number, and more importantly, now we have so that's going to drag the GDP estimate down just a little bit. It still looks like we're going to have a strong quarter, but that's definitely going to soften it up a little bit, and because of that, the Fed rate cut bets for that third cut, it's going up. So yields are going down a little bit as the Fed pivots a little more dovish again. So, I think it's, up to the jobs report really that's coming up. That's going to give direction to bonds. But, it's pushing the yields down. So that's something there that, people want to see, I think.
Based on the trading, or I should say the equities action, basically around this time yesterday through even now, you mentioned the jobs report. It's starting to feel like the market is waiting on that number because things have gotten fairly quiet, if you will. Outside of this bond move today, like I said, that's probably the biggest story today. Gold holding in at 5,000, silver holding in at 80. These are fairly muted moves compared to what we've been seeing more recently when you talk about expected moves on a day-to-day basis. Oil basically hanging around 64. Nat gas, we talked about how the weather's changing, but it was down big yesterday, slightly up today, 1% and change. Bitcoin and Ether, they just seem to be stuck at these levels. Ether essentially 2,000 and Bitcoin basically just under 70, if you will. Dollar looks like it might be slightly up today. Is that what it is? Oh, slightly down, I guess, if you will. Slightly down move in the dollar, but there's a mixed bag here going on with a lot of these currencies, if you will. And then just looking over here, flipping things around, Dow, these are the big movers here. Disney, Home Depot, Nike, American Express, Microsoft. So you can see Dow, that's one of the reasons why it's pretty strong and holding above 50K. Did you get a 50K hat, Thomas, for Dow?
I did not.
One?
I did not.
You have a 40K, a 30K. Coke, just had earnings. That's down. Amgen down. Walmart, which has been strong more recently, down. Boeing slightly down. If you flip over to, let's go to S&P 500. Let's go there. Datadog's one of the ones that had earnings up pretty big, 16%. Spotify is not, I don't think it's is it in the S&P 500? I don't think it is. But that had earnings. That was a big mover. I had the calendar in there. I wish I could have got off 2, only got off 1, but worked out well. You can see Marriott, Hasbro, a couple of other names, Moderna, that are up today. And then flip side, WDC down. Last couple of days, we've been seeing a little bit of this. WDC, Styx, STX, SanDisk has, those names have been coming off their highs here more recently. I don't know what to make of that. I do have a calendar in WDC for the 400 strike. This is a little further out. It's a couple months out. I've been thinking about doing one in SanDisk just because. I mean, I don't know. You never know when these moves are going to continue and these names that are going crazy. You know, it's the same thing with, like, I think about NVIDIA a couple of years ago. It just seemed like it was ridiculous, and then it just continued to go. I feel like some of the easier ways to play it is like a calendar call. SanDisk, I just mentioned, that's down 4% and change. But these names, notably, are down pretty big today and the last couple of days, too, if you will. Schwab down decently today. And any other notable ones in here? That's mostly kind of it. Lastly, we can go to the futures market here, see what's moving. Again, we mentioned earlier, Ether has been struggling more recently. XRP futures. Again, silver's down, but this is not really that much of a move today. Of course, Bitcoin, we mentioned earlier, you would imagine platinum doing the same. And as we mentioned, those 10-year futures are down today. 10 years down to 4.15, if you will, 4.16. Gasoline is down. Of course, copper, which also makes sense. The metals, just a little bit of a pullback here today. Slight pullback in oil. Upside, natural gas. You see all the different natural gas iterations are slightly up, and the yen making a strong move here today, almost up 1%. We talked about a mixed bag with those currencies, but yen flexing a little muscle here, if you will. But all that said, WASD report was released today.
Yeah, it was. The February report, you know, it's known as one of the least volatile ones for the year, and that's because we're not really planting yet. The old crop isn't being moved too much. There's carryover from last year, but you know, the focus now, the coming months get more and more important as we get some insight into how planting patterns will go. I think we can bring it up on the screen. There is one site commodity report that brings up the change from January. You know, there's really not too many changes from what I'm seeing here right now. Corn.
Yeah, let's bring up the region of interest, guys.
Yeah. The corn ending stocks are down 100 million bushels. So from January 2.2 to 2.1. Not too much there. Wheat, really no changes. 5 million bushels added for the ending stocks for the current marketing year. Soybeans, literally no change there. Ending stocks remain at 350.
Guys, let's bring up the region of interest.
Yeah, nothing really coming up here. So I don't expect to see these prices really moving at all, and it doesn't really look like there's too much of a reaction in them. Soybeans still up. Soybeans have been doing good. It's one of the ones that I'm more bullish on. I do have a position, a long call spread, 73 days out, 1160.
Hold on, guys, let's bring up the region of interest. Thank you. All right. Sorry, continue.
All right, do we got it up?
Yeah.
All right, yeah. As we see here, this is corn. You know, we scroll down just a little bit there. The ending stocks, you know, down 100 million bushels. That's not too much. Ending.
So this is over what time period? Oh, from January to February.
From the January report. Okay. So February report released now, and this for the new marketing crop year 2025-2026. Yeah, just not a big change there. That's trimming a little bit off of ending stocks. Slightly bullish, but you know, a lot of old crop is still being fed through as leftovers, I guess you could say. Not really seeing the price reaction there.
What is that total use? What is that?
Total use, I think that's exports with domestic use combined.
Oh, okay.
And that makes up the bulk of it. So that's what we're using internally and what we're exporting. Exports are, not as much as domestic use. We use a lot for ethanol production, all of that stuff. So, that's not a big change. And corn.
Wheat. Oh, do you want to go with corn?
Yeah, corn is a slight up reaction, not really changed in the market.
When you always first pull this up, what are the things that immediately your eyes are drawn to?
Ending stocks.
Okay.
That's what I look at mostly because that's what you're planning to end the year with. So if you get a big increase in ending stocks, that's usually bearish. You get a decrease in it, that usually that means exports are stronger, domestic use is stronger, so those ending stocks are going to be lower, and that is bullish if those ending stocks, move down a lot.
So it kind of sounds like similar to natural gas when you have a draw or a build.
Yeah,
right?
pretty much, exactly. So you're looking at the supply, the demand, and those two feed together to get what you're left over with at the end of the year, which is the ending stocks. Let's go over to the next product. Soybeans, I think, is on there.
Soybeans? Gotcha. Flat.
Yeah, so we see here nothing.
There's no way these are exactly the same, right? Is it exactly the same, or did they just not like really?
Pretty much exactly the same, all the numbers.
Sure is.
350 million bushels, the ending stocks number. Soybeans, not much of a reaction there. There was a quick drop. It came back. Now we're trading pre-report levels. So, it looks like the algos moved some stuff around there for just a little bit, and now we're trading flat from 11 o'clock before the report released.
Mm-hmm.
Wheat, go over to wheat. I don't think there's too much, little change there in something.
Slightly up.
Yeah, ending stocks up 5 million bushels. That's a small change, And if we look at the price reaction for that, it's also pretty much nothing compared to pre-report. Wheat, I'm not really interested in trading right now. Just the IVR is pretty low. If you're trading anything, soybeans, even the IVR for soybeans has come down in the past couple weeks. We were trading in the 60s. Now we're in the 30s on that. Corn has the highest IVR, 60. I don't know if I'm going to trade this one yet. Like I said, there's still a lot of old crop from last year left over. So really we have to see strong use, strong ethanol production. Some of that depends on the crop quality. The crop quality is lower, more ethanol, things like that. But
and so you mentioned old crop on this site. I see so essentially you can compare to what was going on in 2024, 2025 essentially, and look and see what the difference was year over year.
Right. So old crop, it's what was planted and harvested last year. New crop is more, what's going to be planted this year, and it's a lot more speculation with the new crop because you're kind of trying to predict those numbers. You're modeling things, so a little less certainty in there. But usually when you're trading right now, this time of the year, you're looking more towards the new crop, and you're seeing how much is left over from the old crop. So corn, it's a lot. So if prices for corn, they rise, farmers that have all this stored, they think they're getting a good price, they'll go ahead and sell that, and that'll bring down the old crop, inventory. And whatever isn't sold gets carried over. So you're predicting that a certain amount of that old crop is going to get carried over into the current marketing year. And corn last year, it was bad. There's a lot of supply on the market, and farmers just had to store a lot of it. A lot of that is still in storage. So I don't know if prices will move. We're still down a lot from last month's WASD. And we've trended up a little bit since then. Still trading around 430. I think there's enough IVR in here if you want to sell a put spread, capture some of that volatility, and predict that prices will move sideways or maybe slightly higher. I think that's probably the best way to approach this trade.
In the corn?
Yeah, in the corn.
We can go back to the platform now. Thanks.
But like I said, I don't have a trade in corn right now. Actually, I might put one on. 73 days out. You got plenty of duration. Let's see if there's a.
Yeah, I haven't traded this in a while.
Yeah, it's it's if you're selling a put spread around 425, 420, you're getting a high POP around 65, 70%. But you're risking 3 to make 1. So that's an all right one for a put spread. It's not bad. Like I said, I think they'll trend sideways. So I wouldn't mind doing this trade. Maybe I'll put it on. Not too excited about it right now. So soybeans is the interesting one right now because there's this whole thing with China. We're negotiating.
Right.
Trump is saying she is going to commit to more and more soybean purchases. I think it's an additional 8 million metric tons he's trying to get tacked onto this 20 MT figure. And that's yet to be seen if it'll happen, but talks are in progress. And it seems like, the way they're trading, we're definitely getting more optimistic on those soybean sales to China, and that's what's moving the market right now. The question is, after the whole week trading from 1060 now to 1121, is that priced in? Is all that these speculative additional sales to China priced in? I don't think so because it's like I said, speculation based. They haven't committed yet. So if you're trading it with that view that they are going to do it, you're speculating on a political agreement pretty much, and that's I think especially in this environment that isn't too certain. So I don't think it's all priced in, but that leaves me optimistic because I think some kind of deal will get worked out. I think China will try to make us happy in those negotiations and buy that. That's a big push by this administration right now. After the past year, farmers really aren't happy, so there's a lot of pressure on the administration to get a deal like that done. And that would buy a lot of goodwill with farmers, because of course it would get prices up, it would move product out, it would free up storage, for this new year. I think, I'm pretty comfortable with the call spread right here, long call spread, even though we've made a lot of good upside in the past week. So notable resistance coming up to that November level up there around 1172,
Yeah.
where are we 52 points away from that right now. So if you look at the expected move out until April 24th, that's a 60-point expected move. So, that brings us up to resistance there a little above it. I think overall it's a decent setup. Like I said, it's this call spread.
In this October, this was essentially the same catalyst, right? When we started hearing more about the purchases, and there was a lot going on with that discussion, and then those discussions sort of tapered off, and that's what we got the December into January move, and now we're kind of getting to it again.
Yeah.
I guess that's the real question: is this time the real deal?
Yeah, and the call spread at 1160, 1170, 73 days out. You're risking 1 to make 3. So max profit on that trade 350, max loss 150. Your buying power on that's 168 with a 40% POP.
Yeah,
that's a decent trade. I'll take it, and I like that you're buying into the trend. The trend is higher. I think you're going to get these profit-taking days where you'll get a little bit of a pullback, but right now that speculation I think is going to continue to build for that trade deal being made. And if those 8 million additional metric tons are added, I think you'll definitely see more additional upside.
Yeah, and this is also, this is all pretty low flat volatility. This is 15 across the board. So for those who are worried about, the idea, this is 31 IVR. Yeah, sure, but it's also fairly low volatility. Like if this thing doesn't even move and it doesn't go above your strike, on the volatility basis, you're not losing much. This might come down to a 13 or something like that, maybe. That's not a whole lot to lose in volatility. Really, it's just the direction. More than anything that you're playing it for. So, yeah, I like this. I might even try to just do too wide. I like a little juice, Thomas.
Yeah, a little.
Yeah, I'm going with 1160, 1180. See how it goes. If it really goes, it goes above that and makes new highs. And again, I like the idea of something with a catalyst more than anything.
Mm-hmm. Yeah,
this is more interesting to me than any trade that would be with wheat or with corn. I like it. Any other commodity stuff you're looking at? I know you're a big natural gas guy from time to time.
You know what? I actually got into a lean hogs trade. Actually, that's still working, but I'm selling a put spread 94.93 on lean hogs. That's HE. And you know, if you go back that the September high, the most recent high, that's around 94.5.
Mm-hmm.
So, you know, I feel like that could add some support. You know, we made that, you know, we got support from that earlier this month, end of January. We bounced from that level. Now we've sold off. This is the third day we're selling off from it, coming down to the 21-day moving average, EMA, which has supported prices going all the way back to December 1st. You know, so if you're trading the technicals, it looks good. You're trading horizontal support levels, that's there too. And, you know, once we get past February, you start getting some seasonality strength. So I feel with the 73 days out or 64 days out in this case, I feel like you're getting enough duration to start feeding into that seasonal strength. And, you know, live cattle prices, they're still high. Beef prices in the store, they're still high. So some of that demand, if it's destroyed, consumers might start looking more and more to cheaper products. So porks, when you're at the store, you know, you look at that ribeye, it's $50. You look at that pork chop, it's $10. You know, some consumers are going to start saying, you know, let's just do a pork chop instead of a ribeye. Those kind of decisions happen, especially if prices stay high for a second year. Now, consumers were really willing to put up with higher beef prices last summer. You know, I'm not sure if that'll happen again. If we're seeing this retail spending start to slow down, you know, we've had bad consumer sentiment the past year, but the spending has still been high. So the sentiment versus the spending, it's been disjointed. Now we're starting to see that align a little more. So consumer habits this summer might be a little more in line with sentiment that we've had. And I think maybe consumers will be a little more, you know, cost conscious this summer. So I think it could be a good summer for pork prices in this HE contract.
Yeah, this you know, it's I'm interested at particularly this level right here, 94.80. It looks like the level where you had, again, it's the top range, like you said, of the September move. It is also kind of the beginning of this breakout here, the beginning of January, and sort of it seems to have held this area. I wonder if it's going to test this with these moves over the next couple of days. If there's another down move, look forward to find support, I would say, at this 94, like 94.60 to 94, 94.60, I guess, 94 in the orders or something. Look forward to test that level. If it gets there, I'm interested. I actually want to sell a put at that level.
Definitely, and that's kind of the level I'm trading off of. So my prices are at 94, 93 for this short put spread.
Yeah.
And I think it's fine. I've been out of HE for probably a couple months now. I trade it more in the summer, spring, when it's a little more active. You're getting price moves. The demand is, you know, shifting around a little bit more. But I think it's a fine trade. So we'll see how that works out.
Nice. Yeah, and oil. Do you still have something in oil?
Oil, yeah. I got I've been iron condor in this one. Between 58 and 68. I've had it on since early.
Okay, yeah. So we
week.
did all do the same thing.
Yeah,
Mike has it. I have it. You have it.
Yeah, I think we're all pretty much aligned with this view here. So oil right now, you know, we're seeing a little bit of this geopolitical premium kind of come out of it. You know, we've run up a lot over the past month because of this whole Iran thing. You know, they had the big protest. They were, not sure if you saw any of the videos that came out of there. They're pretty gruesome.
No, I tried not to.
They were really tightening down on these protesters. And Trump, you know, he came out and said, you know, this is a red line. If they start killing protesters, that happened. So now we're looking for the U.S. administration to back up the crossing of the red line. We're building up military assets in the region. So, you know, the speculation is high that there is going to be some kind of strike, probably an airstrike. So the market's waiting for that. The longer we wait for that and it doesn't happen, you know, the harder it gets to hold this geopolitical premium in the product. So, you know, the calculus right now, I think, is for us to go back around 62, 63, trade around there, kind of wait if this is going to happen. The thing is, if you remember the Fordham strikes back in the nuclear facility strikes, we kind of the same pattern happened back then. We built the price up leading up to it because there was a lot of speculation. Once the strikes actually happened, that was kind of a sell the news event because the market said, all right, this has happened. Iran's response, they're going to do something. They're going to say something. They're going to talk a lot tougher than they actually are, like they usually do. And that now we can kind of sell this geopolitical premium. I think the same thing is happening there. So the fundamentals don't support a 70 oil price right now. Surpluses are building, stocks are building across the world. OPEC is committed to keeping production high. So, I really see prices staying in this 58 to 68 range, really more around like 60 to 63, I think. So we're trading 63.95, so pretty much 64. I think we still have a little bit more downside. So I'm perfectly happy keeping this iron condor on. There's good volatility in the product if you want to put it on right now. Last week I think we were in the 60s. Right now we're still 53, so not bad there. It makes sense to stay range bound, and that's the way we've been able to trade it for quite a while, is trading these quite wide ranges actually, and you get this nice high IVR to where you can really pick your spots and be tactical with it. It's been a good one to trade. I'm going to keep doing the iron condors.
That's absolutely it, man. I was having this discussion yesterday with Ilya on Overtime, and of course, I mean, he always has big box ideas, right? And again, I just trade price action for this point. I really don't read as much commentary as I used to. I feel like for me, it kind of forced me into trades or stick with trades that I didn't necessarily always want to have, as opposed to paying attention to price action. And just looking at price action, I mean, going back to October of 2024, it helps to pay attention to the current range that we're then, right? But when you see back here, I mean, again, geopolitical dust up situation and eventually fade within 30 days or less. Same thing here in January of last year. Geopolitical situation, fade within 30 days or less. Now, at the time, the baseline, or the fair value might have been about 70. You can see that just from looking at this and drawing a line through it, about 70, 71. Then we saw a new range formed, basically once April happened last year, right? And the new range basically put us at around 61 to 62, and that's been the area to sort of to trade around. And so, again, we had a huge dust up, of course, in June of last year, which was the really big one. But even then, that kind of eventually fades off too within about a month time period. And so these iron condors seem to be the way until otherwise proven to not be the way. These have been it. I do wonder if we're finding a new range. Again, that range for the most part has been around 58 to 60 on the high end. Now we're sitting around 63 if you just draw a line through the middle. And is that going to be the new range? I do wonder, just because, again, we've been hanging around here for multiple trading days. Only time will tell, but that's why I like our iron condors. I think they look good given the range of where it's trading right now. It's in the middle of that range. And again, the vol is a little bit elevated, so we're getting some good vol, and being able to do this directionally just really hasn't been the way. For a while there, if oil got below 60, you could easily buy it and ride it for like 3 to 5 handles. And that hasn't been the case as much now. I'd rather do that. I'd rather have it drop and then buy it, as opposed to try to fade the move here. Because again, you don't know what eventually leads to the big move up, even if it's short-lived. And that's the thing that I don't feel like doing. So I'd rather just have the iron condor. I think that's been the best way, as opposed to trying to play it directionally.
Yeah, I mean, I have the same view. It's been working. I'm going to do it until it stops working, So iron condors, I'll keep doing it for a while.
Folks, join us. Any questions in the chat? I see there's a couple, so it's time to get to a few of those. Someone's talking about TLT. Is it time to hop on TLT? Man, I have been the worst bond trader for the past year, especially directionally. I'm not exactly sure. And again, that's usually about the only way I feel like you can play bonds recently, because I mean it's really low IVR. Bond vol hasn't been much of a factor for almost a year and a half now, maybe 2.
Yeah.
And I mean, directionally is about the only way you can play it. I'm not going to lie. When I saw it at 115 the day before, I was like, oh, you could ride this to 116. And sure enough, that's what's happening here. But I didn't feel the need to jump on it. I don't know. What do you think?
Yeah, I mean, it looks okay. I'm not playing bonds right now. I don't think I have any position. Let me check. I might be in a ZN still. No, yeah, I got out of that last week, so I'm flat on bonds.
I honestly just don't know. I know the things that are supposed to move bonds. I don't know what moves bonds on a day-to-day basis anymore. Like coming into the day, I mean, I wouldn't have guessed that it would have had this big of a move, which again, 0.8% is a pretty big move. I wouldn't have guessed that it had this big move off of the data that we had today.
Right. Yeah, and that's the thing. Vecchio, he's like the guy who can tell you the auctions and everything and that kind of stuff. I'll watch the bonds like that. They give you some good trades sometimes. Most of the time, they're not the most exciting thing. I don't know. It's, we're getting this worse guy. I saw one thing Trump said in an interview that he could have made a mistake picking him. So, like, people are like, all right, is he going to unpick him? There's still technically, I think, time to do that. I think that would be horrible for conveying certainty to the markets and things like that. He did say the economy could grow like 15% or something like that under Warsh, which would be way too hot, of course. Everyone knows that. That would just lead to prices starting to go up a lot. Then the Fed would have to increase rates like some crazy amount. But yeah, I don't know on the bonds thing. I'm not, too confident to pick a directional play right now.
Neither am I, man. The only thing I would do is, again, if and when this happens, ZN and ZB get back up in IVR, Iron Condor. That's probably about it.
Yeah.
Other than that, bonds have been a no trade for me at all.
Yeah, ZN, you're getting 17.4. I mean, it's not too exciting. CB, it's even lower, 10.2, CB a big move up today. I mean, at the top of the range going back to January 15th. If you go before that, you're in early December. So, kind of looking at breaking out this range that we've traded in back to the range we've been in through September to November timeframe.
How many times, though, we've seen this? I mean, look at this, boom, 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 up, and then, fade. I mean, it just happens so many different times. I've gotten burned in a lot of these moves over the past year. That's why I'm like, I refuse to trade it directionally. It's not for me.
Yeah,
Just
if I do
can't figure it
something, it's usually the Iron Condor and usually in ZN, just a little more better product for my account being a little smaller. ZB is that bigger product. But, I think the ZN a little more connected to what the Fed does. But,
Correct.
ZB more to the economy and inflation outlook and ZB really moving up today. I don't want to take a position, especially before the jobs report. I don't know. Yeah.
Speaking of, what are your thoughts on economic data coming out later this week? Somebody's got that question. Let's see here. What is expected move? How much does that change? We got about 15 vol. That actually dropped. It was 16 yesterday. 69 points of expected move, so over 1%. Do you believe it or no?
I mean, I don't know. I mean, it's like, are we going to get into a place, I think, where good news has to be good news for the market? If you get a stronger jobs report, yeah, it takes away from those rate cut bets. But, what do you want right now for the market? Do you want a stronger economy with a resilient labor market? Do you want some of those cuts, which, aren't really going to even work their way into the economy for 12 to 18 months?
Can we even trust the data? I mean, is the data even meaningful? That's the hard part.
I trust it as much as far as the market trusts it. If the market's reacting to it, I got to play ball with that.
Yeah. Hood. Somebody's asking about that one. Double calendar in Hood. We've had a little bit of success with the double calendars more recently. 8 points of expected move. This is tonight, right? Yeah, tonight.
Yeah, it's after.
I mean, this one has really suffered most recently. I mean, obviously, you can see that their fortunes are tied to crypto, right?
Yeah.
And
transaction revenue.
Yeah, yeah. It's been a pretty big fall more recently. I mean, this stock was as high as what? Yeah, 150, 160, which coincides with, was that October? BTC. I mean, there it is. It just shows you everything, right? And they know that. Ooh, it's a tough one. I bet there's been a lot of internal discussions of, how much are we going to move away from crypto or, diversify? I bet there's been a lot of internal discussions on that.
I mean, they're going hard into prediction markets. They've added a few features like parlay bets and things like that. So, it's a big market, but Robinhood, I do like that they have the really big client base that they could easily convert their customers into these prediction markets. But at the same time, crypto has just really decimated this stock recently. The past month, you're down 26%. I mean, that's pretty big for a company like, 78 billion market cap. You're down 26% over the past month. That crypto, it's really, really hurt the stock. I think it's going to be important to listen to what management says today on the call. It's just, I don't know about buying the dip here. I would rather buy the dip in things like some of these software stocks, maybe CrowdStrike, CRM.
I'm in CRM.
Yeah, I think those look like
now
pretty appealing price points to get in there.
Yeah. Let's hope so, Thomas. Let's hope so. Double calendar, I like it. And Hood, pretty cheap. I did it, as you can see, $1.15 for 2 calendars. So we're long the 100 strike call calendar and the 75 strike put calendar. So we'll see we'll see what happens out of this. See what we can make of it. But yeah, I mean, this is an interesting one. Let's take it to tomorrow or even the end of the week. But if we could get a nice little move, either way, we're kind of in this splash zone. It could work out either way. We don't get absolutely crushed unless there's a huge move to the downside, which would be ugly. Something eclipsing 115 would also probably take this out, but I'm fine with that. This is very cheap. I mean, $1.15 to own both sides of a move, it's not bad. Jamal wants to play Microsoft Recovery and looking at a call spread, thinking the March 27th, thinking the 435 strike might wait one more day to see if we can get a little lower. I mean, Microsoft it's been a tough play. And I basically have a position that's extinct, if you will. I think I had the call calendar. It looks like about 20 points wide. So the 490 was my long strike. Yeah, we put this on a while ago. Nothing doing here. To Thomas's point about the software names, this is obviously another one of them. This is one that's worth doing. Again, I like the idea. I'm not going to jump in because I already have CRM and ServiceNow, so I don't know if the selling is fully over in these names, and I don't want to get over leveraged, but I think it's definitely worth doing something in here. There's a multitude of ways. The 435 strike they're looking at March 27th, huh? This Feb is almost over. 135 there. What does that look like? 435, 776. Honestly, it's hard to say. I would, 440, I would say. Look at this, from this big breakdown, I think this was earnings probably, right? To this day. I'd even go a little higher and maybe a little further out. Maybe you can go, what does that look like? A 440 in March versus just April. $4 and change. You can do that even. I think the other one you were doing is like about $7. You could do that. You could go even, is there a possibility? This is a little bit too far upside, I would say. Now you're looking. If you really wanted to include earnings, which this might capture, I think this should capture earnings. If you really want to include that, and again, a lot of times when I'm doing these and they're further upside plays, I'm looking at, it depends on whatever you want to look at. Sometimes they're close, sometimes they're not. But whether you look at EMA or SMA, I have SMA. But looking at just different areas where you could start to see support, maybe around 465, right? And again, that's quite a bit away from where stock is here, but maybe that includes an earnings move. And so maybe you play, what's the 470? These are too cheap. The March, you'd have to go with April, maybe. Again, that's 485. So there's a bunch of different ways you can do it. You could do a Super Bowl. Those are And names like this that have been falling, though, I will say those can be challenging. Again, I have a couple of those on actually now. And MicroStrategies, those are challenging, and names that just can't seem to find a way off the mat. I think it would be a little harder to get one in Microsoft, especially further out. I mean, you'd have to almost go at the money short put spread, which is a little dicey right now considering, again, this stock is not out of the woods yet. I know there's been a bounce recently, but it's just not out of the woods. So, but there's a multitude of ways you can get long this thing. And I concur about the idea of getting long here. Again, this is one that includes 460, but does it get to 460 by May? I mean, that's about 40 points from here, 10% move. No, it's possible. At some point or another, I feel like there's going to be some positive news across the sector that comes out that causes these names maybe to jump about 10%. Again, most of these things are off like 30 to 50% off their highs. I mean, these are some big moves. They've gotten smoked.
Yeah, I mean, the pullback in like CapEx spending for hyperscalers and things like that has definitely hit the market, especially for Microsoft. You know, the company is so diversified. There's other things. The focus on AI, that particular segment for them, I think, you know, may have made this move overdone when you start to look past that and, you know, forward into all the things Microsoft has on its plate. I think it's good to buy some here. I just don't know the time frame. Is it going to be a quick turnaround? Is it going to be a slow grind higher? You know, we don't know. So, I mean, what is the catalyst at this point? I'm not sure.
I know, right? Got a nat gas question on the scenes. I've got a natural gas Feb 14th put. Or you must mean 14 days ago put, I assume. Put spread 340, 320. Yeah, I've been in this position before, for sure. Been rolling out for a while, turned an iron condor and took off the call spread. Yep. Considering rolling out to avoid the $750 loss. Thoughts? I would. That's what I did.
Yeah.
I did that a while back. I was lucky enough that we were down here. And again, I had to, you do have to keep in mind, you know, this is 10 cents, obviously lower. You might need to, when you're rolling, you might need to adjust a bit. You got the 340, 320. You know, can you got that credit? 330, 310. Yeah, you might need to adjust some, given, again, this is 10 cents lower than the near term, almost 10 cents. Yeah, no, it's 10 cents lower than the near term. So you're going to have to adjust as well, just kind of to account for that. But certainly, I mean, look, if nat gas happens in waves, right?
Yeah.
And so, again, I was lucky enough to roll in January and lucky enough to be able to experience this cold snap, although it sucked actually going through it. This is what saved my position. I was able to get out for a scratch. And so if you're lucky, maybe you'll get another move and you're able to get out for a scratch too. But yeah, I would roll it once again. I know you've been rolling. Keep on rolling.
Yeah, keep doing it at least one more time. Kind of the same position I'm in. I'm in the natty gas trade. That's the first one in 3 that I think hasn't worked out. At a short put spread 3.4, 3.5. You know, we're at 317 right now on the H contract. Yeah, I'm going to have to roll it, do the same thing. You know, we're coming to the end of this withdrawal season, you know, so weather starts to get milder, stocks stop declining. Last week's draw, it was really big. I think it was a record 350, 360 billion cubic feet, somewhere around there. It really took us more in line with where we were this time a year ago. We're not going to get that again this week. So, you know, really the only hope right now for starting to get into a late season rally is the weather really turns cold again, get one of these polar vortexes. Otherwise, you know, exports are already as high as they can be pretty much. So, you know, the weather is our hope right now if you're long.
Question for you. Thomas, thoughts on selling strangles and currency futures? Good idea, bad idea, better to be directional.
I mean,
and they're looking at, you know, some of these vols and some of these names right now. I mean, 39
high
IVR,
IV.
you know, 6B is 48. What do you think?
Yeah, I mean, I would do it in the highest IV one you could find if you can. I usually put the protective wings on and just do iron condors if I'm doing currency futures. But usually I'm more directional. So I mean, 6B is probably your best bet to do that, I think. We've been chopping around though. I don't know. I don't really love that.
Yeah, the thing that, and I know why you're looking at them. I mean, again, it's high vol. It's not that I mean, you're looking at selling, even just a casual strangle that I just put on right here, $618. You're like, okay, that's, you're risking 2 to make 1. The only thing I'm worried about is overnight risk.
Yep. Yeah. So with the short strangle, you're really susceptible to any kind of event-driven moves that push it up or push it down. And that's why I don't like it, because in currency markets, that could happen at 1 a.m. while you're sleeping, 3 a.m. in the morning. Anything around the world could go crazy. Especially when you're trading one of these currencies that is the main trading hours for, like the European session is, I'm usually doing other stuff than at the desk for that. So a short strangle, you always want realized vol to stay inside of implied volatility. And it could blow you out in one trade. So I don't do that. If I'm doing something, I do the iron condor, and that's just the way I operate for my account. But if you want to do it, I mean, just make sure you're watching your phone, you're watching the news, because anything can happen with that.
Anything can happen with that. Who knows what what Great Britain comes out and says overnight? There's no telling. And again, the thing about this too is that I personally don't like to sell strangles in things that are just such low implied volatility. At the end of the day, this is still a single digits implied volatility. I much rather sell a strangle in something like SLV right now, where it's like 90 IVR and continuing to come in. This is nice. Wow. Speaking
Make it worth it if you're
this is in the 70s now. Look at that in the Feb. This is working. I'm going to take some of this Feb off today, actually, at some point. I'm going to close this position out by the end of the day. This is real nice. Been holding on to that one for a while. It's been a rocky road at times, but it's working out, baby.
Been crazy.
Working out.
Been crazy. That one move we had in January. What was that, January 30th or February?
Yeah, the 29th maybe.
Yeah.
I think it was. Oh yeah, 30th. Yeah, you're right. Yeah, the 30th. I know. It's been a rocky road, but it's starting to work out really nicely here. I'm going to be closing this February position out today, so that's cool.
Yeah, but if you're doing short strangles, find something with really high IV. I mean, I don't know if currency futures. I don't know if it just gives you enough. So.
Yeah, I couldn't agree more. What's the best way to trade copper, in your opinion?
I mean, if you're trading the futures, it is a big product. So, if you don't have a very large account, definitely go defined risk. There is MHG, but there's not options on it. So, you're trading an outright there, and it's still a pretty big product. Your buying power on that is around $2,000.
So it's 1/10 the size.
Yeah. And, I mean, the way I do it is I trade HG, I go defined risk. Even the micro is too big for me and my liking. There is CPER, there is other things, Cameco, miners that you can trade. There's not that many of them. There's a lot more gold miners than there are, copper miners. But yeah, if you go with something, CCJ.
I've only ever traded, if I've traded HG, I've only ever traded calendar spreads. That's pretty much it. And those usually aren't too bad. That's about the same as trading. That's basically the same as trading MHG, honestly. It's $1,800 to do that if I went way upside or obviously downside.
There's COPEX, the ETF, BHP, Freeport. I said Cameco. I meant Freeport.
FCX.
FCX.
Yeah, as far as an individual name, that's usually a decent one. Again, the only thing about I always used to like trading FCX, and it's good to trade those names.
I've traded for years.
The only thing is, you just never know. Sometimes there's, just like Exxon, right, with oil. Sometimes they act like a commodity, sometimes they act like a stock, and you just never know. But yeah, those are a lot easier and probably a lot more digestible than trading, certainly the HG contract outright, or even sometimes a calendar or something.
Yeah, and FCX, pretty decent liquidity across the options chain. You can usually find something to get into. Sometimes it's light, but yeah. I just stay with HG to find risk usually. And I am in a position right now. I'm in a short put spread, 5.7, 5.75. I got rolled this actually. This is the February 24th expiration. Did not see that. It's a good reminder. I'm going to roll that up probably to 5.8 and go out to the 44-day. I'm going to do that right now.
Cool. What are my strikes for oil iron condor? It's the 58 and 68 are the short strikes, and it's just 1 point wide. So 68, 69, 58, 57 there. And seems like oil IVR is coming in a little bit. Still, it's probably going to come in a little bit today since there really hasn't been much of a move in oil here. Hopefully that position starts to come in. But yeah, that's what it is, man. Again, another somewhat quiet day. Looking at ES contracts, only 686,000 contracts traded. We're already at noon. We're going to be under 1 million today, it would seem.
Yeah.
We'll see how it ends up, though. But definitely kind of quiet here today. As it seems as though market is starting to look ahead to Friday for the jobs report. I think we talked about some earnings. Tomorrow?
Jobs report is tomorrow. Yeah.
Oh, is it?
Yeah.
Oh, I didn't realize that. Oh.
Yeah, it's tomorrow. It's
Oh.
It's because they moved it back, I think. So I don't know if there was a rhyme or reason.
I thought it was Friday.
Yeah, I don't know if there's a rhyme or reason for doing it tomorrow, but yeah, it comes out. I was almost certain. Wednesday morning.
I didn't realize that.
8:30 a.m. Eastern. Yeah.
Oh. Huh.
So I mean, it makes sense that we're a little light today because I think
Definitely.
before tomorrow, you're not putting on any big trades before a jobs report. I think that's usually how it goes before the jobs report.
sure.
A little lighter, a little de-risking.
For sure. We already talked about earnings. Hood is tonight after the close. ALAB, I know a lot of people trade that. $187. I didn't realize that. I don't know
Shopify
about
tomorrow
this thing.
morning.
Yeah, about this thing. I'm not touching it. Thing's crazy. Ford Motor Company tomorrow. Upstart has earnings. GILD has earnings. Zillow. Remember when Zillow used to be something? Wow.
Yeah.
Shopify. I don't know if I mentioned. I totally forgot to mention, but I do have some call calendars on in there. Got the 150, 160 in case there's a big move in there. So we'll see. Hopefully we get. I was trying to get downside in there too. I was actually trying to get some other calendars in there. I might get some put side calendars in there on as well. We'll see. Other than that, yeah, McDonald's is one. Humana. I already have Humana on. I have a diagonal on in Humana. So I'm in for it. We'll see what happens. But that's us. We're out of time. Thanks for watching this show. And we'll be back tomorrow, same time at 11 o'clock a.m. You want to talk to us, you can follow us or reach out to us on Twitter. I am at Jamal Chandler. Thomas is at FX Westwater on Twitter. And we'll be back here tomorrow, 11 a.m. Mikey will be back, so we'll see you. Come join us. Peace.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kaizen, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I got a good feeling. I got a
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday. We got a little bit of volatility this morning, and then we've been slowing down quite a bit. Just chopping around a little bit here now. But before we get into everything, let us know how you guys are doing. What are you guys trading? What are you looking at? What trades are you guys managing right now? And before we get into it, my brother Gus, how we doing today?
Doing good. Doing good. Yeah, it's one of those days where things are happening, but nothing really happens. Right. It's the market is one of the only places where such can be true. You can move up, you can move down, and just wind up unchanged. But there's money to be made in all directions.
Yeah, we're running in circles. Yeah, you're right. The market is definitely the one place you can feel that sentiment. I know we have NFP tomorrow, so maybe we get another spark of volatility for the second half of the week.
Yeah, circles indeed. Word to Post Malone. We got some interesting movers to discuss today.
Yeah.
I would like to kick things off with Paramount.
Okay.
Who have even further sweetened their deal with Warner Brothers now. So Paramount, we have quite a volatile stock chart over the last year or so. This is a weird chart where Liberation Day isn't even near like the lows of the lows. Usually when we look at any chart over the last 365 days, you're going to see the April 2025 dip as the lowest point. That is not the case for Paramount. I have been long Paramount since the $10 ballpark right down here in this dip. Mm-hmm. We had all types of compounding bullish news here. These two initial run-ups were due to the UFC acquisition, which also bumped up TKO Group alongside it. Very similar pattern here, although they have yet to give the gains back. And then we began to moon as it also looked like they were going to land Warner Brothers in the beginning.
Yeah.
Warner Brothers elects to go with Netflix. Things move down. Paramount sweetens the deal a little bit. Things move back up. We've kind of ran down since then. So Paramount currently still offering more money at $30 a share, all cash for WBD. Netflix, to round out the saga here, Netflix originally opened with a deal worth $27.75 a share, and it was something to the tone of $25 a share in cash and then $2.75 a share in stock. Don't quote me on those exact numbers. Netflix has now stuck to that same amount, but has pivoted to all cash to try to be competitive with Paramount.
Okay.
And Warner Brothers has stated that they plan to go with Netflix. Paramount then got even more hostile and increased their offer a little bit to where it is now, $30
Sweetening the
share.
pot.
Yes.
Sweetening the pot a little bit there.
And that created some problems because it's a clearly better deal, but Warner Bros. Will have to eat they call it a ticking penalty if they were to now pivot away after committing to Netflix and go with Paramount instead. So what Paramount has done is decided they're going to throw even more money at this thing, and they've said, we'll eat it. We'll pay the ticking penalty for you if you'll switch to us.
So what do you think they're trying to do here? I don't have too much context on it. Are they trying to see what the real issue is here? Because they're going to be like, well, if we pay the fees, why not still?
I think so, because that was the most recent development, was they had said that they were going to essentially sue Warner Brothers if they went with Netflix for misguiding their shareholders or something to that end, because they were straight up choosing a worse deal. It is $27.75 all cash versus a $30 all cash.
Yeah.
Why would you choose the $27.75? And so, yes, I think you're thinking the right way, that they are thinking the only hurdle that remains is that Netflix could say, well, no, we weren't screwing our shareholders over because there's this fee that Warner Brothers could say, we weren't screwing our shareholders over. There's this fee we would have had to pay. And so now Paramount's saying, don't worry about it, sweetheart.
We got you.
We'll take care of that fee for you.
We'll give you a little bonus in there alongside the fee. No, that's really interesting. I don't know if they're trying to get in with some legal stipulation.
I think so. I think that they are trying to take away any reason that Warner Brothers could say we went with Netflix for XYZ. Right. They're trying to take every single thing off the table.
Even if they don't get the deal at this point.
Exactly, yes. And perhaps they're even thinking down the line of, if we do this, Netflix will have to go higher than us, and that will hurt them.
Right. And at this point, it's like, if we don't get you, we're going to cause some chaos.
Yes, exactly. Warner Bros. Currently trading at $27.82. So Netflix is pretty much right on par with current share price. Paramount would be a little bit above it. We almost touched $30 around the time that it was looking like Paramount. I guess we did touch $30 around the time it was looking like Paramount was going to land this deal for $30.
Yeah.
Efficient markets do efficient things. So yeah, this just becomes a more and more interesting situation. This bidding war for Warner Brothers of all companies. Their IP is very valuable, obviously, and that's why both companies are most interested in this, is to get access to all the IP on their respective streaming services. I begin to ask, though, at what point does Paramount go too far here? Like, at what point could they lose on this?
I don't know. They seem a little bored.
Yeah,
I feel
this is incredibly hostile. One of the more hostile takeover attempts we've seen in some time.
I mean, there has to be more to the story that we don't know from like a public view perspective. Like, there has to be a lot of opinions, thoughts, personal thoughts and opinions behind the scenes with a lot of these deals. So I wouldn't doubt that, they could be having those conversations, because I mean, at this point, why else would you want to be tied up in those conversations? Maybe it's a conversation to try and stay higher up in the SEO longer as possible. Just milk this SEO cow as much as possible. I don't know. I don't know what the deal is. I don't know what the strategy there is.
Yeah, and they feel like there's meat left on the bone with some of these IPs, and with some of them there certainly are. I mean, Warner Bros. Has some pretty much timeless IPs at this point. Harry Potter, chief among them. Scooby-Doo also fits into that
some
mold.
OGs, iconics.
Lord of the Rings is under their domain. So there is stuff that will definitely still have some value down the line.
For sure.
But there's also a lot of, like one-off shows that it feels like 80% of the people who are going to watch that show have already watched it. Yeah. So it's interesting how Paramount is choosing to price all this in, but they want it bad is what we got. You did hear it. Don't worry about it, sweetheart. Stan, yes, one of my favorite quotable moments.
What if they didn't even really want it, and Netflix is like, all right, they got to cash out.
Netflix is like, you know what, we're good.
Yeah. That was a very tempting offer.
Yeah, and Netflix. And perhaps the one thing that is still left on the table that Warner Bros. Could cite as to why they are choosing to go with Netflix is that Netflix only wants the IP. Paramount wants everything. The full distribution network, the physical facilities, all of it, while Netflix just wants the IP. And so Warner Bros. Feels and have expressed that they feel that it would be easier to clear antitrust only giving up the IP and not giving up everything to this other company. But I think it's hilarious that antitrust could come into play anyway when there's two giant bidders. It's like, if Paramount absorbs this whole thing, Netflix still exists. And vice versa. So
sounds like it's a massive play for like just going down as the legendary family name,
Yes.
depending on who's going to end up with the biggest assets at the end of the day.
And the
So,
Ellison family is,
yeah.
is definitely throwing down in that regard with Oracle being aggressive with their TikTok acquisition and all that good stuff as well. As you guys know,
they're playing a pretty big game here.
They are.
Good
They are.
Lord, that scale, right?
Yes,
That's wild.
and I've touched on it multiple times, but I am long Paramount. Originally, this position was 10, 15, 20. I have since liquidated the 15s, playing with pure house money on these. Got rid of the 15s up around the 20 range. Those were shorter dated. I didn't like the way that I had done that, so I was happy to get those 15s off once Paramount was up eclipsing $20 for like a 3x or something. So house money here, essentially at break even. I still do think it will be a great year for Paramount, whether they land this deal or not. I think the UFC acquisition is going to pay some dividends for them, literally and figuratively. But yeah, that's where we're at on that.
Yeah, the fact that this is such an antitrust thing, but Disney can own everything is wild. Yeah, I mean, I'd have to argue again. Like, let's call a spade a spade. I think there's a lot of politics that go into business at a very, very high level too. So I think certain things that they allow to go through has a lot of personal opinion and thought behind it. Just like, again, whenever Chris Paul was trying to go to, I'm blanking on it. Chris Paul was trying to go and play with
Hornets to
Kobe.
Lakers, yes.
Yeah, Chris Paul was trying to go and play with Kobe, and they blocked it.
Yes,
yeah,
David Stern blocked it.
Absolutely, they blocked it, and that's political, right? Because later on we see LeBron going to Miami.
Absolutely.
So human nature
changed.
Yeah,
KD to Golden State. It's
100%.
all
Put that in basketball terms, but for real, same thing with the market here.
Yes. Yeah, and what's going on, everybody? Didn't mean to ignore you guys. What's up, Ranch? Destinies?
Yeah, what's going on, guys? What are you guys looking at?
J-Fan, Jared, happy to see all of you. Yes, so I see MicroStrategy mentioned. Let's talk MicroStrategy for a moment as Bitcoin continues to tank. Well, continues is a stretch. Has stabilized a little bit.
A little bit. It's not sliding as fast. It's slowing down. I think Bitcoin took a little bit of a pause, maybe helping MSTR and the rest of their shareholders quite a bit because it's been a rough couple weeks for them.
Yes. Yes, MicroStrategy and their CEO, Michael Saylor, have said that when asked in an interview this morning or yesterday about how they plan to deal with the debt that they're taking on due to them being so in the red on their Bitcoin position at this point, Saylor literally threw his hands up in the air and said, "We'll just refinance."
He had that answer prepared.
He had that locked and loaded.
Ago.
He said, "We'll just refinance." So yes, they are buying more at these lower levels, which, as much as I have crapped on this strategy, that is what you must do at this time. You're all in on Bitcoin. You're not going to be able to
AKA double down.
A massive loss. Yeah, you might as well average down, see how low you can get your cost basis on the precedent that you believe Bitcoin is going to get back to these highs, which they clearly do.
Yeah.
So IBIT and MSTR have joined the dip buying opportunity of 2026 list. Yes, absolutely. Bitcoin, I don't know. I'm getting a little too scared now.
It's getting to that point.
I'm already deeply long and deeply red IBIT. One of the worst positions in my account here. Have 3 different naked calls rocking an IBIT.
I was looking to
ideal position to be in.
I wanted to get on a little bit more long delta at these levels right now. They seem a lot more attractive, but it's a tough trade. Yeah, I mean, I'm on the side. It's tough to even pull the trigger to get in long, like at these prices. So it's a tough one.
Yeah, I mean, if I was going to do it, I would just do the same thing again.
Well, yeah,
I would just add some more leaps, another gamma play, and just trust that there will come a day when Bitcoin gets juiced $10,000 to the upside, and I'm able to get out of everything. But I'm beginning to trust that less and less. So I'm not entirely sure. As I've noted before, Bitcoin is a fiat currency. It's not real. we assign the value to this thing. It is a little bit more than a fiat currency in that there is a finite amount of them, but at the same time, we are the ones that are assigning the value to this non-tangible, non-fungible thing.
Yeah.
Last little bit of news that I wanted to touch on today is UPS, my alma mater. For those unaware, I am a 4-year UPS store veteran. That was my job all the way through high school and into my freshman year of college. Still deeply loyal to the franchise. UPS is on a good run, and I think that it's so funny. Why? The reason is because they now, for the second time, they're trying to take down some headcount, is the idea. UPS drivers are very unionized through Teamsters. So it's hard to get rid of headcount when your drivers are unionized that heavily. So they have decided, they've done one already, and then they just announced another one in their January 27th earnings call, that they are going to buy people out. They're giving one-time buyouts for drivers who will quit. They're trying to reduce driver headcount by 20,000, which is considerable.
Yeah.
Teamsters, the first time that they did it, and again right now, are very upset with this and are saying that it's illegal and violates the terms of the contracts with Teamsters. I'm not going to sit here to pretend to know the ins and outs of the contracts that they have with Teamsters, but UPS is not forcing people out here. Nobody has to take this buyout and leave. It's not, they're not stepping on the union or intentionally trying to cut union employees. They're trying to cut headcount in general, and that in turn is they're doing that with a buyout. They're not even just forcing people out the door. So TLDR, they are rallying because Teamsters said we're going to sue you, and UPS said do it. Yeah, that's why. And the market respects this type of bold business strategy, I suppose, where they're just like, do it, take us to court, strike in the streets. We don't care. We're going to do this anyway. This is now the second time that they're doing it. The threats were empty from Teamsters the first time around, so we will see what winds up manifesting this time.
I mean, as a shareholder, I feel like that would boost my comp. What's that?
I'm getting signals here.
Oh yeah.
Oh yes.
I think the shareholders seeing the level of confidence and being like, bet, definitely will boost the sentiment overall.
Oh man, that was not very smooth of me. They're showing me signs through the window. We have been upgraded to a full hour, guys.
Oh, there we go.
That's the information that has been transmitted to me here. We will not. Thank you. We will not be cutting at 12:30. We're gonna run all the way through to 1 o'clock here.
I didn't want to hit the.
They were showing me a handwritten sign through the window, and I couldn't read the last word. The context clues were there,
Said help
but
me.
I couldn't quite piece together the handwriting that was happening there. Anyway, so we've been upgraded there. So yeah, UPS being bold. I will say this is vindicating to me personally because in maybe 2023 there was a big Boeing strike through the union.
Yeah,
and I said the whole time that I think. And the market was responding very negatively to it, obviously. Striking employees is bad for business. And I kept saying the whole time
I'd say so.
Yeah, I kept saying the whole time, I was like, Boeing should just nut up right here and say, no. We're like, we're not going to comply with this, whatever you got to do. And let me just say, I understand the importance of unions. This is not a anti-union sentiment that I want to carry.
Put the disclaimer out there.
Absolutely. I'm just saying in a cutthroat capitalist, stock market context, the market is going to respect it more when you just put your money where your mouth is on these things and find a way through. And so this is very vindicating to see with UPS as they are telling the union to shove it and things are moving up. Not an anti-union take.
So you hate the union. I'm just kidding. So, no, we're seeing a lot of volatility here. I mean, UPS is screaming to the upside. A lot of confidence in these shareholders over here.
I have PTSD from contract negotiations with unions. Teamsters don't want to play that game. Flower, let's go. Yeah, guys. Appreciate the hype in the chat. Oh, goodness. Anyway, that's kind of the breaking news that's going on for the day. What about ETH? Yes, ETH. And we've touched on this briefly on the show before. I think the rotation back into ETH could maybe happen quicker.
Yeah, you think so?
And that's sort of a baseless claim, to be honest with you, but it just hasn't been hit as hard as what we're seeing with Bitcoin. Ethereum is at Liberation Day lows. Let's look at ETH directly, actually, so I can better assess things here. Yeah, Ethereum is at Liberation Day lows, dating back to last April, actually still well above those levels. We were talking 1,600 level at the time, and we're at 2K. Whereas with Bitcoin, it's considerably lower than those levels. We were talking about lows of 76, very, very lows of 74 back then, and we are at 69. We're testing sub 60 over the weekend. Is that those right dates? End of last week? Whatever. Recently.
They're mushing together, yeah.
recently, we're testing sub 60. So the sell-off has been more aggressive with Bitcoin, and that sort of, relative stability in Ethereum kind of makes me maybe a little bit more confident, but I am not a crypto expert.
Yeah. I mean, it's been taking a little bit of a hit, but I mean, I'm liking Ethereum. Bitcoin still kind of feels like it's in play. We'll see if we get a little bit of a short-term bottom here.
Indeed. So yeah, that's kind of what I've got going on here. Liquidated a few winners and a few losers earlier today.
What's VIX looking like right now? Where's VIX at?
Half of my Resolute. Still holding the other half on those calls. VIX, good question. Popping a little bit, 1740 ballpark.
There you go.
Nothing too crazy. We can go a little bit shorter term here. See a little more action.
See vol speeding up a little bit here as we speak.
This last hour here.
Yeah.
ES likes the 69.75. I traded UPS October to December. I was like, OCT, DEC, what kind of contracts are these? Like an OTC, it's a different thing. October to December did very well for me. Good. I presume you were short? Oh, no. Is it? So we were just looking at, it's the 1 hour.
What is that one, UPG?
What the heck?
Oh, UPS.
Yeah, okay, yes. Long October to December. Very nice, very nice. Caught a nice gap there. We can pop over, have a look at the E-minis.
Yeah, things
just channeling, man.
It is channeling. I mean, it's always teasing the lows. It's always teasing an expansion in volatility. It's always teasing us breaking out of this range here. I mean, we're picking up on the volatility a little bit, heading towards the midday lows and morning lows, but nothing has sustained so far. Nothing has sustained this year so far, right?
Yeah, you can see where that volatility is coming from here. These are 10-minute candles.
Yeah.
Rare time frame for me. I don't know what compelled me to just throw this on, but I think that's a.
I mean, you're scalping right now.
69.75 seems to be holding.
Yeah. No, taking a look at SPY here at the same time. It'll be nice. Get an increase in some implied volatility, be able to sell some of the SPY and QQQ contracts for a little bit more juice, hold those for a little bit longer. Don't have one of those on in the portfolio right now, so it'd be nice to throw some on in there.
Yeah, absolutely. Lots to look at. And then, Rivian. I'd be remiss.
Good old Rivian.
I didn't touch on Rivian.
Yeah.
The Chicago Auto Show had an astute lack of Rivian.
They did.
Stuff.
Did we see Rivian?
We didn't.
I don't think we did see Rivian. There was Tesla. So Tesla did take the show in terms of the auto show for the EV space. Yeah. I think there were more EVs in terms of like some of the Broncos or
and everybody was showing off their EVs,
right?
The models that they had.
Right.
Volkswagen was really leaning into the EVs.
Were they? Okay.
Those were pretty much.
I'm kind of shocked not seeing the Rivian though. Again, not too far from here. There's a Rivian garage with a bunch of Rivians, being serviced.
Yeah, you got a showroom right there. Just take it and throw those.
They're a real player in the game. Again, like Rivian used to be one of those names where I was like, we might have a competitor with Tesla, but Rivian now is one of the, they're pretty legit.
Yeah,
they made some strides in the space.
On the day. Longer term, still pretty beaten down. But if we go longer term, this is kind of what they do. It's these huge run ups, big sell off, and then eventually they'll make another leg back up. To zoom out even further, give a little bit of a better picture of kind of what's happening out there. Some weeklies.
All the rest of the shareholders are like, you knew here, you freaking out about this volatility. You knew.
Yeah.
They've been sitting in that for a while.
Yeah, it's test, go, and then I'm sure we will start a new cycle of test, go around this 2250 level where it's found some stability here. But yeah, I was joking with Errol. I was ready to give Rivian the greatest plug in the world. I'm obviously very long on this company, and I am a believer in Rivian as a company. I was gonna stand there with my microphone and be like, "You guys want an EV investment that's gonna take over the world?" Look behind me.
Look no further.
at these beautiful vehicles. So yeah, missed opportunity for them. I would have happily given them some free promotion. What's the next political announcement? Bonds? I do not know.
I don't know. We'll see. I think that's kind of on just a coin flip.
Yeah.
At this point with our administration, so we'll see what kind of headlines we'll get next. I know we have NFP tomorrow to look out for.
Yeah, bonds actually taking a little bit of a leap today.
Yeah.
Interesting. Bonds. Just too boring for me to care about, man.
Maybe bonds.
That's honestly where I find myself on bonds.
What's Oklo been up to? Nuke or Oklo? Yeah, Oklo.
Yeah, we can have a look at that. Let's get some scope.
Let's get just a little bit of scope.
Yeah.
Check out the scenery.
Still kind of beaten down, finding some good resistance. This 65 to 70 range historical resistance dating all the way back to mid last year. We got what kind of astrology we got going on here? It's like one of those I Spy books when you're a kid. I see head and shoulders.
Yep.
Here, let's manipulate the chart so that it looks even.
Actually,
clearer.
that one.
I see head.
That one actually looks like a Christmas tree. I'm not gonna lie.
It does, bro. We got a rocket ship formation here.
Yeah.
It didn't blast off though. Honestly, but it had to. You see, the rocket ship has to finish. And this is actually rocket propulsion that you're seeing in this range. So that's going to be a neutral indicator.
Yeah, well, SpaceX and the Elon boys need to watch out for Oklo.
Yeah, if you
get ahead of the curve.
See SpaceX do this pattern, guys, get long. Oklo Leap's looking super tasty. No pun
intended.
That's hilarious you say that because I use tasty as a descriptor for food fairly often.
Do you?
Yeah, and
it's not in my vocabulary.
Yeah, that's in my vernacular, and I'll throw that around, and it's
Tasty. It's just kind of funny.
Oh,
tasty. It's tasty.
Lost my train of thought there for a moment. I say it around the office, and people are like, "Oh, I see what you did there." And I'm like,
you can't use.
I really wasn't trying to do anything there, man. It's just.
It tastes good, bro.
I just like
it tastes
our
good,
lunch.
man. It tasted good. No, market's selling off down to the lows here. See if we can test this morning low.
That's kind of what we were just looking at with ES.
Yeah.
Slide a little bit. 1 day candle misleading here.
It is just a little bit.
Or, sorry. SPX is falling. There you go. Different.
Oh, snap. XPX falling. Yeah. I don't know about that 7,000 level.
69, 60 level. Yeah. Can we just get a clean break over 7,000, please? What do I got to do? We've tested it. We've tried. We've eclipsed it briefly. We can't hold it. I wish we would. I feel, in a psychological context, the second we can actually get a confirmed break and hold the day over 7,000, suddenly 7,000 becomes the bottom that we'll be bouncing off of. But it's just been the top for so long.
Jared said, I keep saying it, Oklo's one government contract from being 200. And honestly, Jared, I mean, just from looking at from the chart perspective, I mean, I don't doubt it. That thing moves very sporadic. And I mean, I haven't been keeping up with the fundamentals like yourself, but any positive catalyst to something like that, I mean, you see how it can rip towards its highs. I'm not sure what the float is. I'm not sure what the market cap is. I'm not sure what the average volume is traded on that underlying. But nonetheless, just from a visual standpoint, it does look like it catches a lot of momentum whenever it does. Some stocks tend to have their own kind of personality, and Oklo seems to be one of those.
It's true. CoreWeave also definitely fits that bucket. We're not totally thought I was.
Fig 18 million volume up 11%.
Is that the stock company? No, Fig is Figma, the graphic design company, I believe. Unless they also do things with stocks. But yes, I recall this, the move that this took off IPO. This is one where, I feel that any trader will say, anytime your friends who don't mess with stocks start talking to you about a company, that should be a bearish indicator to you. And this was one of those where one of my buddies, who's a very smart guy, but does not even dabble in the stock market a little bit. All of a sudden, when Figma was off IPO, and it was right around this big red candle on day 3 post IPO, he's like, "Oh man, Figma! Should I be buying Figma?" I was like, "Yeah, no, bro.
You're good.
Please do not buy Figma.
You're good, bro.
And
you can short though.
We've returned to a much more reasonable level here.
Shorting stocks. Do we have any mixed thoughts or opinions on shorting stocks? I know sometimes there's opinions.
Shorting shares, you mean?
Yeah, shorting shares, shorting stocks. Sometimes it's
just getting short.
Just shorting shares, I would say. Overall, I know it can be taken very personal.
I think there's just better ways to get short exposure in the options market. But I mean, I'm not opposed to shorting stocks.
Oh yeah, no. The only reason why I bring it up, I was reminded. I remember sometimes people on social media don't really like the idea of shorting.
I meant socks. I know Fig socks. I'm not familiar with Fig socks. In that case, I am certain that it is the graphic design company. Yeah, shorting. I don't know. I mean, I think that there's definitely some merit to it. What always kind of scares me a little bit is trying to really get short. When people start saying, "Oh, this thing's going to go to zero," it's like. I don't know. We saw what happened with Bill Ackman and Herbalife. That's sort of the most recent Herbalife. Mm-hmm. Somebody tell me. Pretty sure it's Herbalife because it would be herb, right? But that's sort of the most recent instance we've seen of somebody really getting big and saying, this thing is going to go to zero. Michael Burry has made some headlines recently with shorts on Palantir and NVIDIA and calling AI a bubble and comparing NVIDIA to Cisco and crazy things like that. But at no point does he say that that's going to go to zero. And in the world where AI holistically is a bubble, which I don't believe is the world that we're in, then I think that's a very reasonable comparison. Cisco is, one of the more interesting stories in the market, has just recently been able to eclipse its .com bubble highs. How long can we get here? Can I? Yeah, I can't quite get back to 2001 here. Mm-hmm. Can we do
How far back can we go there?
Really not a good way to do it. I can't scroll any further than this. But yeah, Cisco, I believe 85 level was the .com bubble highs that we saw with Cisco. And so you could very reasonably, in a world where AI is a bubble, you could see that sort of pattern where NVIDIA doesn't fall apart, but it just sells off really hard. And then it takes 10 years for AI to really get there and take over the world before, those price levels become justified. But when people start saying, "Oh, this thing's going to go to zero," that starts to be a little bit too crazy to me. Except these buy now, pay later services, which are going to go to zero.
I'm on board with that completely.
Yes.
I'm on the same boat, and I'll drown with it as it goes to zero. I'm on board with that sentiment. But I will say I kind of have the same sentiment in regard to like something like Bitcoin. I think Jared made a comment not too long ago about how Bitcoin's too vested to go to zero now. I also believe the same. I think Bitcoin is a little bit too ingrained, especially even institutionally. There's a lot of room for them to still grab as much as they want, but I think it's something that is too. I don't want to say too big to fail, right? We've already almost seen 70% slashes in something like Bitcoin whenever we do see a Bitcoin slide back. But nonetheless, you can always refinance.
You can always refinance. Yeah, and Bitcoin is another one, like I've said, I don't think Bitcoin could go to zero. I don't think it could go completely away. But at the same time, I don't know that there's anything stopping the slide. That's what I keep coming back to is what is a fair price for Bitcoin? Is it 10,000? Like, who knows? We could find ourselves stabilizing around those levels. But I do think crypto is kind of the perfect analogy for what I talk about a lot in the AI space, though, where I don't think that cryptocurrency itself is a bubble or was a bubble now that we're beginning to slide. But I do think that, and we see all the time, it's the ones on the outside. Those are where you can start to get bubbly. Do I think Bitcoin could go to zero? No. Do I think Ethereum could go to zero? I don't. But could Dogecoin go to zero? Absolutely.
Yeah.
These things could completely.
Elon was really pumping the mess out of that thing. That's crazy. That's so hilarious to think back at it. What a time to be alive. We got people just pumping. We got the biggest personal brands just pumping assets on social media. It's wild.
Dogecoin really beaten down.
If
anybody's looking to get involved there, will we see a return to 30 cents? Who knows?
Yeah.
What's like an all-time high for this thing? 42 cents. I swear this thing was worth like $2 sometime, but maybe I'm crazy. Dogecoin is actually the biggest paper hands I've ever had in my entire life.
Tell me about it.
When I first discovered crypto and Dogecoin was like this funny name or whatever, it was like 0.2 cents or something. And I bought like $50 worth, like nothing crazy.
Yeah.
And then when it got to a cent, I had 5x, and I was like, "Oh my gosh, this is amazing!" And I got out and at that time, which isn't exactly a paper hands. I made 5x.
5x, something like
take that.
5x.
But then it was just mere months later. It was at 20 cents all of a sudden.
When you see the 50,000x, that 5x looks pretty minimal.
Yeah, this thing could have been 250x. Just roll $50 straight into 1,200 and have a nice little chunk of change. And this is while I was in high school, so that would have been some serious coin for me.
Oh yeah.
Don't say SoFi to near zero. I'm still on your Oglo graph. No, fear not, eMedia. I have no bearish takes on SoFi. I really have no takes on SoFi at all. I think they could be in a good spot. Actually, this is a good segue into something else I wanted to discuss. I saw today that credit card debt is at a new all-time high, which happens pretty much all the time. K-shaped economy, baby, woohoo! But
yeah, we're in that point of the cycle.
We're at 1.28 trillion in credit card debt now. And what I want to know is at what point do we start looking at credit card debt as like a legit large looming threat? Because if we default, say, and this won't happen, but say everybody defaulted today on credit card debt at 1.28 trillion, what happens in that circumstance? Obviously, most people will have some assets the bank would come after and get theirs back. But it gets to a point where a lot of American consumers have legitimately more credit card debt than they have equity in anything. These things are become not asset backed. The government would obviously bail these banks out, but we could find ourselves in 5 or 10 years in a situation where credit card debt starts to be something of a subprime mortgage situation. Although I don't think it could ever be to that caliber because of the at least marginal scrutiny that you must pass in order to get a new credit card. They're not just handing out loans willy-nilly on credit cards. Mm-hmm. I mean, to an extent they are, though. There's certainly some elements.
No.
Congrats on the 1 hour show today. I hope you both ate. I did eat. Do you eat?
I did.
Good.
I did.
Yes. Taco Tuesday.
I almost did a light one because I was like, I'll come. And I was like, no, let me just eat.
Yeah.
Let me eat.
Yeah, I got on it early today, so I'm good.
Yeah, I'm feeling great.
Yeah, feeling good. Flacco's Tacos is my favorite Mexican place, but actually, I think. I don't know. Dos Bros actually is really good.
For the taco place?
Yeah. They do. They have like a birria style beef thing. That's really good.
I haven't had bad tacos yet out here in Chicago, right? I mean, I'm not saying that. I'm sure you can. I just haven't had bad tacos yet either. I think all the places I've been recommended, I've been asking the right people. So I'm going to stay around talking to the people I'm talking around and, here in the studio too, because everybody has a good sense of taste. Yeah. Apparently, we're in the Tasty studio. I should have expected that.
If you don't have anything nice to say, don't say anything at all. That's what I'll say about the taco situation up here. That's been.
Oh, you're not the biggest fan.
I just there's never going to be. At least I have yet to.
It's valid though. It's valid.
I have yet to find anywhere here that can hang with tacos served to me out of a truck by somebody's abuelita. At $2 a taco. And it's just the greatest food you've ever had in your life. That's one aspect of Texas I certainly miss. It's going to be hard for any Midwestern state to hang with Texas in terms of Mexican food. But there's lots of other bullish things here too. Asian food at large is way better. Chinese food is better. Japanese food is better. Korean food and Vietnamese food is better. So shout out to that. The Vietnamese food in Houston was good though. Highest Vietnamese population in the United States. Fun fact.
I didn't know that actually. I actually got really into some Vietnamese food last year in Florida. Actually, really love me some pho. One of my favorite dishes.
Love some pho.
Love some pho.
Noodles.
Yeah.
Schwab. Yeah, really getting hammered here. I'm not sure what's going on with this. Let's all laugh at Schwab.
Schwab is tough.
Stupid.
I'm gonna retract that laugh. No, I'm just kidding.
Let's see. What do we? I don't know what's going on with Schwab. Anyone know? If anybody has information.
Yeah, not too sure. They're taking a pretty massive hit though. That's definitely not something light. I don't know. Maybe their Thinkorswim platform froze this morning. I don't know.
AI stirs concerns over advisory models. Broader sell-off in the financial sector. Sharp decline came after tech platform Altruist announced the launch of a new AI-powered tax planning tool.
Okay, so they ran into
growing concerns. Artificial intelligence is potentially disrupting traditional finance service business models. There you go. So yeah, okay. So they're saying the market is saying AI can advise people now who needs Schwab advising.
Okay, so
makes sense.
Financial advisors.
Yes, it's just AI. Yeah,
yeah.
I'm seeing it.
But it looks like the AI talk, the AI sentiment still has a lot of validity to it for Schwab to pull back that aggressively. So.
Market went all red. It did flip all red.
It did.
Hold on.
We're trying to hold on. I know we're creeping towards that morning low. We're 5-10. We're about 20, 30 points away from that morning low. Consolidating near our value area low on NASDAQ.
Yeah, Morgan Stanley was the other one I saw mentioned getting hammered on this news. And then, Top Archer here also saying IBKR down as well. Yeah, just a little bit, getting progressively better as we rattle through the list here. And Stifel. I saw this mentioned in that article as well. They're getting hammered. AI is bad news all around. I saw that commercial with Kalshi. I'm not sure what commercial you're referring to. Big deal. You mean the Kalshi AI commercial? They've done a number of commercials with AI now at this point. Some analysts think AI. Yeah, thank you. Or also Schwab raised dividend in the last week. Makes sense why Schwab is getting hit the hardest on that.
Some analysts think AI is going to affect financial advisory models, and also Schwab raised dividend last week. Yeah, for sure. I'm really curious to know how it'll affect, because AI for sure is going to take a massive hit to any. I feel like to most advisory, to a lot of advisory positions, right? But especially the financial advisory positions. Really curious to see how that's going to pan out.
I more or less did my taxes with OpenAI last year. It's, especially if you're just a individual filer or don't have a super complex situation. It's
I would say most people don't have super complex situations, right? And I think that was where the industry was able to reap a lot of revenue, is because of that, being able to take advantage of certain areas in high finance that seem very intimidating, but you could actually do it sometimes yourself if you put the time to learn. So I can definitely see AI definitely taking a bite out of that space. We'll see. We will see.
Is that you?
No, that wasn't.
Oh, okay.
I am trading over here, but that wasn't me.
There was a fill on the big boy desks behind us over there. That's Nick or Tony just made a move. Check the follow feed.
No, that was not. But I thought it was me for a second, because I'm kind of in and out here trying to figure out what we're gonna do here.
It's AI is just, and it was only a matter of time until this came to hit financial advising, right? Because I'll give you a company we haven't talked about in forever, Chegg, man. Look at this thing.
Oh my, bro! When I saw Chegg going down while I was in college, still, I was rooting for it because at that time I couldn't even afford my freaking books in college, bro. And then I see the Chegg ad pop up on my screen, and I'm just like, I'm not paying you, bro. Just give me. I just need information.
Yeah, I had a paid Chegg subscription while I was in college, but as AI began to come out, I started to lean more and more into that. Become more widely available, I guess is better to say. In 2022, 2023 is sort of when we really started to hit the ground running with these LLMs. And that was sort of the beginning of the end for Chegg. But then Chegg made the biggest blunder, in my opinion, by instead of saying we are real people, have real people help you with your homework. Instead, they tried to get with the times, and all the things just started saying answered by Chegg AI. And at which point I was like, well, why in the world would I pay $20 a month for Chegg AI when I can just use OpenAI for free?
A little bit of cannibalism there, you think?
I think so. I think that they needed to, and it's something I see actually YouTube creators doing a lot recently. Also, it's like at the beginning of videos, there'll be a pop-up that says this entire video was made by humans, AI was not used. Like I watch like animation style documentaries a lot, where they will animate like historical events. War battles is a big one that I like to watch. And people are starting to put that disclaimer in videos. I'm seeing it more and more, and I think that's good because particularly in the context of videos, but really at large, there are a lot of people who are starting to get sick of AI. Who AI slop is a word that's been thrown around heavily recently. And so I think that's a smart thing to do. And I think that's what Chegg should have figured out right at the beginning was we're not going to be able to hang with AI. These services are larger and cheaper and growing more multiple by the day. We should instead lean into the fact that we have humans doing these things. And if you want an actual human to work with you and give you actual help, you can use us. But they didn't. They just integrated OpenAI straight in, and then it's like, why would I pay for this behind a paywall when OpenAI is free, and it was pretty much completely free at the time. I pay for premium now.
It's kind of fun to break those things down, though. Do you think the industry just came upon them too quick and they weren't able to pivot in a fair?
I think they were making the best moves that they knew.
That they could, for sure.
Yeah, but it just I think it wound up being the wrong one. You're Chegg. You're a textbook provider. You can't try to compete with the OpenAIs and Anthropics of the world. Raymond Jones also trending. Holy cow, that's just as bad as Schwab there. That makes sense though, because they're more pure advising, right? Schwab at least has a brokerage side, generating them a little bit of revenue. Schwab/Claude? Schwab?
Schlad?
Claude
and Schlad?
Claub? We could go that way.
Raymond James, Chegg.
Chegg v. H.H. Gregg v. Newegg. I'm not familiar with H.H. Gregg. I'm definitely familiar with Newegg. But did Newegg do textbooks and homework? And
I'm not even familiar with Newegg.
I know Newegg is a computer parts store.
How so? When was that?
I think they're
just growing up in general.
I think they still do that now. But yeah, I definitely bought a number of my PC parts on Newegg when I was building that in late 2020. Which I'm actually going to be in the market for a new one recently, and I ain't building it. Yeah. I'll tell you what, I had my fun with that. I'm getting a pre-built when the time comes. But
no, in the same boat there.
Anyway, that's pretty much what I got on my end. You've been slinging any MNQ over there?
Yeah, a little bit. We can check out what's going on over here. Things have been getting a little bit active. We can do a little bit of quick analysis. We can jump over to the TradingView platform over here. And we'll take a quick look at kind of how this volume has been concentrating in certain areas for today. So we'll look at that together here. We could get that TradingView platform. I know the volatility in the market today, I know we have some larger value areas that we were looking at, and the time has spent most of its time inside those levels of value. And there were a couple times where price was coming to our edges of value for us to at least start observing what price is doing and what the order flow is doing, and if we're going to stay within value or if we're going to go and seek a new level of value. So again, a little bit more context. We've pretty much just been trading inside our higher time frame level of value all day. Right now, we're trading at our value area low, so we're going to be patient for that. And we'll see what we get there. Raymond James, I thought that was brokerage's money management. Wonder how they got lumped in.
Well, if it's money management, then that is the point here, is that they're thinking AI can begin to cannibalize that money management side of things. But did they have a brokerage? Is that a considerable revenue stream for them? I only think about Raymond James. Raymond James is a Merrill Lynch, is a Morgan Stanley sort of type of company to me, where it's like, it's pretentious. It's high rises.
Which one is that one? Like
it's 3-piece $10,000 suits. You know, it's that sort of.
That's the Charles.
No, I was saying Raymond James, Merrill Lynch, Morgan Stanley are sort of what fit that. Gotcha. And then Schwab has a considerable brokerage side, so I kind of count them separately. Is Merrill Lynch publicly traded also? IPB? Oh, no, this is just a product that they offer.
Raymond James has a niche brokerage. Yeah, every time I hear Raymond James, right, I lived in Tampa for 4 years, so all I literally think about is Raymond James Stadium. I think I lived like 10 or 15 minutes from that stadium.
There you go.
Roads getting packed up all the times.
They're
But
getting their money's worth out of it.
yeah, Raymond James is in my head 24/7. That's all I think about is a stadium that I lived right off.
It's
the
funny
Bucks,
how
man.
stadium
The Bucks.
deals will do that, though. I mean, I could rattle off like the name of so many stadiums, and they're all just companies.
Yeah.
Like the Bengals stadium is Paycor. I don't even know what they do. Is that publicly traded? Paycom. That's not Paycor. What are they doing? Freaking bad.
Taking a
Know
hit.
anything about Paycom? Is this worth a buy? Let's do companies that start with the name Pay while we're at it. PayPal. Still taking it.
Is that PayPal right there?
Yeah.
I was wondering what PayPal's been up to. They have not recovered at all.
What AI tool that will help me with my taxes through B of A? What about Intuit? That company sucks. Intuit.
Yeah, I think Intuit has one of the larger market shares, actually.
Yeah, Intuit. I'm surprised that's not getting at least a little sentiment bump on tax season coming up. You know, like sometimes even though it might not be justified, you'll see.
I feel like we usually see that
start to happen. Yeah.
Yeah, we might start seeing that after we get off the show.
It's a weird comparison to make, but we actually just saw a similar thing with Nat Gas, where it was like it's going to be really cold. Yeah. let's pump Nat Gas, and then it falls right back off. But yeah, surprised we're not catching any sort of sentiment move with Intuit. Perhaps that will start to happen as we move into March and get a little closer to tax day.
Yeah, we'll see what we get over there. We will see what we get.
And James has a niche brokerage. I see.
Very niche. Very niche.
Interesting.
Very niche. What's the high options volume watch list looking like right now? I'm curious to see some of the larger movers and which ones have some premium in them right now.
Where is that? I always have it, but then I can't find it.
Oh yeah, let's see. Drop down. Let me see. Liquidity. There we go.
Okay. There we go. I was looking for volume. Makes sense.
Same. Tomato. Yeah, TurboTax stinks. Yeah, I think they were just somebody that was able to provide a level of convenience to people first, so they got to reap a lot of the reward for that.
Yeah. It's just that's a really saturated area too now, and there's all kinds of sites that don't even do any advertising. They'll do your taxes. Last year I used Patriot Tax or something like that. I was looking for a service that could do a 1099 for free, and they had one. So yeah, there's all sorts of things out there, and they know. And that's sort of an industry where, especially if you offer a niche product like free 1099 filing that the other big dogs don't offer, you don't even really have to advertise. It's like people will find you. It's like how niche businesses often won't need to have a storefront.
Yeah.
Your dentist might just be on the third floor of some industrial park because they know that if you need a dentist, you're going to seek out a dentist. They don't have to be public facing.
That is true.
In fact, it actually kind of worries me a little bit when a dentist has like a giant public facing sign. It's like, well, how are you making so much money?
You're like, you don't like it too commercialized?
Yeah,
You like a little private.
I like it a little bit chill.
Yeah.
You can have a storefront with a sign. Like that's fine. The dentist I go to here has a storefront with a sign, but it's like in the middle of like a strip center next to a grocery store. Like there's like a bank and some other stuff there. But it's not this giant freestanding building, that's like a city block size thing with the dentist. I don't need that. Where are you getting all that money from? How much are you going to charge me to clean my freaking teeth? We got to keep things a little bit modest here. That's my take. It's pretty much just the usual offenders in the high options volume.
The usual offenders, usual suspects.
Your run of the mill stuff. Bonds are popping there. HYG.
I like FreshBooks better than QuickBooks. I don't know if that's a joke, but it is kind of funny to play on words there.
It's funny that there's TradingView. It's funny that you can't determine if it's a joke. That's sort of what I'm getting at with how saturated this market is. I saw a tweet earlier today from one of those like college football Centel accounts, where it's like it's just like a troll account pretending to be a news account.
Yeah.
But I didn't catch the username at first, and it threw out some name, and it was like gets approval to play 11th year of college football. And we're in a time where I had to Google this guy's name. Like I literally open a new tab, and I was like, is this guy really getting an 11th year? Because it's just insane. We've been seeing that happen to the point where I feel like I have to Google that.
You got to.
FreshBooks is also good. Okay, we got some corroboration on FreshBooks. The
Right.
jobs report tomorrow also have a big impact. It was delayed, so it's safe to assume it's not a good report. Didn't they cite the mini government shutdown as the reason for delaying that, or am I misremembering things? I know that they delayed a few things, even though it didn't really even make sense to do so with the timeline of the partial government shutdown. The average man dentist, yes, absolutely, Stan.
Yes. Great distinction. No, I mean, as we're getting into today, we have a couple levels of value that we're still paying attention to. Today's Tuesday, the market really hasn't ran anywhere yet this week. I mean, we had the breakout Monday morning, but after the breakout from Monday morning, we pretty much just been trading within a range. So a balanced area.
Yeah, the sell-off right here is like the most exciting thing we've seen this whole time.
Pretty much so far. That's what it's seeming like. I'm curious to see if we get another sell-off or if we're going to hold here. Right now, we're trading at the value area low, so we can either expect a reversal here or we can expect a sell-off. And if we do get a sell-off, we could get a pretty decent-sized directional sell-off to the downside, at least to 25,106. I mean, that's where we have more volume traded down here near this next value area high. So, I mean, the key point, again, whether you're wanting to get long or short, is just deciding on whether we're going to seek a new level of value here or if we're going to remain within this level of value. And if we remain within this level of value, more than likely we come out and take out these highs, right? I mean, keep in mind, we have NFP on Wednesday tomorrow, which can cause a lot of range-bound market behavior. So, I mean, something to take into account, maybe size down a little bit if you want to pull the trigger on anything until the second half of the week. But this is what we're looking at right now. We're kind of on the cusp, at the moment. And we're going to bring up one of the trades that we were looking at this morning, try to see if we can pay attention to both of these things at the same time. We only took one this morning. Let me zoom in over here. Go to the 15-second. We'll zoom in a little bit. Intuit is always too late. Too late in what? In terms of adding new features? Too late in terms of... I mean, I've used them a couple times. I've never had a bad experience.
Too late getting your return? I mean, there's a lot of too late angles we could take there.
Yeah, there is a lot of them. No, but we have our higher value area over here. And then if we take the value area that's been developing over the last couple of days.
Yes, Jeremy, I was talking about Intuit stock. I have no personal vendetta against TurboTax. In my filing situation, I could pretty much just use whatever. But yes, it is not that free. That is, you bring up a good point. Their whole advertising thing is these commercials where they say free, free, and then you get there and they're like, that'll be $19.99. Thank you. And they do it at the end too. And I stop when the first time they hit me with that. I was like, no, I don't care that I just sunk an hour of my time. You will not get a dime from me for this business practice. Okay, maybe I do have a vendetta against TurboTax.
Just a little bit.
Now that I'm talking,
I think just a little bit. Yeah.
Now that the therapy session has begun, maybe I'm uncovering something.
No, there's no judgment over here, brother.
Rooted feelings for TurboTax here, but yeah, there's just so many small providers that do so much for free. If you look. If you want some AI leverage for taxes, ask AI which tax service can do your specific situation for free. Because if you're under 7 figures of income and don't have a sizable business, I'm sure that there is one that can take care of your situation for free.
Yesterday, most of the trading activity occurred yesterday. So if we take this volume profile, I'm going to take it from yesterday. Let's go Monday morning. We're going to go from Monday morning all the way to the current trading price right now. So I'm going to go to the high, all the way to the current trading price. It's looking like 70% of the trading activity, or 68 point whatever, if you want to be very specific about it, 70% of the volume has traded in between 25,307, and in between 25,413 on NASDAQ. So whether we get any continuation outside of this range will be interesting. And we most likely have a little bit of expansion that we can see in price. But until then, it's going to be about just being patient. So we'll see what we get there. I don't want to chase any moves, widen the risk, and then just kind of ruin the momentum for the week. So just be patient. Keep risk to reward on check for the most part. But we have a lot of low volume nodes down here. So since we have a lot of low volume, it's not going to take as much aggressive orders to really send price lower. Because the less orders it has to work through. I mean, it makes sense. It makes sense logically if we really think about it too, because it makes sense why we get more range-bound action inside of value, because we have more liquidity, we have more volume, we have more orders, we have more stuff, we have more things to work through, more orders. And when we have a thinner layer of that, a thinner layer of orders to work through, it makes sense why we only need less volume to get us through these points. So With that being said, we will see how price responds at these levels, but we are at a pretty pinnacle point. We're consolidating at this value area low. We'll see what we get, but really just deciding on if we're going to stay within balance or if we're going to trade to a new level of value, which would be a previous level of balance. So that's kind of what we got on the day.
Yeah. That's apt analysis. I'd love to say I think we probably catch a bounce here on the day, but with this aggressive sell-off in the financial markets now, I'm not entirely sure. And I mean financial sector there. Let me correct, because obviously we are talking about financial markets. I mean the sell-off in the financial sector. Theta Trader, if you're trading options, you probably can't use a free service. I got a free service for you, Theta Trader. Lose all your money. Then you don't have to pay any taxes at all. Accountants don't want you to know this one simple trick.
Just refinance.
Just refinance.
Right? So if we make a new low in the day, we're just going to refinance
Close
together.
the year red, get margin called, give up your house, move under a bridge, and then if you live under a bridge for enough years, you can kind of get off the grid to where all you need is one home run, and then the government can't even find you. So there you go.
That's the playbook. That's the playbook.
I'm giving out free sauce here, guys. You know, most people would charge you for this kind of thing.
That's true.
If you want more sauce, subscribe to my Patreon.
Silver is trying to recover a little bit. I was trying to take a couple stabs at gold yesterday too, not overstaying my welcome in that asset. So we have silver over here. We can see had the first crack in momentum finally. Obviously, it was all over social media, all over TV probably too. I don't know the last time I turned on and watched TV. But anyways, looking at gold over here, we can see that from this swing high to this swing low over here, most of the volume was traded in between 5,122 on gold and then 4,653. So we've seen a lot of rejection around the value area high. We've seen a lot of support around the value area low. The market has spent about 70% of its time within this range. Is the market going to gulp and retest the highs?
No.
Maybe. I don't know. We'll see.
If you want one man's opinion.
No, I love it. I'll take all the opinions. But we have a lot of low volume in these ranges. So I think gold and silver seems to be something that's in play, but I think it's going to be a matter of knowing how we're going to play it, knowing how we're going to be patient. So we got to know what we're looking for, where we're looking for it, and then how we're going to execute on it if it does come, and then be okay with the outcome if it doesn't go our way. Yeah. With that being said, it does seem that gold and silver is setting up. It does seem that these metals are still in play. So we could still see a pretty large directional move. Wouldn't be surprised anytime within the next week or two.
Yeah, I agree. I'm just interested to look back at this, a year down the line and see what level we actually stabilize at here, what actually becomes the fair value here. Something I talked about a lot, throughout the crazy, silver run up, and as we were, 115 and getting crazy was, and gold too, same situation. Is that if you had physical gold or silver, the bullion buyers were not paying those amounts or anywhere close to them, and you feel like you're getting shafted. But it's because they were ready for some kind of move like this. And I think, honestly, if you are a holder of physical metals, this is sort of one of the best situations you could find yourself in would be stability somewhere between 70 and 80. That's still a considerable run up. You're talking about 2xing the value of those things since September. And if we get stability there and continued stability that lasts months and even into years, and then we just return to the slow growth pattern, that's right where you want to be. You basically get a free little 2x in 5 months right there, and then eventually the physical prices will actually rise to meet those levels once it feels more stable. Remember when silver was combo next year is going to be fun. Yeah, absolutely, Jared. That's what I'm getting at there. Yeah, and maybe it sinks back to 50 before we stabilize. I would be shocked to see us test lows. I mean, it is a slowly growing asset in broader strokes. But I'm just curious to see where the stability will land whenever it does eventually come. There's an old guy at work with too much money. We told him we'll get him into this new crypto thing. Just make out a check to cash, and I will give it to him for the spot price of 1 Bitcoin.
Sounds like a good deal. No, we'll see where Bitcoin will be headed after this. Really curious to see. It feels like Bitcoin and gold is a little bit of a different play for sure. But they do seem the same in terms of they both have a large leg down. And then since they put that large leg down, they've been consolidating and they produce a very defined range. So same in the sense of that, they kind of feel like they're in the same, kind of position in terms of where they're at in the auction. I don't know. I'm curious to see if the volatility and the hype from the metals can sustain after we get going again. I don't know. Looking forward to it.
I'd be shocked, but you all know all too well I was shocked the whole time. So I take that with a grain of salt for sure. I am far from the oracle of metals. I am the Kramer of metals.
Kramer. No, with that being said, we are running out of time here. We'll see how NASDAQ responds. We have our stops in right now at about 25,271. Keep in mind, we have the morning low just beneath that, right? Price likes to snag these highs and lows sometimes, so just be careful if price is getting near there. Always remember, you can always re-enter your position if you want to. If you get stopped out, you get stopped out, cool. But if the market dumps on you 50 to 100 points, you're not going to be happy trading the rest of the week. So might as well just take that stop, reposition if you have to. But just some of my 2 cents as I think through this position too, because even just thinking about putting a stop loss 10 points away from the morning low, just something to take into account for sure. We'll see how the market responds here.
Sure.
Anything else top of mind?
Yeah, I mean, a couple of names we can pop over and look at here. Spotify is flying here. Spot.
Spot.
Yeah.
Yeah. Let's see what we got. Some Spotify.
Is this earnings or? Oh, you're on 15 seconds.
We are. Let's
give me
go.
some context. Yeah, there we go.
Go.
Yeah, very, very nice little jump out of Spotify. I don't recall if they had earnings last night or not. And then Goodyear also mentioned GT. I don't know if I've ever looked at this stock once ever, but they are sliding hard.
Which one is that? GT?
GT.
Oh, that massive gap down, maybe off the earnings a couple days ago.
Yeah, but it's not really auto parts in general. I mean, AutoZone AZO is actually logging a pretty good day here. If you want to get a little more niche, Gates GTES is hanging on as well. I mean, slightly red, but nothing near the caliber of this Goodyear here. But yeah, it's because they don't have enough blimps. All right.
Yeah. They need maybe just one more. I do like a blimp. I love seeing a blimp in the sky.
I'll end with that. How many blimps are we at in the world right now?
Yeah.
It's like it's a shrinking number all the time. Let's do some
market makers will turn on the green algo soon. I'm hoping, Jared. Hopefully, we can get an afternoon rip. If we do, sometimes we see that, but if we don't, it's whatever. We're not going to force or impose our opinion on the market, especially with NFP tomorrow. But it would be nice to get an afternoon rally down near this value area low. So hit up those market makers for you, boy. Turn those algos on.
We haven't done a count of worldwide blimps since 2021.
And what is it right now? What are they sitting at?
In 2021, it was 25.
Okay,
that's the number that I've had forever. Blimp people, get on this. I need to know how many blimps there are. I need yearly updates on the number.
What's the reason for the low amount of blimps again?
It's just really inefficient. I think they don't.
So just the inefficiency.
Yeah, it takes a lot of gas, and they don't take you super far.
Okay.
Put a whole
or fast.
Yeah,
it's like private jet, not very efficient, but they get you there quick.
Yeah,
get the blimp. It's like, bro, they're expensive. They're this. They don't even get you there fast.
Yeah, just a good advertisement. But that would be my advice. If I'm a C-level executive at Goodyear right now, I'm saying, guys, more blimps. What are we doing?
If there's only 25, that's a great marketing piece.
Yeah,
only 25.
Yeah, there's only 25, and Goodyear is certainly the only company I can name with a blimp.
Yeah,
Tasty blimp.
Oh, that'd be fire.
All right, we'll pitch this.
A red blimp.
We're gonna go out and pitch this.
A red blimp. I don't know. I feel like that'd have people on edge. Just a red blimp.
We could do a black one with like a cherry and tasty on the side.
Oh, that would stand out a lot better too.
Hot, or that would be really hot. Are blimps? Is it better if blimps are hot?
I don't know anything about the history of blimps.
I don't either. I mean, there's why am I totally blanking? What's the like really notable blimp that blew up?
Did one blow up?
Yeah, the humanity. Somebody help me here, guys. What's the war blimp I'm thinking of here? Anyway, I know we gotta get off here.
A war blimp.
There's like some research on that. Oh, the Hindenburg.
The Hindenburg
is that right? Is that? I think that's right.
When you said Hindenburg blimp, I still don't know, but it just sparked something. I feel like
maybe it's not a war thing. There's like I just it's black and white pictures in my mind. Yeah, Hindenburg. Okay, thank you. I got there.
Hindenburg.
Yeah. Thank you guys. Thank you. Everybody jumping in on Hindenburg. I was totally blank. I got there, guys. I got there. I could even quote "Oh, the humanity," and I couldn't think of the thing.
I don't think I spelled it right, but that's funny.
Led Zepp. Hindenburg copy pasta. That's going to be all the time we have.
With that being said, look, bro, this is spot on. Maybe the blimp is a move. That could be a sign. No. No, anything else top of mind before we wrap for the day?
No, that's what I got. We got to go pitch the Tasty Blimp. How expensive could it possibly be? We'll figure it out.
Let's get it. Can't be too bad. No, with that being said, we'll see how the markets respond with the next couple hours. We got NFP tomorrow. Let's keep that in mind. We'll manage our positions. Thanks for taking the time to hang out with us. Emmett, Sky, JT, Jared, Grumpy Mike, Big Deal. Everybody, thanks for taking the time. We will be back. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
It's option jive. Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with an option jive. Even the S&Ps, not as high as I saw them all night. I saw them up around 8 early this morning, around 5:30 a.m.
Mm-hmm.
What time do you get up in the morning?
Around 5:30.
5:30?
Yeah.
Yeah, I'm a 5 o'clocker. I got to leave by 5:30, get here by 6 kind of thing.
Do you want me to give you like a cookie or something? You're amazing.
I like chocolate chip if you're doing that.
Chocolate chip.
Sure. Option jive, probability of touch across different deltas. What's that mean to you?
What does that mean to me?
Probability of touch gets different deltas, yes.
Yeah, well, we're going to talk about probability of touch and kind of the expectation.
Do it.
You should have. And so, we've looked at this in previous research. The realized probabilities of touching the strike in a short option strategy are much lower than the theoretical probability. So typically we use 2x the delta as a way to estimate probability of touch if you don't have a sophisticated platform like the Tasty Trade platform, where you can just have it as a column set. But that's your back of the hand trader way of kind of estimating what the probability of your option is getting touched at some point within the expiration. So one of the things we know with all things managing trades is that the 21-day mark is going to significantly compress your P&L volatility, which is going to compress the probability of touch, going to increase win rate, reduce risk, et cetera, et cetera. We know that's kind of the point here. So we're basically just showing here that by just managing at 21 days, you're going to cut your probability of touch significantly on your position. And this shouldn't be a shock to you when you're rolling, closing, winning trades. You're going to really reduce the amount of times that you are getting tested on your trades.
And even if it does touch, time has value to it. So it doesn't come all out all of a sudden just because you're touching it, right? I mean, You're not trading the weekly options or the daily options. You're really trading something with 21 days worth of time. So there's still wiggle room is what I'm trying to say.
And probability of touch doesn't dictate good or bad trade, right? So I have short puts in Microsoft where they're basically a scratch now, but Microsoft is like 20 points lower.
Right.
And where I put those trades on. And it was at 400.
Good strategy, horrible direction.
Yeah, just got the direction wrong, but you got, vol contraction, you got time decay. Those things worked in your favor. So having your strike tested doesn't necessarily imply that you're going to lose money on that trade or that it even is a losing trade at this point. It just is a reflection of the movement in the stock. That's it.
Mm-hmm.
So to understand the effectiveness of realized probability of touch, our POT here, we can examine the ratio between the realized probability at 21 days and the delta, which is half of the theoretical probability. So what we're looking at here, you're basically looking at a combination of delta and probability of touch. When you're managing at 21 days, you're greatly reducing that and giving you an idea of what your delta change is going to be on your position. So if you're selling a 20 delta call, you can expect at some point, based on the probability of touch, to have a 35-ish delta position at some point on that call. And that means that the stock goes up a little bit. It's kind of close to the call. On the put side, it's the same thing. If you're selling a 20 delta put, you can expect that put to go to 25 deltas at some point, even if you're managing at 21 days. It just tells you that your position, your delta, you have to have some wiggle room on your position. This goes to our confirm and send on, managing positions. If you're selling a 20 delta put, it's not like that put's going to just go to 15 delta over a week. You're going to have times where it goes to 25 deltas.
Yeah, no.
And on the call side, it's the same thing. You sell a 20 delta call, expect it to be a 35 delta call at some point.
Perfect.
Not on every trade, but a lot of trades.
Yeah, I mean, it's almost like looking at the probability of being out of the money. If you're selling a 30 delta put, it's a 60% plus chance of touching it. I mean, 30% sounds like, oh man, this is free money.
Free money.
But 60% chance of a touch, again, going back to your point that you made just a moment ago, doesn't mean it's profitable or a loss. It just means that it can happen.
Yeah.
Odds are it might happen.
Yeah.
It's time goes on, that number gets smaller, and that's what we play for.
And when you're factoring in the 21-day mark, you're gonna reduce that probability a lot more. So the 60% probability of touch goes down significantly to 40, 30, something like that.
Yep.
So the next slide here. So focusing only on the delta at 20 might not provide the full picture. So this time we analyze SPY out of the money puts and calls across deltas ranging from 10 to 45, which are, mostly what we trade, right? So we kind of stick to more around the 20-ish delta, but most people are trading in this range from 10 to 45. All the options were initiated with 45 days and exited at 21 days. And so we're just going to look at deeper into kind of this probability of touch idea. So the probability of touch at expirations for all deltas are lower than the theoretical values, which is 2 times delta. That's our theoretical probability of touch. But when positions are managed at 21 days, the results improve significantly across all deltas. The average probability of touch when managed at 21 days is approximately 0.8x the delta. So probability of touch actually comes in, it's actually overstated, which makes sense because volatility is typically overstated. So most of the time, your 30 delta option has a theoretical probability of 60% of being touched at some point. It probably comes in less than that, 55, 50% on a realized basis. When you're taking the 21-day management into effect on these positions, you cut that even more. So, for example, like on a 20 delta option, you're looking at a 10% probability of touch. That's your actual probability of touch based on rolling at 21 days. And so you're cutting these numbers significantly just by managing at 21 days by a factor of about half, a little bit greater than half.
Okay. You want that, right? That's a good thing.
Yeah, that's a good thing. Yeah.
Just want to make sure everybody knows.
But there's 2 points to this. It's like you should expect to be, I think to your point of like a 30 delta option, people think, oh, it's a 70% probability. Why not just move this to the 10 delta and it's a 90% probability and just do these, all day until my hands bleed. You should expect, that the probability of touching is going to be high. When you're managing, you're going to cut that significantly.
Perfect.
So this next one is just kind of visually showing the improvements that exiting positions early can bring to our short put strategy. So that the trend also shows that the gap between theoretical and realized probability narrows as delta increases, meaning the closer at the money options, when you get to like a 40 delta option where it has an 80% probability of touch, it does realize that probability, which makes complete sense because you're right at the stock price. So you're selling straddles or really tight strangles, you should expect, to be tested on both sides of that trade probably multiple times throughout the duration. But when you're selling those 20 or 25 delta options, the probability of touch is actually kind of overstated. And that makes sense because of the way volatility is along the curve. It's overstated further out in time or further out of the money. And so your probabilities are a little bit more overstated. When you factor in the management, you even reduce that, you further reduce that and make that even lesser of a probability. And so it's a pretty cool little slide that we got there.
Yep.
Give you an idea of just probability of touch and incorporating managing trades. It's going to cut down your P&L volatility really significantly.
Very good.
So, but that was just looking at the put side. So on the call side, the realized probabilities are higher than those for the puts. And that's just a reflection of the market that we've been in for quite some time. It's been, upside drift and just generally, there is that upside drift in markets. So calls tend to get tested more, and you typically have put skew in something like SPY. So relative to where your strikes are, your calls are a lot closer at the money than your puts if you're using the same delta. So this shouldn't shock you. It doesn't mean you shouldn't sell calls. I think it just tells you that, there is an upward drift to the market here. The 21-day management surprisingly kept the probability ratio extremely close to that of the put side. So the takeaway here is that By incorporating the 21-day management to your positions, your probability of touch is in line on both sides of the stock, whether it's on the puts or the calls. You have kind of the same probabilities on each of your options.
Yeah, and
this is SPY, so this is way different than something like an Apple or a Microsoft or a Google, where you have a lot of different dynamics that go into the stock, whether it be binary events, news,
earnings announcements,
like all those things are separate from the S&P 500.
It's a great point to make. And plus, SPY has put skew versus a lot of the companies that you just mentioned has call skew.
Yes. So I would actually think on something like, I don't know, it's hard to quantify that. I was going to say like on a Tesla, calls are probably what our puts are on SPY, but I don't know if it is because of the realized volatility. You're getting way bigger, like volatility overstatement in SPY is a lot greater than the overstatement in something like a Tesla when you have like these kind of binary events where you have realized volatility that might be multiple X's of whatever the implied was. So that's an interesting one.
Very good.
So the next slide, we found a similar pattern on the call side. So high delta calls also presented a greater risk of being tested. This shouldn't be a shock when you're selling closer at the money premium. You're going to be subject to being tested on either side multiple times throughout the duration. But again, when you're looking at the probabilities, the call side probability was more in line with what you would expect from a 2 times your delta perspective. When you're managing at 21 days, you're cutting that down, by 50% plus across the whole distribution, whether it's a 10 delta option or a 45 delta option. If you are managing at 21 days, you're cutting the probability of being tested on that trade by more than 50%.
You're pretty good.
Thank you. Been doing this.
Look at you. A hell of a teacher.
So a couple takeaways here for index options. Puts exhibit a lower realized volatility, realized probability of touch than calls across all deltas. This is in SPY specifically. I bet you could probably apply this to the Qs too, but this might be different on a single stock name, but we're just talking SPY here. Actively managing positions at 21 days subsequently reduces the likelihood of strikes being tested compared to leaving positions unmanaged. I think you can apply this to basically any trade that you do. 21 days is going to significantly compress your P&L volatility. On average, the realized probability of touch for puts is slightly below their corresponding delta, which for calls aligns with their delta. So the call side is much more, the probability of touch is realized is more likely to be realized than on the put side because we've had this kind of upward drift in markets. When positions are actively managed, the disparity between put and call probability of touches becomes minimal. So when you're managing trades, the puts and the calls, they become very similar.
Good job out of you. Good job out of the E-mini S&Ps. Catch a small little bid here, up 650. Volatility basically unchanged. NASDAQ up 39. Russell up 1. Dow up 30. I still all consider it pretty much unchanged. Bonds, on the other hand, catching a little bit of a bid. 116.11 up 25 ticks. Bitcoin is not caught a bid, still down around 1,500 or so. Oil up 25 cents, sitting right there. Gold did catch a bid. It's up 13. It was down all morning. Silver still down 5 cents, but basically unchanged. We're going to take a quick 90-second break. We're going to come back. We got more Tasty Live at the opening bell. You're not going to want to miss this.
Cool.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with a market measure sponsored by the SIBO. But before we do, let's take a quick look at the market. Pretty complacent across the board here. Even the S&Ps now 10 handles under 7,000 at 69.90.
I just tried to close them.
Oh, you missed it by that.
Oh my God, I should have put
somebody. Russell, the weakest of the group, down $1 and change. NASDAQ up 30. We're all basically unchanged across the board here. Dow up 260 is your leader to the upside, and volatility up 13 cents. Bonds still high. higher than they've been for, well, really since the beginning of the year. 116.14, up 28 ticks there. Bitcoin hanging out at 68.7. Last time I quoted, same price. Ethereum about $10 lower than the last time I quoted, down around 5.5%. Oil up 5 cents. Gold down 14. Silver a little bit weaker on a percentage basis, down 56 than gold. Both of them pretty much unchanged. Let's take a look at the overall market itself by clicking on the net change. You can see that SanDisk is trying to bring us lower, down 17 or so.
Well, those stocks have fallen out of favor. Got everybody playing in TSM and NVIDIA had a really nice bounce back.
Yeah, TSM, there's the rotation that we talked about.
There you go.
TSM up $4 doesn't tell you the whole story. It traded up to 364. So it was about up around $8 or $9 at one point. Costco down 7. Google down around 5 or so. Meta, which you started trading, down around 4. MSTR, OKLO down around 2 and 3 respectively. On the upside, looks like Spot still holding on to its gains, up $75. Got as high as $4.92, so only about $2 off of its high. So it's been maintaining that. Datadog, which you had some long delta in, that you closed nicely up around $16. That's all I got. Pretty complacent market right now, almost like a breather day here at Scotia off of all-time highs.
Yeah, it's been choppy.
Mm-hmm.
I take off. Let's see. That's it.
You ready to go to this market measure sponsored by the SIBO?
Of course.
Let's do it.
And it's a good one. How correlated is IV at the highest and lowest levels? What would you say if I just said in a vacuum, if volatility is low, are correlations going to play out
I think
in line or lesser or more?
I think if volatility is low, they all do the same thing. If volatility is high, they kind of have a little bit more subjectivity to them.
Oh.
Am I wrong?
Kind of. Everything goes to 1. Correlations go to 1 when you get volatility. I mean, that's...
Yeah, kind of right. I was thinking about the one-off when you have one stock that has higher implied volatility, like on an earnings.
Oh, yeah, okay. So you're talking,
Yeah, I wasn't thinking overall. I was thinking more like for an earnings play, or they're coming out with some sort of announcement or something like that, and their volatility is high and everything else is low. That's how I was answering it. Well, let's see what we got.
Yeah. So the S&P 500 and its IV are negatively correlated with a historical average of a negative 81, meaning the S&P 500 going up, volatility goes down. I mean, that's what a negative correlation. They move in opposite directions. So when markets are going up, volatility is typically going down. You're going to obviously on a day-to-day basis have different changes, and you can see this even in this rolling correlation. When you have spats of volatility, the correlation gets a little bit lesser here. You get on a day-to-day basis. So today we're going to take a look at correlation when the VIX trades at extremes, high and on the low side. So we're going to talk about like just kind of extreme marks in volatility on both the high and the low side. Does the typically strong inverse correlation change? We're going to kind of quantify whether, when volatility spikes, does correlation change as well?
So we're taking a look at this. What was that one big spike up there? I'm sorry, I missed it. What is that? Oh, that's 2020. Sorry.
So that's COVID, and then you had the tariff tantrums in there. What was the other one that we have? Was that like around the election? Yeah, that's
could be.
In middle of 2024. I think we had some election volatility there too. Or no, was that yen unwind?
I don't know, to be honest with you.
See, again.
Is it okay to say you don't know?
Time just blends together.
It does blend together. I'm a 45-day time frame right now.
That's true. It's like we're like goldfish.
It's right.
I don't remember any of that stuff. Dude, what happened in 2020? You don't even remember that?
Who cares? Doesn't do anything.
COVID. That was
of course. Yeah. No, I knew that one.
Yes.
Yeah.
So the study that we're going to take a look at here, of course, we're going to look at VIX and SPX, and we're looking at the correlation 2013 to present. We recorded the average price correlation when the VIX trades at different levels. So we looked at less than 12. This is the VIX, so low very low, which is kind of a shock that, do we even remember the last time we were at 12? We didn't have 12 post-COVID. Have we? I don't think we have.
Not to my knowledge.
Let's take a look real quick.
See, $.
No, you don't need the dollar sign.
I mean, if you look at VIX, you probably had it.
Yeah, VIX, that's what we're looking at.
Yeah, if you look at VIX, you've had it. If you look at the futures, you didn't.
A couple times.
Yeah.
So we're looking at less than 12, very low volatility. Between 12 and 15, I would say that's more in the normal range. I would say between 15 to 20 are, slightly perky volatility. And then between 20 and 30, and then greater than 30 being our high volatility kind of spot.
Oil.
Yeah.
Oh, Craig left. We don't have to give him his cut.
I know.
That's perfect. Perfect
All right,
timing.
Snooze, you lose. And so we're going to record the probabilities of seeing a move in the same direction in SPX and VIX. So we've seen sometimes market up, vol up. That has been, like when you're having these big squeezes higher, it feels like you get a little bit of a vol, like today.
Yeah.
Today is a market up, vol up day, where you'd be bucking the trend of normal correlations, or at least historical correlations. So we're going to try and quantify this a little bit. So the tightest inverse correlation between price and volatility occurred when volatility was in the middle, 81% of its range, between 12 and 30. What this is saying is that the correlation on a day-to-day basis is much higher when volatility is in its like normal range, right? So, and this even gets into like the 20 to 30 range, which is pretty high.
Yes,
but you're typically seeing that movement when you're getting into these really low vol regimes, like less than 12, or really high, greater than 30. The correlations break down. Like there's a lot less. It's a lot more random day to day in terms of whether volatility and the market are going in opposite directions. It's more like what we're seeing now with market up, vol up. That's because we're sitting in we're on like the lower end of this range. We're on the VIX is at 1727 right now. So we're kind of in the lower half of this kind of regime. And you can see, when your correlations are tighter, when you're in quote unquote normal volatility, when you're really, really low volatility or really, really high volatility, correlations get a little bit funkier.
Absolutely. And that's what we look for too, right? Some of that volatility funk that you just talked about. Like if we're looking to sell premium, we want it to be high. That's what we're looking for.
Yeah. I think this.
But we want to catch the higher end, not the middle high end, right? I mean, which is
the middle high end is good too.
But that's where you always are.
Yeah, but
right?
you want to avoid the super high end or the super low end.
No, you want to avoid when it's low and getting hit when it goes high.
Yeah, when you're short vol.
Yes, when you're short vol.
But the super high end, you have to size appropriately.
Yes, because
there's
one, it starts acting like 3 because volatility is 3 to 5 times higher than it normally is.
Yes.
And you're not going to be used to that type of swings in your account if you were usually trading 3-4 contracts in something that has super high implied volatility than 3-4 contracts with something that has its normal volatility, its normal expected moves. The numbers get pretty big. And that's why, I've always talked about, I don't look at the top of my trading platform when I'm trading 9 times out of 10. Sometimes I'll look at it when I really want to hurt myself, but not usually. I don't want to be skewed by that number.
Yeah, for sure. Yeah.
Anyway,
takes the emotions out of it.
Yes, it takes
a little bit.
Yes, a little bit. Not a ton, but a little bit.
Yes. I think we skipped one. Yes. So here, regardless of where vol is at, the probability of seeing a down day in both the VIX and SPX was around 10%. This means market down, vol down. However, the probability of seeing a move higher in both dropped from 16 to just 4% when vol climbed above 30. So you typically see, which this isn't a shock either, the market up, vol up.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
What color of jeans? They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's
Oh,
game. I'll get it on this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny
this is-
Cancellari. Bam!
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday edition of what it is that we are trying to do. Welcome to the Magenta Tuesday edition of the program. Thank you guys so much for being here and being a part of what it is that we're doing, because it is only because of you all that we can do what we do. Guys, it's only because of you all that we are about to launch single stock futures in the summer. Did you guys see this? Josh brought this to my attention. Jamal brought this to my attention. And so thank you to my coworkers and colleagues for bringing me up to snuff. Guys, we don't have much longer to wait. We are so close to scalping NVIDIA futures. Like, we are so close to scalping a little Amazon at 1 o'clock in the morning. Guys, we're so close. We can smell it. And as Josh said right before the show, man, if there's ever been a clearer sign of a top, I don't know that I've ever seen one. So welcome to the show. I am glad that you are here. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the program. And of course, you can drop a question in the chat. If you have a question for me, the expected move on the number of questions I get to per show is somewhere between 0.05 and 0.1. So the earlier that you get that in the chat, the higher the delta that I might get to that question. But let me know, guys. What do you guys think about single stock futures? Is this a good idea? Is this a bad idea? Is this going to just take off like gangbusters? Is this thing going to just implode? Let me know what you guys think about single stock futures. I want to know. The other people that are watching the show wants to know. But the most important entity that is in the room with us now is, of course, the algo. So let the algo know how you feel about single stock futures. I would love to know too. And I'm actually curious. I was chatting with Josh about this before the show too. What I'm really curious to see, so you've got like gold futures, right? You've got gold futures, you've got contango, you've got backwardation, whatever. There's storage costs, there's insurance costs, there's like things that go into determining a spot price and a futures price. Same thing with oil, same thing with silver, same thing with wheat, same thing for all my lean hogs traders out there, right? Like there's storage that's involved. What do we do with meta futures? Like where's everybody storing their meta stock? Like, do I have to insure the sock drawer now? Like, do I have to get out a policy on my, on my futures and meta that's underneath the mattress? Like, are we getting to that point? Like, I think that the spread between the spot value and the futures value is going to be so interesting to see how they figure that out. I mean, dividends will probably factor in. Something else might probably factor in, get a little kind of fudge factor in there. Just a little something to grease the wheels. But man, it's going to be wild and crazy times indeed. So Josh, go ahead and bring us into the market. Speaking of wild and crazy times, man, let's take a look at what's going on in the market. Man, take a look at this. E-mini S&Ps are down 2 on the day. Pretty weak the last couple of hours. They were strong this morning, well over 7,000, but now they've since cooled off a wee little bit. You've got the risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, down 49 on the day. Not exactly doing what a risk-free instrument should do, but sometimes, the sellers show up and there's two sides to a given market. You got the boomers up 123, and then you've got the Russell 2000 futures index down 40 cents on the day. Bonds are up, notes are up, oil's down, UB40's up. Man, the shifties are getting hurt a little bit today, down 30. You got silver is down $1.30 on the day. And so, kind of a mixed bag of tricks when it comes to, the market, the metals, the energy, the fixed income. I haven't looked at lean hogs recently, so I'm not sure what they're doing here today. But volatility up a quarter, and volatility futures up a quarter. And the spot volatility, the old VIX, let's have a quick little look. You got volatility up 22 cents. So volatility up ever so slightly on a day like today. And it makes sense, guys, because look, I don't know if you know this, right? So you probably didn't know that single stock futures were coming. So if you didn't know that, you can thank Josh, you can thank Jamal for bringing that to my attention. And it's crazy. It's wild times that we're living in. You probably also don't know, guys, listen. So tomorrow morning on a Wednesday, there's a jobs number that's coming out at 8:30 Eastern. It is unlike any jobs number before it. First of all, it's on a Wednesday. That's not good. But second of all, guys, I've been looking at the markets now for nearly 20 years. I've gone through all the data points. I've gone through all the economic releases. I've studied the ups and the downs and the bulls and the bears and everything in between. I have not seen a potentially more catastrophic print than what's coming on down the chutes tomorrow morning at 8:30. So if you don't have your affairs in order now, I think it's probably too late. But I would start immediately because you still have a whisper of a hope to get this guy in order before 8:30 tomorrow morning when the jobs number drops. But of course, just in case we do make it through, we're going to trade the jobs number here in the next couple of minutes and get a little something going and just see if we can't grease our own wheels a little bit. But jobs tomorrow. We've got Hood earnings tonight. I don't think I've traded Robinhood in quite some time. And Robinhood, are we allowed to trade Robinhood? I kind of feel like I shouldn't be trading Robinhood. It's kind of like, if I'm Barry Starbucks, like I can't do that for personal marital reasons, which you guys know if you've been following the show for any length of time, which I don't think, have I ever told that story before? Nah, maybe another time. We got too many things to do today. But from a Hood standpoint, I don't know. Can I be bullish on Hood? I don't think I can be bullish on Hood. I think my only two options, I'd have to look at the fine print in my contract. But I think neutral is okay. Maybe kind of like a, not necessarily like a full demerit, but maybe like, I'm on a watch list, like check in with Jim a few times a week just to make sure that everything's kind of in order. But if I go bearish on Hood, if I go bullish on Hood, then man, I'm going to have full demerits. We're going to start getting docked pay. I'll have to furlough some days. It's not going to be good, man. So I think we'll go neutral or bearish here on Hood in just the next little bit. But I see you guys in the chat. Man, look at you guys. I appreciate you. Trader Nate's in the house. Man, look at Ash Finn in the house, man. I appreciate you guys. Griffin Jones. Man, look at this. Got JT in the house. Oh, Daniel is here. Wolf is in the house. Man, look at you guys. I appreciate Sam L's here. Anderson Homestead is here. Stan Lucian in the house. I appreciate you so much. So let's go ahead and, all right, a couple of things. So number one, let's do, first and foremost, let's go ahead and talk about NVIDIA. I'm sorry, not NVIDIA, but AMD. But it's fun to say NVIDIA because so many people, they don't even say it right. And so it's like the more often that we can say NVIDIA, the better, because we're starting to, we're training the population. We're informing the population. I mean, AI doesn't even know how to say NVIDIA right, so I'm not concerned at all about the robots taking over. But AMD, you can see that, the do nothing strategy continues to win. And by win, I mean, we're still down about $4 on the train. But for AMD, down 54 cents, this is not a bad spot for us to be in because we're out of the money, right? You've got the stock at 215. You've got the strike at 210. Okay. Never forget, whenever you're a premium seller, as long as the option is out of the money, you're in a good spot. Like as long as the option is out of the money, right? You are holding all the cards, in my opinion, right? You can make adjustments. You can, neutralize delta. You can do some things around the edges if you want to, but remember, fast forward down all the way to expiration. Like take this guy all the way down the road that it's currently on. If it stays here at this price and it doesn't go in the money, then you're going to hit whatever profit target you have for the position. 25%, 50%, 100%, whatever you want out of the trade, it's going to be yours for the taking if the option stays out of the money. Now, of course, if it goes in the money, all bets are off. Right now, you're in a much different ballgame. But while it's out of the money, never forget, this is a great scenario for you. This is a good scenario for you, at least. Maybe great is a bit too grandiose of a term. It depends on how far it is out of the money and things of that nature. But don't forget that you're holding all the cards. Don't forget that, in my opinion, nothing needs to happen urgently. Nothing needs to happen like right away if the position is out of the money. And so if you want to do some things around the edges like I was alluding to, by all means, go ahead and do them. But don't ever feel like, man, I got to do this now because this is crazy. I'm hemorrhaging cash. I'm this, that, and the other thing. Like, no. In my opinion, if you're still out of the money, like you are in a good spot because it's headed to a destination where you're going to hit whatever profit targets you want as long as it stays out of the money. Now, markets move and things change and it can be quite whippy, especially in a stock like AMD. And so I don't anticipate that it's just going to sit here for the next 37 days, but just to understand where I'm at, contextually can be really helpful for what should I do now, if anything? Like what adjustments should I make? Like what management, techniques am I kind of keeping my eye on for, controlling the directional risk and maybe adjusting my delta along the way if I even want to do that. So anyway, there's AMD. We're still in a good spot in this position. So we do nothing. And there you go. So what I want to do now, though, there's really nothing else to talk about in terms of what's going on in the portfolio. I mean, Amazon, similar situation as AMD. Boeing is down a little bit today, but it's fine. GDX, GLD, Starbucks. I mean, look at Snapchat up 9 cents. Guys, they laughed at us. They made fun of us. They mocked us and jeered us. And we're going to have the last laugh with Snapchat up 8 cents. And so you got Tesla up to 425, which, that guy's getting pretty close now. Okay, this guy's getting a little close to where we need it. You got the stock at 425 and 430, 440 is the call spread. And so, yeah. So we're not going to do anything in Tesla. All right. What I want to do though. So I got 3 trades ready to go. I'm going to do my 3 trades and then I want to get to you guys, man. I want to see where you guys are at because I appreciate you guys. I appreciate you guys so much. So number 1, we're going to trade the jobs number tomorrow. So let's go to SPX. Okay. Again, just using common sense, guys, right? You don't need any other data point. You can pour through the reports. You can look at inflation models. You can look at this, that, and the other thing. Go for it. 100%. It's totally up to you. You got to do you, boo. I'm looking at this and I'm like, Jobs Wednesday? There is nothing about that feels right. There is nothing about that even sounds right. And so this thing has to be going down tomorrow. I'm like 44% sure of it. So let's go ahead. Let's go to the overnight cycle. Do a little 1-day action. This is kind of my version of a 0 DTE trade. Because again, I try and do all of my live trading on the show. I'm able to do about 98% of it. I never enter a position off air, but sometimes I may have to close a position off air if it is a butterfly or something that's really timely in nature, and I want to go ahead and cash the profits in while I have them, because markets move and things do change. And so, the next thing you know, it can just be gone if you don't cash and kind of strike while the iron is hot. But this little 1 DTE guy, February 11th, this is going to expire tomorrow at the bell. And this is a pure jobs play. So jobs number, again, tomorrow morning, 8:30. I think we play it to the downside. Again, just the simple jobs Wednesday nature of it, that's the biggest tell. Like, they say that the markets are unpredictable. They say that nobody knows. And they say it's all random. But come on, man. Jobs Wednesday? Like, what more inside information do you need? Like, what more insider intel do you need to make an informed decision when it comes to which direction the market is going to go? And so when I look at this, we got to play it to the downside. And so let's go ahead and let's set up a butterfly for tomorrow. So here we go. We'll go to the tried and true. I'm thinking, what did Amelia write down for me? 69.45, 69.05, 68.65. These are the strikes that she selected. If you're brand new to the show, Amelia May is my trading assistant. She is my intern. I think I'm the only one on the network with an intern. She is also my 5, soon to be 6-year-old daughter. And by soon to be, I mean like 3 weeks. We're like 3 weeks out, man. And let me tell you something. She is very clear of the birthday concept. Very, very clear, very excited, counting down the hours, counting down the minutes, like sitting on the couch for 5 seconds and saying, this is taking way too long. And it's super fun as a parent. Anybody who's had small children or has small children, you know exactly what I'm saying. Like, it's so fun to relive these things like through the eyes of your children. And it's just, it's really, really fun. And so we're all looking forward to Amelia's birthday. It's coming up on March 9th. There you go. I got it. So she's the next one in the family, but she's also my trading assistant. She does all my trades for me, and so she's doing a rather good job, I might say. And so here you go, a little 1x2x1 action, standard cookie cutter butterfly. Man, we can get a 40-point wide butterfly. Excuse me. For $4.50 to 60 to 70 cents. That's pretty good. I was kind of thinking this would be over $5, but this is going to be about 1.5% of the account. And so just in case this doesn't work, which does happen to us from time to time on the show, most days I would say, we're only going to be out about 1.5%, which is good. If it works and we're able to cash it in, then obviously that's better. But if it doesn't work and the market rips tomorrow and the market says jobs Wednesday, whatever, it doesn't matter, then it's only 1.5% of the account. So we'll be able to recover from that. And so this is obviously the biggest benefit to a defined risk strategy. Like, the worst case scenario, that no matter what happens, and even if you're completely wrong on the direction or on the trade, this is the worst case scenario. This is the most that you can lose, as long as you don't go in there and start fiddling around with strikes and kind of changing the risk parameters and things like that. So let's go ahead and let's put on a little jobs trade here. Let's do, 480, 475. I think we'll be good. All right, so no takers at 475. Let's try, let's see here. We'll do 485. And we'll pay the man a little extra. All right, so we got improved. So the man paid us back. So 480 on the butterfly. So a downside butterfly for SPX, 4 jobs tomorrow. We are bearish on the jobs number. So again, you know what that means for you. I don't know how I can make it any clearer. I'm not sure how I can make it any simpler for you, right? If you're serious about making money, if you're like, man, I'm set to retire in 9 years, but I would really love that to be 8. Like, I would really, really enjoy that to be 7. Then you should be on the other side of all of my earnings trades. This is basic stuff. This is from theory to practice 101 type of a deal. And so I would go ahead and load up those out of the money calls, and you can go as far out of the money as you want. Like, you're gonna be totally fine. And by totally fine, I mean I'm feeling really, really good about this one. So, all right, so 69.45, 69.05, 68.65. That is the butterfly for SPX. Okay, so we did that. The next thing I want to make sure I do, let's go ahead and let's go back to SLV, guys. You guys remember SLV? Man, look at SLV. So I was actually looking at the IV rank. It's 67.7, right? Which is pretty good. But I was looking at the IV rank before the show. And man, look at this, man. This thing is crazy. So the day, like right after Christmas, is when it hit 146. That was that crazy day when it rallied like $11 for the first time. And we didn't know this at the time, but like we were about to, get mixed up into like a 3 week span where like $11 moves were like nothing. Like $20 daily ranges, $40 daily ranges, like just crazy wild stuff. And so the IV rank of silver was much, much higher just recently, a month and a half ago. But even still, with the silver, around SLV around 74 now, the IV rank at 67, I would argue this is maybe an even better environment to sell premium in because it's not so crazy like it was where it's like, man, like you feel like every couple of hours you're being tested. You're tested on the call side at noon, you're tested on the put side at 2, and then you're tested on the call side and blown through at 4 o'clock. And it's like, man, like how do I deal with that? How do I handle that? And so at a certain point, I mean, high volatility is good, but at a certain point, it becomes too much. Like at a certain point, it's like, man, I can't, it's a little bit too crazy. And so in IV rank and SLV of 67, 70-ish, that's not too bad. And so I want to step in here. Let's go ahead and sell Strangle, man. Let's go in here and let's go to SLV. Let's go to March with 38 days to go. And what if we just do like what does Amelia have for us? She got it written down? Yeah, 59, 112. 112? No, that's not right. No, we're not going to do a 112. That's a little bit too high. Let's go to like a 100 maybe. Yeah, we'll do like a 59, 100. So a 59, 100 Strangle. It's pretty neutral. You can see we're a little bit bearish, but not much. A very, very tiny amount. My probability is 75%, so that looks good. My P50 is 85%, so that looks good. My credit collected is 324, so that's $324 that I can collect in total on the contract. Lots of positive theta. The buying power effect is very, very modest. So if you've got $10,000, you could do this account, you could do this trade, and it would be small enough for that account. This trade will be small enough for your $10,000 account, in my opinion. Now, you may want to have a little bit more capital than that, and that's totally fine too. But just kind of giving you the minimum amount that I would feel comfortable doing a trade like this, it would probably be 10,000. 7,000, 8,000 is not enough in my opinion, because as you guys have seen, silver can be pretty crazy. And so you don't want to get yourself in a situation where you're oversized on entry, because just a lot of bad things happen after that. There's a lot of dominoes that begin to fall. None of them are really good. I mean, obviously, if it works, you're the greatest trader that's ever lived. Like if it works, you're like, why didn't I go higher? Why didn't I go more? Like, what's wrong with me? Like I knew it was going to happen this way. Like I knew it was going to go higher, or I knew it was going to go lower, or I this, or I that, or the other thing, or whatever. It's like, no, you don't know anything. And I don't know anything either. So we are in the same boat, my friend. But when it comes to $10,000 accounts, I think that's okay for a silver Strangle. And so again, maximum loss here of negative infinity, that might soil some underoos out there. But remember, in order to lose an infinite amount of money, right? That's negative infinity. Do you understand what that means? That means that theoretically, you could reach a state on this Strangle where you are never not in a situation where you're losing money. You are never not hemorrhaging cash. That's what negative infinity means. Like your whole family tree is hemorrhaging cash at that point. The people that came before you, the people that will come after you, like they're all just sending money to the SLV pits. Like they're all just shipping cash, right, to cover this SLV Strangle. That's your theoretical max loss. Okay. Is that practically going to happen? I don't think so. I mean, theoretically, is it possible? Yes. Is it a practical risk for tomorrow? I don't think so. Right. And so I'm not necessarily super concerned about losing an infinite amount of money. Now, could we be down $20? Could we be down $30? Could we be down $45? We just were in SLV like 3 weeks ago. And so if you're just joining the show for the first time, man, go back into the archives and watch, just binge the whole thing like the last 2 months, because your boy needs that watch time. So just start from like 2 months ago and just watch it straight through, man. Go straight through. You'll see all the SLV stuff. We were short a 64 call or a 64.5 call when SLV went all the way up to whatever it went up to, 110 or 115, whatever it was. I mean, it was bad, man. It was really, really, really bad. But we were small enough on entry, so we were able to absorb, in my opinion, essentially the worst case scenario. Right? I mean, I remember seeing tweets that it was like those silver moves were like 5 standard deviation moves or like 6 standard deviation moves, or like, the $40 silver range was like 2 5 standard deviation moves on the same day. Like the likelihood of that happening is like basically it never happens. That was like a second big bang essentially. And so it's like, all right, if that's the worst case scenario, which I think is a pretty reasonable estimate of a worst case scenario, negative infinity is probably not within reach, right? This is probably not something we're going to have to be super concerned about, at least not in the here and now. But anyway, I digress. And so anyway, we'll do this silver strangle, and then I want to do a little hood. Let's do some hood earnings. We'll do a little something. I haven't traded hood. Like I said, it's been a while. It's definitely been a while. Let's go ahead and let's go in here. 323. All right, so we got filled on the silver string. All right, let's go into hood. And then I'm gonna get to you guys, man. I'll see where you guys are at. See what you guys are up to. I see you guys in the chat, man. I appreciate you guys. Let's go ahead and February 10th. So February 10th. That's today. Okay. Let's go to, man, I kind of think, again, I'm not allowed to play to the upside, so that's off the table. I mean, we're already doing the butterfly for the jobs number tomorrow morning. I kind of think let's just play it straight up. Like, let's just play this guy kind of straight laced, right? Like, I don't know. Like, I don't really know that I want to do a front week. I don't really know that I want to do a butterfly. I don't want to do all those things. Let's just go to the back month, March. Let's just do a strangle. Let's just sell a really simple short strangle, right? The plain vanilla, cookie cutter, Betty Crocker, tasty classic, right? We've got time working for us. We've got Shore Vega working for us. And we just use the earnings as a little bit of a catalyst into like a normal trade, into like something that we would do just on any, kind of run of the mill situation. And so this is, I kind of like it. I mean, the volatility, 43.6 IV ranks, not too bad. And yeah, I mean, what if we just did like a 70 put and then like a 105 call? Like, this is a really, really good option too, from a buying power standpoint, because the buying power effect is only $800, right? So again, if you've got 10,000, it's probably not enough for you. Maybe 12,000 would be a little bit a better starting point from a capital standpoint to put this trade on. And then you've got a probability of profit of 70%. You've got a P50 of 83%. And again, a little bit short. We've got some nice positive theta. Maximum profit is going to be the credit collected. Max loss is negative infinity for the same reasons it was negative infinity on the SLV strangle. And yeah, I mean, I think this is good. I think this will be the hood trade. And there you go. So 3 trades on one day. Man, there you go. All right. So I'll be putting in my time and a half paperwork as soon as this show is over. So let's go ahead and I'm lucky they don't pay me 3/4 of an hour, actually. And so maybe we'll just call it a wash at regular pay. I think that's good. And so let's go ahead and let's do 493. All right, so we got filled at 495. So there you go. Okay. All right, so where are you guys at, man? Let's go. I see you guys in the chat, man. Look at you guys. Man, I appreciate you guys. I see small trades often. Let's surprise and delay somebody near the end. I see small trades often saying Doc's assistant needs a raise. Birthday cake and cookies is not good enough. You know what's so funny about that? So my wife and I, we were just recently talking about like allowances and stuff, because we give our kids allowances and they have to do stuff around the house. But we were just trying to figure out like what's fair. What's a good number in today's world, like today's market, right? So Penelope's 11, Eli is 8. He's about to be 9. He'll be 9 in April. And then, Amelia is about to be 6. And we give Penelope and Eli both $5 each per week. And Amelia gets 3. And so I don't know if is that too much? Is that too little? Where are you guys at on this? What do you guys think about that? And there's no COLA baked in. There's no cost of living adjustments. Like, we just sit down every year and we go through the annual review. And then they tell me what they've done. And then they try to negotiate higher. And I just squash them. I'm just like, you should be happy you get anything. And so they stay at 553. And so let me know. They've been at 553 for a while. It's been at least maybe 2 years now. And so let me know what you guys think about the 553. I'm actually curious to know where you guys are at on that. But let me see. Let me try to man, can I get somebody else here in the middle? Oh, I see E-Media is in the house. Says house single stock futures going to affect the actual stock. I know. Will they have voting rights? I know. I mean, they'll have voting rights in the future. They won't have voting rights today. Like, it's going to be very much kind of a conditional type of deal, the future tense. Like, I don't have voting rights, but I will have voting rights, right? Because I own future Meta. And so that makes sense. Like, will volume be lower than 24-hour stock trading? I don't know that either. This is what Josh and I were chatting about before the show. I mean, we're gonna learn all this together, right? Well, actually, only here on the Tasty Live Network. Like, this is not happening to just regular folks outside the Tasty universe. No one else even knows about this. In fact, I don't even know if other people will be able to trade it. I'm pretty sure it's just us. And so that's pretty cool. We get to learn together and fail together and succeed together. And so this is only on the Tasty Live Network. And so thank you guys for being a part of this. And we are rewarding you with some single stock futures. So you are welcome. But we have no idea. I have no idea how it's going to affect all these things, like volumes and like all that kind of stuff. And so I don't know, man. Like, it's going to be really, really crazy. I will say though, like, I mean, if you think about it, like if you're, for like the heavy hitters, like Amazon and Apple and Tesla and Netflix and Nvidia and whatever, it's like there could be, as long as the markets are not crazy wide, which I don't think they're going to be. Josh and I are kind of in agreement here, which is a scary, scary thing, that the liquidity might be really, really strong in these things. And if it is, that's going to be really nice. Like if you have an options position on and you want to hedge against that position, like you can go to just straight stock in the after hours market, of course. But now it's like, I mean, after hours market closes at like 8 p.m. or whatever. Now, I know some of them are like 24 hours now, but anyway, it's going to give us more tools. And if they start giving us like margin relief, like that's better than even stock, man, that's going to be awesome. Which, I mean, I would imagine that's what it's going to be, because that's what futures are. Like when you start thinking about margin relief, you're like, I could do SPY, which I can get some margin relief on that if I'm in a margin account. But then I can do MES or ES, and I can get a ton more margin relief relative to what I got with SPY. So I'm assuming, like when we open up our Microsoft futures, right? That just sounds really crazy to say. It's like, man, I just scalped some Microsoft futures. Like, let's go. And so, anyway, when I open those guys up, I'm assuming I'm going to have even more favorable margin conditions than what I would have with just Microsoft stock. So I don't know. I could be wrong about all that, but man, we're going to learn together. And there you go. And so, I see a couple people at the end. David Elliott saying 10-10-5. 10-10-5. Man, you think I'm a bank? Like, what do you think this is? Fifth, third, whatever it is, like regions bank? Nah, man, like 553, I think is good. 10-10-5, man, that's $100 a month. Like, man, I mean, that's like what I could pay to have my lawn mowed. That's like what I could pay to like have the house cleaned or whatever. I mean, have like half the house cleaned or whatever. My part of the house, of course. But yeah, 10-10-5, y'all are crazy, man. Super, super crazy. And so, and then I see AD3RT1 says we pay weekly allowance equal to the age. So it scales. Okay. So that would be 11. Man, you guys are just taking me out to the cleaners, man. That would be 11, 8, and 5, soon to be 11, 9, and 6. Man, that's worse than 10-10-5. Actually, it's almost exactly the same. Yeah. So no, it's not worse. But Josh wants in on the allowance. You guys are crushing me, man. MP 5850 says we call him a commission at their house. That's pretty funny. Maybe that's what we should call him. I don't know. There needs to be more. My wife is a little bit too. My wife is amazing. So let me start this part of the segment over. I love my wife. I love my wife more than anybody else in this world. She is the most important thing to me on this earth, and I say that in all seriousness. She is unbelievable. She is amazing. She is incredible. She is also. Josh, we can edit this part out later, right? She is also kind of a little bit lax around the edges with certain things. She is also Josh has got my back. That's good stuff. She is also, kind of a little bit kind of fast and loose with like the allowances and like the, like the chore responsibilities and this, that, and the other thing. And so, I would like things to be a little bit more militant than what they currently are, but I have to be very careful with what I drop down into the old suggestion box there. But anyway, let's get to the questions. Some more questions. Or Daniel, hello, Dr. Jim. Will you be doing one of your educational introductions this week? Yeah, probably tomorrow or Thursday. We'll do a little educational intro to kind of start off the week. And so I'm not sure what it's going to be on yet. We'll probably take a look at what I think could be. If you guys have ideas, drop them in the chat right now. Like, what would you guys like to hear me talk about for 5 to 7 minutes? Like, drop it in the chat now. I'll scan it after the show, so I'll know, what you guys suggested. But if you have something you'd like to see, or Daniel or anybody else, drop it in the chat, because I'm always looking for ideas. And so let me know. Stephen Bivens in the house. Dr. Jim, I have a synthetic long stock on IBIT that is underwater. I'm hedged with long puts, though, and I'm thinking of rolling the short puts out to put a Band-Aid on the bullet hole. Thoughts on this? So I have a synthetic long stock on IBIT. So just short puts. I'm hedged with long puts, though. Okay, so you've created a spread. And I'm thinking of rolling the short puts out to put a Band-Aid on the bullet hole. Do you have any thoughts on this? Okay. So first off, yes. I mean, if you're still bullish, right, on IBIT or any stock or asset for that matter, this is the huge benefit of a short put. right? You can just roll out in time and you can obviously pick up premium for doing that. Now, Bitcoin, crypto, a little bit different because it's not going to have the positive risk that equities have baked in, right? We haven't gotten to that stage in the crypto game, I don't think, where we can reliably, look at this and say, all right, it's going to increase over time. Now, it might very well do that. And the crypto bros and the crypto bro sets, like they're all in on it doing that very thing. But I don't know, it's a little bit too early for me to, co-sign on the positive risk premium being baked in to something like crypto. But still, it doesn't matter if you're willing to hold the unlimited risk for a longer period of time and a larger window of time, then you're going to be compensated for that. And so, yes, you can certainly roll the whole thing out in time, roll the short put and the long put. Like you've already bought the puts to kind of control the risk to the downside. And so, you've already kind of, the Band-Aid on the bullet hole, like you've already done that, in my opinion, by buying the puts. And so now if you want to roll the whole thing out, you can, depending on how wide the spread might be, it may not be a credit. If you want to roll the whole thing out, if you want to roll out the short puts and the long puts, because that would be essentially rolling an in the money put spread. And a lot of times you're not able to do that for a credit. And so that's one of the sticks in the mud when it comes to adding puts to a short put to create a put spread, right? The gimme is now your risk is defined on the downside. That's obviously a really good thing. The gotcha is it's much more difficult to adjust, and you're going to have a harder time, rolling for credits and adjusting for credits. And so, it depends on how wide you are. And I don't think you said, did you say? No, you didn't say. But yeah, I think buying time, if you can buy time and get paid to do it, and you still like your bullish thesis on the underlying asset, so in this case, it would be Bitcoin, then I would absolutely go for it. Right. And just if at any time you're like, man, this position is too big, that's when it becomes a problem. That's when you might have to consider like a pivot and calling some kind of audible in this situation. But as long as that's not the case, I say go for it. Definitely. Wolf is in the house. What's going on there, Wolf? I appreciate you, my friend. Look at Jeremy Steele in the house. Appreciate you there, Jeremy Steele. Anderson Homestead is here, man. Look at you. I appreciate you so much. Sam L in the house. Doc is on fire yesterday. Best stand-up show ever. Yeah, I don't know about that. News stories. When's the Netflix special dropping? Yeah, I don't know about that either. I might be able to give you like a PBS deal. We might be able to give you like a, like a WG40 type or WB40 type of deal, but like Discovery Channel. But I don't know about Netflix. But yeah, we did tell the news story yesterday, the Kentucky story, which I've never told before because Ash Finn is in Kentucky. And so, man, it just brought back a lot of great memories driving down to Memphis. I remember that. I was like, man, it's hot. I drove down in July, right? I drove down in July of 2005, and I had not been met with or faced with heat quite like that. Like, I don't care what anybody says. I don't care about people that are on the equator. I don't care about people that are in, Arizona. Forget about Arizona. Las Vegas. Forget about Las Vegas. The hottest place on earth is without question Memphis, Tennessee. Memphis, Tennessee is the hottest place on earth because you have no breeze from anywhere. You've got the Mississippi River, but there's no breeze coming off the Mississippi River. Right? No chance. And so it is so hot in Memphis, man. People that have been to Memphis, back me up on this. If you've been to Memphis in the summer, July, August, you know what I'm saying. If you're from Memphis, drop something in the chat and let me know because you got to back me up on this. I know I'm right. I'm wrong on pretty much everything else, but this time I'm right. JT is in the house. Dr. Jim, I'm curious. What did you write your dissertation on? Wow, what a segue. What a segue. I was talking about Memphis, went to grad school there. It's obviously where I graduated with my PhD in finance. Have you published any more formal research since then? Yes, I have. I hope you're having a great day, and thanks for always a great show. Oh, thank you, my friend. Yes. Yeah. So when I was an academic, when I was a professor, which is what I was before I joined Tasty, we had to publish. I think I published 4 papers, maybe 5 papers. I'm not sure. It's some number between 4 and 6. I don't think it's 6. I think it might be 4. It's either 4 or 5. Let's go with 4. I published 4 papers. Trust me. They were every bit of the B- quality you guys have come to know me for. They may have even been more like C- quality. But we had to do it. It honestly wasn't my favorite part of the job. I really just enjoyed the teaching aspect of it and the instructional aspect of it. And being in the classroom and being in front of the students, it was a very special time in my life. I have such great memories of all of that. And so I miss it in a lot of ways very, very much. You guys are amazing, and you guys are a different kind of special place in my heart. But the face-to-face with all the young kids as they were learning these things for the first time, it was really, really, really fun. But yeah, I did publish papers along the way. I had one paper won paper of the year at that journal. And so, yeah, that was pretty cool. But so that one was not too bad, but I had a co-author on that one. And so my co-author did all the work. I just kind of rode her coattails to the finish line. And I'm like, yeah, I'll take it. 100% take it. No, Josh, it was not in Mad Magazine. It was in Mad Libs, actually. It was a Mad Libs type of deal. And so, but yeah, I mean, I don't know. I can't, this was so long ago, JT. I don't even remember like what journals to look up or whatever. It's not like Journal of Finance or anything like that. It's not anything that matters. And so, I just did it because I had to do it. And so, but thank you there, JT. I appreciate you. Jared Kramer is in the house. Dr. J shows up and then market makers start up the green algo. Let's go. That's right. But now it's a little bit red again. And so I don't know about all that. Could be an error in the code. Let's have somebody debug that guy. And so let's see. Sam L. Doc, you cracked me up with the glute machine. I guess we now know who's really the boss at home. Not even the algo can handle Miss Summer. Miss Summer. No, it's autumn. It's not summer. But she gets all that stuff, man. She gets summer. She gets winter. She gets April all the time. She gets autumn from time to time too. She gets like Adrian. People have been messing up her name for so long. But no, it's actually Autumn. Her first name, her middle name is Autumn. Her first name is actually Mary. And so she's named after her mom. Her mom's name is Mary. Her name is Mary Autumn. But it's very common in the South to either go by both names or the middle name. Like this was another culture shock for me. When I moved down to Memphis, there were so many people, like 30% of the Memphis population goes by either their middle name or a double name. And I'm like, double name, you got to choose, man. Like you don't get both, you get one, right? But no, down there, man, they're getting both like all day long. And so I was like, wow, Mary Autumn. It's not Mary Autumn though, it's Autumn. And sometimes she'll go by Mary, but not too often. Joel James in the house. Dr. Jim, how about something in Hood, man? I got you. Earnings turn. I'm thinking about selling the 70 put. Go for it. I can't be bullish in Hood. Again, it's a contractual thing. It's not really my call, but I can't be bullish in Hood. But good luck to you, my friend. I think you'll be okay. Let's see. JT, to 1 billion shares, $50 capital requirement. What are we talking about? The single stock futures? I'm actually not sure. Oh, Bernard down in the house. What's good, Dr. Jim? I bet the single stock futures will take off. I'm kind of with you, my friend. I kind of think that the active trading space is so huge now that there's an appetite for speculation and there's an appetite for risk. And so because of that, I think that these things could be huge. They could be absolutely huge. Griffin Jones, the trade idea, buy 100 SLV shares and sell the 66 Delta, the 68 call for 1080. I mean, sure, if you want to do a covered call in SLV, like go for it, man. I mean, you could 100% do that. I mean, you would sell the 68. Oh, you want to sell an in the money call. Ah, okay. Interesting. Okay. Let's talk about that for a couple of seconds. So Griffin wants to buy the shares at 73 and then go into, did you give me an expiration? 49 days away. So the March 31st quarterly, and then sell a 68 call. Okay. So this would be an in the money call. An in the money covered call. So when would you ever consider something like this? In my opinion, this is a very seldom thing that I even consider. And I don't know if it's less seldom or more seldom. I even less often do it, actually execute on the idea. So in the money covered call, you have to understand you have no upside potential in terms of the appreciation. You have no upside potential, but you have downside buffer baked in. So obviously from the stock price of 73 all the way down to 68, you're essentially covered. You're going to be immunized from that move. Now, if it happens tomorrow, you're not going to be immunized because the extrinsic value on the short call is going to blow up and that's going to work against you. But over time and going to expiration, you're covered all the way down to the strike. Just like you would be if you sold a call that's out of the money, you can make money all the way up to the strike. It's the same idea, just in a very different way. So So when would you consider something like this? Well, in my opinion, on trade entry, it doesn't make a ton of sense. It makes more sense to me if you have a position on where it's gone up a lot. You've held the stock for a long time. You don't want to sell for tax reasons or whatever, but you want to give yourself some downside protection. Selling an at the money or slightly in the money call against those shares makes a little bit of sense because you can still get a lot of extrinsic value and you kind of bake in a little bit of downside buffer. So I wouldn't do it on entry there, Griffin, but maybe something that is when you've had the position for a while. So that's how I would think about that. But Danish Dynamite's in the house. Crash, boom, bang. I finally put my big boy pants on and sold my first naked put in the MES. Watch the market crash. Man, congratulations, my friend. This is a very exciting moment in your trading journey. And by very exciting, I mean it's going to be absolutely terrifying. like very frightening from this moment until that position is closed. And so welcome to the arena, my friend. And so we've been waiting for you. And so it's good to see you, my friend. And so, but yeah, MES is a great place to start. It's a fairly small position. It's like 50 beta weighted delta. So it's half the size of even an SPY contract in a lot of ways. And so, so there you go. Let's see. Stephen Bibbs, I had no idea. I have no idea what the advantage of a single stock future product would be. How would they be different than just options? I know. It's not that they're going to be, the comparison is going to be single stock futures versus single stock stock. The comparison is not going to be single stock futures versus single stock options because that's very different. But it's going to be single stock futures because, and then we're probably going to get single stock futures options. And so now, not only are you scalping meta futures, but you're also going to be scalping meta futures options around the meta futures scalp. Right? And so, I mean, this is what we need, man. Like, I've been thinking about, like, what are we missing? Like, what do we really need? And this is it. Like, I need a way. I need a medium to get me into a NVIDIA scalp and then NVIDIA futures options that can also scalp around the NVIDIA futures scalp. Like, this is what I've been missing. This is what you've been missing. And so thankfully it's all here and it's going to be ready to go. But speaking of ready to go, the show's over. I can't believe it. I really can't believe it. That's really, really fast, man. You guys have no idea, but I appreciate you guys, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf30. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Hello, everybody. Tim Knight, and it is time for the wonderful world of technical analysis and charting. Well, we've got a red day on our hands for a change, and what's going on is what I was kind of hoping for, which is that we got our mega rally on Friday, and the fumes from that continued through Monday, and we got a little bit more of it this morning. But Ethereum and Bitcoin are sort of, weakening a bit. and I think that's helping dampen spirits. And before we go to the charts, a little anecdote for you. Those of you who read Slope anyway know this already, so I'll make it quick because I don't want to waste your time with repetition. But I made mention of a stock yesterday that I'd never traded before called Credo, CRDO. And it was a beautiful pattern, and I shorted it. Actually, no, excuse me. I bought puts on it. I bought June puts. The strike was 125, if memory serves. Yeah. And then I was like, I really like that chart. So I did something I don't often do, which is that I not only had puts, but I shorted it too. I doubled down. That was a mistake. Now, last night, or after the close, CRDO said, hey, everybody, we're not doing earnings till March, like you know, but sales are looking great, and we're going to increase our estimated sales for the quarter by this tens of millions of dollars. And the stock went berserk. So the stock, was like 124 at the close. It was like suddenly 135, 140, 145, 150. And two big mistakes here. And this is an object lesson that I hope you can avoid this in the future. Don't do what I did. Mistake number one was shorting it. Buying the puts was fine, but shorting it, do one or the other, okay? That was just getting greedy. So that was too much exposure. If I just shorted it, fine. If I just bought puts, fine. But going crazy like that, not so fine. And the other mistake was I was watching these price quotes go brrr. I'm like, oh my God. And I did what nobody should do, which is basically panic. Be like, get me out at any price, buy to cover. Suffice it to say, and it's no surprise, I got a lousy price. And that was terrible. And what was extra terrible is that I have on my site these kind of cardinal rules one should follow as a trader. If you want to see them, just go to Google, type Slope of Hope Trading Rules, and it'll take you right to the page. I'll show you the page at the top. Slope of Hope Trading Rules. And rule number 2 is basically just what I did, which is don't trade after hours. I'll give some reasons for that. So what I am not saying is, gosh, I shouldn't have shorted, I shouldn't have done any bearish position on CRDO. No. At the time, the chart looked terrific. And you want to know something? It still doesn't look bad. I covered my short at a lousy price last night, but I still have those puts. In fact, I'll let you know a secret. I added to that because I still like the chart. It's not as beautiful as it was yesterday, but these are June puts. Lots of time, and I still like the chart. So, after some considerations, like, okay, I'm going to actually buy some more of this. But being too aggressive with one position, bad mistake, and freaking out after hours and, either buying or selling or short anything, that's often a mistake too, because the market's thin and emotions are running hot. And as you might guess, if I'd done nothing at all, just kind of waited to today, I would have still taken a loss, but at a much better price because the stock is simmering down. And we'll actually get to that chart in a second. But that little lesson was worth a long post on my part. And I thought it'd be worth mentioning here too, because unless you've come to the wrong website, this is for traders. And so it's nice to know. Okay, well, let's look at those charts together. We start with the ES, which I appreciate is not at lifetime highs and has still held on to modest series of lower highs. So we have our lifetime high here, a little bit of a lower high, a little bit of a lower high. The vast majority of that bounce was, of course, on Friday. And we got a kind of a peewee version of it yesterday. And intraday, we were even higher today, but we're down a little bit. And we've got a red bar on our hands, so maybe it'll poop out. I noticed the administration is already laying the groundwork for tomorrow's jobs report. They were saying that, since we're deporting millions and millions of people, really? Is that the count? Okay, millions and millions of people, that'll affect the jobs report. So I guess the news will be surprising in some way. I don't know if it'd be like lots of jobs are empty or what, but they definitely seem to be kind of like doing the CYA pre-work on that data coming out in the morning. So that's a big report coming out an hour before tomorrow's opening. Of course, it's very delayed because of the various and sundry government shutdowns. So that's worth watching. The diamonds hello, go back to the right chart. The diamonds, DIA, new lifetime high today on the Dow. Here again, a huge move on Friday, junior version of it yesterday, another junior version today, almost certainly a positive close. Looking a little bit tired. And as I said, I mean, this is still bullish, don't get me wrong, but the things to watch for would be a failure of this breakout level, and B, much more severe, would be a failure of that trend line anchored to the Liberation Day low. As far as CRD, I've kind of given it lots of airtime already, but I'll just say that, this topping pattern is somewhat besmirched by today's price action because we have pushed into this level, we pushed into that pattern. But there are many examples lately, I'll show you one later, of stocks which have this crazy out of the blue pop, but because the stock is fundamentally in trouble, it quickly undoes whatever that pop is all about. IBM is a good example not too long ago. So as I say, were it not for the short, I'd still be, would be self-flagellating here, but it's still a pretty nice looking pattern, CRDO. As far as precious goes, I think I read yesterday that silver had the kind of the calmest day it's had in weeks. I've also read, not surprisingly, that kind of mom and pop coin dealers are like, we're not buying any more precious right now. I think what probably happened to them is that during the frenetic peak, they were happily just buying up, all the junk silver coming in, people with old 1964 and before coins and, and I did myself. I went in there, as I told you, and sold just about all my silver bullion for, if memory serves, I want to say $113 an ounce cash. Well, where does that leave the little coin dealer? Cash is gone, and he's got all this silver, which is worth a lot less than it was before. So for a little business, that's dangerous. So these motions can be good and bad for the small businesses out there that deal with precious. GLD is down a little bit. I would not be surprised to see yesterday be the top for now. So we sink back down. From a more clean charting perspective, the miners have a very clean gap. There's the price gap on GDX right there for resistance, and GDXJ, the juniors, have a similar price gap like so. So that's an important test. As far as crypto goes, here we have Bitcoin, and the two key resistance levels are around 81,000 and a level I don't think we'll see, I hope we don't, at least 98,000 thereabouts. As it is now, even with the enormous rally on Friday and the follow through, we did not get anywhere near that 81,000 level. We are sub 70,000 again. And I did a post this weekend where I sort of was crazy enough to actually offer a prediction for where I think Bitcoin will be in the next, I don't really know, year, maybe two, 25,000. I think it's going to get to 25,000 sometime in the future. It could be this year, it could be next, I don't know. But that's where the measured move lays it out. It sounds insane, but, I'll go with that. Ethereum is also weak. It's down 5.52%, and we are getting into where we were in Friday's price action. Couple of ETFs that continue to be superstars for the bulls are XLB, which is materials, and let me just kind of super quickly rough out a little basing pattern there. So XLB has been just a sensation. It's up again today, about 1.5% lifetime high. And energy companies continue to be strong. XLE on an intraday basis, lifetime high today, but it's looking a little bit pooped up there. I'm not getting in front of these monsters, but they're very overextended, I think. But I'm not shorting them or anything like that. But they have been standouts as far as the ETFs go. One stock that is having a bad time of it is Monday. A lot of software stocks, a lot of SaaS stocks having just private bear markets of their own, having lost 50, 60, 70, 80% of their value. Monday is at, I believe, a lifetime low. It looks even lower than the depths of 2022. Pretty astonishing chart there. Similarly, although not nearly as dramatic, work day, they seem to have a penchant for something day. Work day is down a little, probably in sympathy, I guess. But these are massive distribution tops and ugly stuff out there. This, as an aside, the reason I'm showing rubric is to make the point I was trying to make earlier, which is these out of the blue pops don't necessarily mean a sea change in what's going on. Because like in rubric's case, it was just, down, 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 down. And then for reasons that aren't important, I don't know what they were, but for whatever reason, it had this enormous gap higher, followed through for a few days, and then kind of went back to its old tricks and, subsided to levels far below when the pop had taken place. Certainly not saying that's what's going to happen with Credo, but just saying that don't necessarily be afraid of surprising gaps like that. Intel, I remain short. The gap on this is held nicely. It's down a good amount today, almost 7%. Let's just pop a horizontal ray on that price gap, like so. My stop is tighter than that. I've tightened the stop to this bar, but the most liberal stop would be up at that price gap if one were shorted. Palantir, which I've got 28 different short positions now. Palantir reversing away from its distribution top, I'm pleased to say, 3% negative on that beautiful pattern on PLTR. Chipotle CMG also down about 2 1/3%. This gap was sealed and then some. You can, even without me drawing a line, you can see we've got a little above that gap, but we are starting to weaken away, and we've got a long series of diminishment going lower lows, lower highs. Micron MU also down nicely, over 3%. Lifetime high was right up here, and we have been working our way lower. And even Friday's mega rally didn't do too much to the stock in terms of healing that damage. So that's kind of encouraging. SGHC, which is Supergroup, down almost 3%. This is one I talked about when I first stumbled upon it some weeks ago. And here again, just a quick and sloppy illustration of the pattern. And my best dollar, it doesn't look like much from here, but my best dollar maker is SanDisk, SNDK, which until about 6 days ago was unstoppable. It just lifetime highs every day practically, but it seems to be souring somewhat. So we're down almost 7% on that one. Then the other storage stocks as well, WDC, STX, things like that, similarly situated. And one kind of boring one, but I've got some puts on for all my puts are June puts is Google, Alphabet, GWGL, and it's off 1.3%. So just to wrap things up quickly, semiconductor remains key to watch. Nothing bearish will happen for more than a day or two until this channel breaks, and it is a ways away from breaking. But watching that closely. The NQ, the NASDAQ, is off a little, about 1/3%. It's been just treading water for literally months at this point. The uninterrupted blast higher ended way back in October, and it's just been going nowhere fast since then. But even though we're kind of on the tail end of earnings season, one to watch after the close will be Robinhood. I have no position, and I am hoping that it gets a nice rally, because if we can rally up to that gap, up to that round top, it looks like a terrific trade. If it just goes plunging, well, too late. I'm not going to touch anything, chase it as it goes lower. But if it does rally, I think it can be very appealing from a risk-reward perspective. Okay, that's it. We got through them all, and I will see you here tomorrow. Bye-bye.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was not a paid, you're not getting paid for this advertisement.
All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at tastylive, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and welcome to Last Call. I cannot see you. Am I still in this meeting?
Yes, I see you and hear you, Liz. So
Okay, good. Good. Wonderful.
Although I'm sorry to our production team, they sent me instructions on how to show my mouse so everyone could see my mouse. And we were so busy running from the city at the SIBO to setting up my home studio again here. I don't have the mouse showing today, but I will get it done by Thursday.
If you stay on the chart, we can see the crosshairs. I think instead of
Okay.
You can see the crosshairs instead of the.
Well, no one else can see it because no one looking at it right now, Liz. It's just you and me. So, Josh, let's pull up the promotion we've got going on right now. Not the platform, but the Refer a Friend. Here we go. Refer friends, earn bonuses. Who doesn't love to earn bonuses?
I know. I need this code. I needed this. I said, Josh, how do I refer a friend to Tasty? And so he's like, I've got you, Liz. And he pulled this up. I'm very excited.
Yeah. So refer a friend, earn bonuses. You can just scan that code with your phone.
I know. Yeah.
Right there. Go ahead and scan it, Liz.
It's real small for me right now. But if it's this big, do you think my phone would pick it up?
You know what? Yeah, I think it might. It might. I don't know. I have one of our friends is one of our friends is going to fund her account this weekend because she sent me this list of stocks she wants to buy. She's going to fund her account this weekend.
It does not work I'll have to wait until it gets a little bit bigger.
So since I can't cash in on this since I work for the company, and you can't cash in on this because you work for the company, maybe JD wants to refer Mandy.
JD would love to refer Mandy. He would love to. He does not work for the company, thank God, because he's not making any sense.
All right, this is last call. We don't have a lot of time, and we have a lot of earnings. So I will say let's jump into the platform, and I'm going to start with Hood here. What do you think? Let's jump in the platform.
I like it. Robinhood has earnings, and I have a position on in Robinhood, and I thought about putting one in us. So I'm going to give you two options, Jenny, and you get to choose. I actually know which one you're going to choose, but that's okay.
No, I thought today I said to Liz, I said, you come in with.
No. I know which one you're going to choose. I put something into my account that's different, but we have to, in the essence of capital, do something differently in this account. Okay.
Yeah. Okay. So and we have a residual call that is so far from the realm of if this comes in.
Slow clap for the next one that I'm going to put in if this comes in. Okay. So what I have in my account, if you go to the 3-day, Jenny, or the weekly, not the 10-day.
3-day.
I've been liking these. I've been putting the buffer trade in, and I'm actually paying a little bit for it because I don't mind losing a little bit of money. I'm putting the buffer trade in the near term. And now this is going to be a little bit fast because we're going to go through 3 trades in 20 minutes. So buy the 86.
Put.
Sell the 78. Put.
Okay.
So I've got 287. Now I know the true buffer trade is you got to get 287 in collection, but I go all the way up to the expected move for the cycle and see how much I'm paying for it, just a little bit.
And she means like 287 in extrinsic value. So the typical buffer is you buy this put spread as protection, and then you sell an in the money put that has about 288 in extrinsic value.
Yeah. Yes.
Which would be the 90.
Yeah, but I wanted more profit potential. So I don't mind paying a tiny, tiny, tiny bit for this because you really don't get long. You don't lose anything to the downside, but this little bit. I'm bringing it all the way up to like the 93.
Okay, so here we're taking in 576 credit. When you say you've got a little bit of risk, that's right here. If it like barely goes up.
Yep.
But you've got this, your profit potential is this 575.
Yep.
I'm going to go to the analysis page. And I'm going to remove our old call here.
I mean, that's really not doing anything for it, but yeah.
And take a look at what this is. Like, here's the buffer. You've got profit potential to the upside.
If we did sell one closer, you wouldn't have that like little risk that's right there.
Yeah, 120, not bad. $129 anywhere to the downside. But then your real risk is getting long hood at 77.5.
Yes. So the other thing I've been doing this and I've been liking it, and I've also been doing the Bob on Fire trades, which you'd only make half the move to the upside. But for the purposes of this account, I wanted to just sell a faraway put for $1.
Okay. Whatever.
So just because capital efficiency, so look at this. This is $1,100, and we would get long, and you do lose a little bit of money to the downside. So I'm trying to do high probability trades in something, and so we don't get hurt to the downside. So then clear all this out. This is what I have in my account.
So that's option A, and your risk is at 77.5, but your profit potential is 574 if hood moves up.
Correct. But you will lose if it goes down. And then with this one, just go find a put for $1. So go all the way down, and you're going to go to the 77 put.
Which it's the same break even, Liz. It's the same strike. The break even was 77.5. It's the same break even. Personally, if we're going to take our risk at 77, I'd rather have the $575 profit.
The only thing that I thought for this account is anywhere to the downside, you'd lose $120.
Yeah, but I mean, that's not.
All right, then go for the big dog. I've got it in my account already. Hit it.
I just said, come on. Well, then let me look at Bob on Fire's trade, because that would get our break even much, much, much further.
And you'll make about 50% of the move. So if there's an $8 move and it goes up $8, you will make approximately, and this is one of the ones one of the original Bob on Fire trades was in hood. And this is what not punished pixels. This is what Blue Wackadoo brought to us originally.
Okay, so here we have, it's tough because it's 50-55. You're moving it by a lot.
Just move it from the 85. Yeah, there you go.
Okay, so here you've got the 85-115 call spread and the 250 puts. Buying power is double $2,000, but you've got 2 puts.
You've got 2 puts.
But at 50 instead of 77.
Yeah, it's a big difference, and you get to make about 50% of the move up. I don't mind this either, but I honestly, we have to conserve capital in this account. Not really, but like I said, this could be with us for a while. Where I know that put could be off overnight.
Right.
And
Okay.
the buffer in the 3-day could be off overnight. You can bring it down so we don't lose $124 if it goes down.
That's true. You could say
just narrow it. There you go.
Or we still want the protection to 77. What's the difference? 309 or 288, 288, and then 90. So you've got 362 in profit potential.
With the same break even.
With the same break even. You just don't have that risk to the downside. Like in here, your risk is only $30.
See, that's a number for this account. That's a number I can live with. For mine, I was bullish. I wanted the profit potential. I didn't mind taking that little bit of risk to the downside, but I didn't want to lose $124 when you're putting in that buffer to buffer your downside in this account. That's why I was like, we just got to go with the put.
Okay.
I think this is good. $1,000, you can make $362. That's not bad.
So we're using $1,000, $359 credit. The profit potential is $359 if Robinhood goes up. And in between here, it's very minuscule, $30 loss.
Yeah.
The risk is at 77.5, owning Robinhood at 77.5. That's the risk.
So from this perspective, if we're going to own Robinhood at 77.5, we would just then roll the put out in time, right? Because you could take the stock and sell a call against it, but capital wise, that's more capital than just rolling a put.
I mean, if Robinhood really, really dropped far, and this is a weekly, we'd just take the loss on that put and probably turn this into a zebra. We'd turn it into like a call zebra. We'd probably have to do that because when this account's a little bit limited on capital. Perfect. So, all right, 360 credit. There we go.
And just rolling a put. I like it.
If Robinhood, was that from you?
I like it. Yeah, my phone just went back on.
Oh, all right. So that's Hood. Lyft is another one having earnings. Let's see how we're doing on time. 242. Lyft has earnings. Being a like $16 product, $17 product, looking at the expected move, 208, 230, 281. I looked at going all the way out to the 38-day just to collect. Let's see, the 15 put is about 74 cents in the 38-day. Or in the 3-day, the 15 puts only 32 cents. I think you have to do the monthly.
I know.
I think you have to do the monthly.
Yeah, you almost have to. I don't like it, but it's not bad.
Otherwise, in Lyft, what are you going to do? The 15 put in the March.
Yeah.
74 cents. When you talk about return on capital, you're getting $74 and only using 176.
That's a pretty good return on capital in 38 days. It's a very long, slow bleed, I will tell you that.
Well, no, not if Lyft goes up. If Lyft goes up on earnings.
Oh, if Lyft goes up on earnings, great. You are doing that. And if you want to take a look, close this. We'll leave it there, but close this and open the 3-day just to see how far you get outside the expected move. You're right at the expected move for the cycle.
Right. But I don't want 33 cents. If Lyft goes up, if I sell a 15 put in the 3-day, if Lyft goes up, we make 33 cents. I'd rather try to get 74.
We are well aware of the single stock futures that are coming out this summer. We're very excited about it. We have the day trading rule does not apply to stock futures. I don't know, but we're gonna have to. That's the one thing that was asked. I believe that it should get around it, but we'll know more as it comes out.
Right. Yeah. Like today.
Futures typically don't have the pattern day trading rule.
But today was the well, and again, it's just stock. For as far as I know,
it's just futures. It's not options. It's just single stock.
Right. So it's not like, as far as I know, it's not options.
But but I believe futures options also bypass the pattern day trading rule.
Right. But I don't know if they're going to be options or if it's just going to be.
I think eventually they will, but I don't. That's not what we didn't get that release. It's just single stock futures.
Yeah. Today's the first day I've heard about everything.
Yeah. Well, that just came out.
Okay, so 74-cent credit using $176. Our risk is getting long Lyft. This is more my speed. The Robinhood, I didn't put it in. That makes me nervous. But the Lyft at $17, how much can it hurt me? No.
You know what I need? You know what I give myself for that Robinhood trade? Gave it to myself.
Well, you are like a Robinhood bull. You've always had it.
Yeah. That is true. True story. True story. Okay, what other things have earnings today?
Upstart, $39. It's, what do we have? $6 expected move. That's decent. If we just want to go to the expected move and get $75.
So here's what I don't like about the a $33 product with $1,300.
I know.
That's so my problem with it isn't this overnight trade. My problem is if we have to hold it.
Right. All right. The buying power in Upstart.
Yeah, it's not this move. Like this trade doesn't bother me at all. I really like the 73 put in the 33s. The 73 cents in the 33 put. But if the wheels fall off scenario, I don't like having to put that much up to hold which would be a $33 product.
I moved it up a strike and then bought something. I don't know. It's kind of crazy, right?
Yeah.
You could just do like a $2 white iron condor.
Sure.
Here's a $2, 46.48. I don't know what to think about Upstart.
I know. Honestly, we don't need to push things in. And we also have a jobs report on a Wednesday tomorrow. It's usually on a Friday, but due to the government shutdown, they're giving it to a different day. Not that matters. Not that anybody knows anything. I don't know if it being on a Wednesday is going to make the market go up or down. I'm just saying that there is a market moving possibility tomorrow in the jobs report.
So I will say, because of we've got a lot going on this week, we did close our ES. We did not get filled at the price we initially wanted to be filled at. We wanted, I think, $20 something dollars or $21, and we closed it today at about $19.25, $19.50 maybe. So we made some money on this ES crab trade, but not as much as we wanted. But we didn't want to ride this through the week.
Right, because hey, why? Okay, this is, if you open this up, we had 2 days left on one option, 7 on the other, and we've got 3 days left in 7 days. And there's a jobs number coming out, which means we've seen this be a loss, we've seen this be a win. We didn't take it when the markets are so wide, it might have been a fictitious win anyway. But we didn't take it then. I don't want to ride it and be like, roll the dice on the jobs report. I'm either down money or up money. That's not what I want to do.
We needed it. Like, best case scenario was 69.25. So. Yeah. Anywhere to the upside was hurting us at this point.
Yes.
So it was it became a 50-50 shot on, we'd make more money if the market goes down, we'd lose money if the market went up. We figured we'd take a small win.
Agreed. Okay, now Jenny, my next question to you is, before you even open it up, would you take 24.5% on a $5 wide iron condor in 5 days?
In 5 days on an iron condor, especially if it has, normally in an iron condor, we're waiting weeks to get 50%. So if I get 25% in 5 days, sure.
Okay, then open up GOOGL, please.
Yeah, look at this, 5 days, and we collected $2. So what are we going to do? Wait another, few weeks for another $50? Let's just take the 45.
Agreed.
Good call, Liz. Good call. Good call.
We got out of USO today too, right?
Are you pushing everything out?
I am. You know, it's funny. It's one of those days where every time you get filled on something, it kicks me out of Zoom, so I can't see you. So yes, it forces me to push things out.
All right. USO, we closed. USO is gone. We closed that earlier. I'm going to go to the earnings list. Here we have Bob's list. Hood, tell me if anything else jumps out at you.
No, I do. I'm not saying they're the same, but I always think Shop and Spotify, like I know they're not. I know they're not the same thing, but Shop is only like $100 product. Shopify.
Okay.
McDonald's. Can I tell you the dumb thing I did at McDonald's?
Sure.
Okay, go to McDonald's. I just wanted to be in because we were talking about it today.
Okay. I thought there was actually going to be a story of like you doing something dumb at.
No, I did not put my drink on the ground or anything like that. So I just wanted to be in McDonald's just for fun, and I did an at the money calendar for 65 cents.
Okay. Oh, 65 cents? Sure.
Yeah, it was so cheap, and you don't think it's going to be. You can pick upside or downside. They're the same. Like you can go 25 or 27.
I'll do the 3-3.
Perfect.
I did my birthday 3-3.
There you go, 3-3.
43 cents.
Oh, you got it cheaper than me. I think I'm going to be closer.
I don't know if I'll get filled at 40 cents, but I'll go.
Like I said, I paid 60 cents for it and said, I'm in for McDonald's. Whatever happens, happens. You know what I mean?
Hey, some of those calendars, look at our AMD that came raging back.
You know what's funny, Jenny? I had some, it had some memory as we were talking. We put that calendar on after earnings.
After earnings?
Yes.
Why?
I don't know, but I remember AMD went down and we're like, oh, it's 217, and I just popped it in.
Oh, just because it was 217. Okay.
Yes. Yes.
Okay. Any other?
No,
Okay,
but so I will tell you, this has been a want day for my SPX trades. I did not get out of my SPX today, even though there was, when I put it on at 9 o'clock, it popped up a little bit, but never enough to get to the percentage that I wanted. So this is one of those days where I'm taking a loss.
But I'll tell you who's going to take a big win. This guy.
Jack Tucker.
I think so because, all right, his puts were 69.50, 69.60, 69.50, 69.60, 69.50. Ooh, we're right here, 69.47. We're right at his 69.50 puts.
I bet he's out. In my mind, he's out.
Yeah, I'm going to guess he's out. Because he was just trying to take 40%. I bet he got out.
Yeah. And if you can hold it until right now, you're probably out.
And I don't want to forget Scott Sommer. He wanted to know how about a Johnny size earnings setup, NVIDIA 190 call calendar.
Ooh, I love an earnings setup.
Sell the Feb 23rd by the Feb 27th.
Okay, 190, Feb 23rd, Feb 27th.
And Stackalope, sends a bullish idea in MU.
Okay, let's take a look at. We have 6 minutes.
Okay, so we're looking at sell the Feb 23rd by the Feb 27, 190.
Yeah, I can pull up the strikes so you don't have to remember them. Not that it's that hard. But it's the 190 call, Feb 23rd, Feb 27 in NVIDIA.
In NVDA. Got it. Feb 23rd. Sell the 190 call.
Yep.
Feb 27 by the 190 call. Earnings setup. Calendar 293.
It's not bad. I'm in.
We'll do it. Do you
remember? We're in with our international man of mystery. Right?
Summer,
yeah.
Shipped, and I'll adjust it if we don't get filled.
Yeah, signed, sealed, and delivered. I like it.
So that's working. That was really just a basic at the money calendar, but it's not a basic calendar. It's an earnings setup calendar because we're selling a cycle that is before earnings, buying one after. If we wanted to make this cheaper.
Well, what's funny is there's still a sale in between, 2-day sale.
I was going to say, if we wanted to make it cheaper, you could see in the 13-day, that 190, we're getting 465. In the 15-day, it's, let's see, slow loading here. Slow loading here. What is it in the 15-day?
Hold on. Maybe
or are these going to be new?
They just added those.
Yeah, they just added those. When he put this trade out, they didn't exist yet.
Yeah,
they're just adding them.
Yeah. So great. We have a sale built in.
Okay, wonderful. We didn't even know. And Stackalope came in with a trade in Micron.
Can I just say, I like the name Stackalope. I think it's kind of fun.
Yeah, I do too. March 360, 350 put credit spread.
Okay, yeah, I've got it up March 20th. You've got the 350, 360. It's the 37 delta put credit spread. Now he's through earnings. Did you notice that?
Yeah, but it's directional. So
no, I totally get it. He was getting 412. It's 420 right now. It's the 37 delta.
Micron. Again.
Stackalope? Love the name. I don't know that I'm going to put this trade in. I mean, you can, Jenny, if you want to, but.
No, I look at this and I think like if one day Intel could if Intel could be the next Micron.
Oh my God. Wait, where's Intel right now? I know it's down today.
Intel's having a rough day. But so
it's not but in the grand scheme of things, when you said it's having a rough day, look at that. It's not that bad.
So it's funny because I have Intel stock and I have synthetic zebras set up to protect it to the downside. My son has Intel stock, and the way we protected his stock, we sold a call spread and bought a put spread. And I look at it all the time. And every time, because his is still in the 10-day, and his short call spread is the 45.50. And every time Intel's up, I think, I wish we didn't sell that call spread against your, to buy that put. But now, on a day like today, I'm glad that we sold that call spread to buy that put just in case it takes a
Yeah.
real turn. In case it takes a real turn.
You need to be a trader psychologist for me right now, because whenever I'm trying to protect my stock, I've got to do it in the very, very, very near term, because otherwise it doesn't do anything until like the very end, right? So I like that it's in the 10-day instead of you being like, I'm going to go to the 38-day and sell a call spread and buy a put spread.
No, when we started, we went far out because it gives you the ability, like here, if I sell the 50-55.
Yes, I get it.
And honestly, that's not even, then what is he going to do by the 42?
Yeah.
It's not even close. Now we know people who, when they're protecting their stock, they like to go 3 months out.
Yeah.
They like to go 3 months out.
I really, truly do like what is technically the buffer trade for protecting my stock, which is buying that put spread and selling a call. Right? But that's essentially, when I'm going over to the other side, it's the same thing. Like the buffer trade I did in Hood, it's as if I had the stock, because I have an in the money put, and I have the long put spread. So it's so funny when you understand your synthetics. We're filled in NVIDIA.
So here, if we're trying to protect it by the 47.40, and then I have to sell the 50 call, and then when it's going above 50, we're crying that we sold the 50 call. It's hard. Sometimes it's hard to protect your stock.
It's so hard to make money. It goes up. Because when you say you're crying because it goes up, you have a bullish trade and you made money on it. You kept yourself out. Like, I understand.
There have been this day. That's why I put on the, anyway, my whole point was that I hope one day Intel can be the next Micron.
Unless you've got a call against it.
That's why I'm not selling one.
It's so funny. It's so
okay.
Funny. I think we did all the things. Do you believe how that this boosted on 24? This is the lowest on the day that I've seen it.
No, like all of a sudden at the end of the day, we took a turn. What's the news? Who knows what the news is, why the market took this little turn at the end of the day?
Well, maybe they're waiting for the jobs report. And what is the VIX? May I see where the volatility index is, please, Jenny Andrews? Okay,
1750, right?
1793.
Oh, 1793. Sorry, I can't. I know.
I figured sometimes when you said 1750, you were just guessing.
I'm just guessing.
I know. Sometimes
the little Zoom box that says you are sharing your screen blocks.
It's so fun when it does that, right? And you have to guess where the price of things is.
Yeah. So I was just guessing. I don't know. I hope Jack Tucker got out of his for a win. I hope he did.
Now, the chat seems to believe that Jack Tucker and Blue Wackadoo had great days.
Oh, good.
And I'm hoping that is the same.
Good. I hope so.
Now, there are a lot of earnings. So when you look at earnings tonight, we looked at the ones that are the biggest ones. You don't have to force an earnings trade, especially when there is implied volatility everywhere, right?
Yeah, you don't have to force an earnings trade. We've got today, this NVIDIA is not an earnings trade, it's an earnings setup calendar, and the Google we closed, but we sold a put and lift and a buffer and Hood. Those are the only earnings trades we did.
And you know what, Jenny? I'm really glad that we assessed that put would have been the same break even, give or take, with that little bit of risk, as the put that we would have sold. So now we gave ourselves a little bit more profit potential if it goes up.
Right. And Hood, it could possibly go up. I mean, Hood has
it's come down quite a bit
from 150.
So I think when I look at Hood, though, that's the crypto fall.
Right. Yes. Hood is very correlated to crypto. So I'm a little bit afraid of Hood. I can't seem to bring myself to get back in. I'm a little bit scarred in Hood, and I have not been able to bring myself to get back in.
Yeah, because the Cubs game 2 years ago, somebody told her to sell her Hood. And when that person said to sell it, I quadrupled down. And Jenny's so mad she got out.
Sold all my Hood at $19. $19.
Well, it's heading in that direction, if that makes you feel any better. Because it fell from grace. It went from 150 and now it's 71. So it got cut in half in a very short amount of time. From October to February, this stock got cut in half.
But again, it's highly correlated to crypto.
It is. I feel like that's the crypto fall. Like you've seen it in Circle. You've seen it in some of those things that are and MSTR and all those.
Yeah.
And the bell.
All right. We are out of time. Liz, I will see you tomorrow morning. Everybody stay tuned. There's a great overtime coming up.
Oh, I love those guys. They're the best. All right. Everybody, we'll see you tomorrow live from the SPX Fit. Jenny, you have a good night. We'll see you tomorrow. Bye.
Bye, everybody.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was not a paid, you're not getting paid for this advertisement.
All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at tastylive, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Well, we are back. This is Overtime. I'm Milius Spivak here in San Francisco. Mr. Nick Batista there in Chicago. Sir, are you surprised that these markets did absolutely nothing today?
It's been more of absolutely nothing. I've been calling it the violently unchanged day because it's felt like this pretty much all year. I don't know where I'm at right now because I was feeling the ick and feeling bearish all last week, and it played out well, and I caught the move lower, but I expected more. Like, I did not expect us to just bounce from around 6,800 again and be back at all-time highs, within a couple sessions. So I'm a little off kilter here. I'm interested to see how some of my earnings trades play out. Maybe that'll skew me to one side or the other, but I've certainly been kind of off on this week. I didn't expect the move that we had going into this week.
Where are you on the earnings plays? What is it on this calendar that's exciting you? You're looking at Robinhood?
Yeah, you got a couple of the names. So the software names I've been dipping my toe in. I caught Shopify to the upside today, which was great. But I have a short puts into the earnings, which are tomorrow morning. But some of these names, like I was leaning bearish last week, and you got the move in like the software stocks. Those got killed. Microsoft and Meta reversed basically their entire moves from earnings. It looked like, like it was there. Like that was our downside move. And now with them lower and the whole market at highs, I'm like, well, shoot. Now it's kind of a bullish indicator because all these stocks have the wind has been taken out of them. And, now if they bounce, we're moving higher. So I'm a little bit off on some of these, but I've got some long delta and hood. I've been in some of the cyber stocks like CrowdStrike, Net, which is Cloudflare, has earnings after the close today as well. So I'm leaning cautiously long here, and I don't know how to feel about it.
The initial results here out from Robinhood, we got EPS of 0.66 cents a share. That's a 3% beat versus expectations of 0.64. That's revenue of 1.283 billion, which is a miss, a 4% miss relative to forecasts of 1.34 billion. Revenue is up 1% on the quarter. EPS up 8% on the quarter. 27% year-on-year rise in revenue, though.
Seems like a good number.
It doesn't seem like they're having problems making money over there at the old Robinhood.
No, definitely not. But stock is a little bit lower here. It looks to be about
EPS is down 35% year-on-year. So we can see here that clearly revenue growth is doing fine, but the whole picture is not quite as rosy, and we get a little bit of a limp sell-off here, but it doesn't really, this is a 1 hour chart. It doesn't really look like this is really running away anywhere.
No, and it's gotten killed over the last month or so. It's been caught up in kind of the crypto sell-off, I think, is part of what you're seeing to the downside here. But it did have about an $8 to $10 expected move into the end of this week. So if it sticks right here down a couple points, this gives up basically yesterday's rally. So I consider that a decent sized win here, but definitely goes against my position.
Yeah, and if we take a look at what Cash Bitcoin here is doing, and I love that we can have Cash Bitcoin as a chart on the platform. It just makes my life so much happier. Just go, you know what? I don't need anybody's quotes. I can see this 24 hours a day. Boom. Yeah. It's so nice. But you can see this chart from Hood looks almost exactly like the Bitcoin chart. And I dare say Coinbase.
Oh, same way.
Is the same exact chart. So interesting to look at this and go, okay, well, what are these guys looking at? And it's just crypto trading volumes.
For sure. And I've seen also parallels getting put together of software names, like the software basket with crypto as well. It seems to be kind of a correlated move at the very least, that both of them, both those kind of sectors are just getting killed here. But what's your view? Was today the down move that we needed to get this started, or are we back in just the chop fest for another couple of weeks?
I think we've got the Super Bowl of data. Ha ha ha. See what I did there?
There you go.
We've got the Super Bowl of data coming up. But by the way, I didn't even know I was going to do that. That just fell out of my head. You all have been talking about the Super Bowl so much. It's just been incepted in my mind now. You can tell how much I was paying attention to the game.
Of course. I know you. You're not a sports guy.
I'm a strictly basketball kind of character.
Well, I appreciate you trying and giving us the football side too. Just a taste.
Just a taste.
Yeah.
I think we've got a big one this week because the delay in U.S. jobs data means we're going to get both sides of the Fed mandate as illustrated by data within 48 hours of each other this week. We're going to get the jobs data tomorrow. We're going to get CPI on Friday. What could you possibly need beyond that to go, Right. So the market should be thinking about the Fed this way. Here are the two big numbers that are the two sides of the Fed's mandate. And the entire Fed argument has been the jobs market got a little soggy there in the second half of last year. We had to come out with some cuts because it looked like inflation was going to be on a path to looking normal because the tariffs are going to work themselves out of the calculation sometime in the first half of this year. You're just going to stop seeing the year-on-year numbers measuring to a base before the tariffs. And so they'll just fall out of the numbers. And services inflation, which is the big thing that accounts for most inflation, that's ostensibly coming down. And you can see that. So Fed's argument was, you know what, the labor market's getting soggy. Inflation seems to be on an okay course. Let's cut and focus on the labor market. So this will be a big set of numbers because the markets want these cuts. So far, the Fed has only said they want one this year, and the markets are already at 58 basis points. So this data is going to either disappoint or not. I wonder how much it can really disappoint if it comes out anything sort of in the vicinity of forecasts. But you can see how sensitive the markets are because the S&P is still under that October high where Powell basically came out and chastised markets for being too dovish and wagged his finger and was like, you're over speculating. You think we're on autopilot. We're not on autopilot. Get out of here. Just because you think we're going to cut doesn't mean we're going to cut. We gave you a little bit to help the labor market here. There's a bunch more easing already in the pipeline from last year. It takes 12 to 18 months for a single cut to absorb. And the Fed cut by 100 basis points right around a year ago. So those cuts are coming. These more recent cuts are coming. We gave you enough. Stop it. And the markets want the cuts. So unless this is some sort of a strong report, which seems unlikely, all the leading data into it is kind of soggy.
And Hassett already kind of like came out and was like, the jobs report.
Yeah, what number?
Yeah, it's like, it's not that important. Like he's already been on that parade. So I'm with you on that side of the coin.
Yeah, and so you kind of wonder, like, okay, are the markets going to get a number that's going to make them think the Fed isn't going to cut soon? Maybe not. But are they going to get a number that makes them think the Fed is going to go faster? Maybe not. And that's the issue. I think you land on a number here that's anywhere within the realm of expectations, and there's no extra urgency for the Fed, and the markets and the Fed are at odds. So if the Fed says this changes nothing, and the markets say this changes nothing, then we're left with the markets want 2 cuts, the Fed wants 1, and the markets still can't go anywhere because they want the cuts. And since October, the Fed said no, and the markets go, what do you mean no? We're not going anywhere until it's yes.
So do you think that move in bond, because it was a big move in bonds today, and really since Friday has had, I mean, like we've gone from 114-ish to 116 and change here in the bonds. Do you think we're in that kind of no man's land, or was today's move sort of like, okay, these numbers probably aren't that great, the CPI numbers probably aren't that great, and they're gonna have to do move cuts, or at least price in more cuts, or change the stance? Is today's move enough to do that?
I think that's the key here, because when you look at today's move in the bonds, you clearly see the markets positioning for a dovish outcome. And it makes sense that they're positioned for a dovish outcome. All the leading data last week was very thematic, as it were. All of it pointed in the wrong direction for the labor market. Fewer job openings, more layoffs, higher jobless claims, soft ADP number. You name it, it was there. The big question is any of this not priced in already? And so I think you look at this move in the bonds today, you see it really across maturities. I mean, here's the the 10-year note. Here's the 5. I mean, where do you want to go? It's everywhere. In fact, even if you look at the very sort of short end of the curve here, the SOFR contract, and we're going to go to the end of this year because that would be crazy to look at that liquid thing for December of last year. There it is. Even here, even near term, a little bit more dovish. And if you look at the expectations, we've got a cut firmly on the menu in June, another one firmly on the menu in September. The markets are not even sort of contemplating anything less than 2 cuts. They're inching in the direction of 3. They're already 8 basis points in the direction of a 3rd cut. And the Fed has been telling them since June last year, no. So it's not like the Fed has changed its mind recently and it was more dovish before and it's not now. No. So this is where it gets spicy because the really leading data is stronger. Like ISM data, PMIs, they're stronger. So if you get a set of numbers here, let's say that isn't bad and isn't good, which sort of inherently is the baseline, right? The likeliest outcome is that expectations aren't wrong. That's why they're the expectations. That's why they're the median forecast. So you get a number that's about mid-range. And then you go, oh man, now we have to wait to see PI to make up our mind about anything because this was nothing. And CPI's got already a month's worth of rising oil prices breathing down its neck. And that's an issue. We already saw retail sales numbers today. Not great, soggy, unexpectedly so. So if that's right, then the markets will get their cuts. But if inflation's right, then maybe not. And it's this really that ought to be concerning us. I mean, look at this move in oil since the beginning of the year.
You think some of that is just the kind of speculation on the Iran situation? I mean, obviously it's gone completely against the whole thought about the Venezuelan situation where you would think more barrels, cheaper prices. Now we've got the Iran situation like on deck here. Do you think some of that is the move in oil, or do you think it's just, just it's been caught up in the commodity / metal / everything inflation type trade?
I think the Iran thing is a big thing, but it's not so much the Iran thing. It's the combination of the Iran thing plus Venezuela, plus we keep capturing Russian shadow fleet tankers. And now apparently the French are also. They've just caught themselves their first tanker. So they're out here. They're like, well, you're going to do all the tanker busting? No. We got to bust us a tanker.
We need our taste.
Yeah, we gotta take a little taste of this this Russian tanker game. So the French caught themselves a tanker, and when you look at what that does together, right? So the Iran protests start somewhere around here.
Okay,
and you can see it doesn't quite have the effect by itself. Then we're already capturing tankers all the way in here. And it doesn't have an impact by itself. And then over here, all of a sudden, we get Maduro and we start to talk about, wait a second, maybe we're going to intervene in Iran. And I think the market looks at this differently from when, for example, back here, Israel and Iran had their firefight. It lasted a little bit and then it was gone. And it was a fade. I think this is different because what happens is it's not really a response to this event risk or that. It's the market's putting the pieces together and going, wait, so we're capturing tankers. Iran might keel over. Venezuela's been decapitated. Where's China supposed to get their pennies on the dollar oil? They're the big customer. And so does that mean they have to go buy it on the open market at market prices?
Yeah.
Okay, so we thought there was an oil glut and now there's not.
Okay.
I think it's that simple. I think if China has to go to Saudi and Iraq and the rest of the Gulf and Brazil and go buy their oil on the open market and from the places that we're not expecting to sell that much Chinese oil, I think your supplies get a lot more strained than you thought they were going to be.
Okay.
And if you're, I mean, the Economist estimates about a fifth of global supply is this shadow fleet from mainly Iran and Russia. There's only one buyer that's big enough to buy a fifth of global oil on the hush. That's it. I mean, India maybe is nibbling around the edges there somewhere. But apparently we're about to strike a deal with a tariff deal with India where they're pledging to ease back on buying Russian oil. So that just leaves China.
I see the memes about all the tariffs, like everybody just like wagging fingers at that. It's like, okay, we've already done this game. You know, you can't fool us again with this.
Yeah, we know how this game works now.
Yes.
Yeah, if the pain is too great or the deal is forthcoming, the thing magically unravels.
Yes. So that's my thought on that.
Yeah, it's very interesting because that part of it, sort of the short and holy moly part of it, has clearly sort of faded, but the amount of volatility around those headlines is still very, very elevated because every time the president needs to turn the knobs on someone, every time he needs to come out there and go, hey, so we need you to do XYZ thing, the stick that he uses is tariffs. And so there's tons of uncertainty around it. And already last year, we had the first decline in global trade volume since COVID and the largest one since 2008. Just because people go, you know what, we're just going to do less business. It's too uncertain out here. And you wonder what happens when that happens with the labor market. Is that why the labor market is so soggy when the economy is ostensibly growing? Because, I mean, the ISM numbers have the economy growing pretty fast. The GDP numbers were strong in the third quarter. They're angling strong for the fourth, even stronger. So why is the labor market so soggy? Maybe people are just saying, you know what, between AI and all of these back and forth on the rules say this, no, the rules say this. No, you can't import. No, you can. No, there is an immigration crackdown. No, there isn't. Between all of this back and forth, they're just going, you know what? We don't know. We're just not going to hire anybody. We're not going to fire too many people, but we're just not going to go out there and commit. And if the uncertainty creates a cooling effect on economic activity in the labor market the same way it does or it did on trade last year, then that's a whole other thing.
So what do you think for equities? And then I wanted to go over to metals as well, just because metals today were pretty interesting in my book because it was kind of the first time we've had a pretty sizable volatility contraction in both gold and silver. Gold's sitting at like 50-ish, and then silver right around 80. It seems like they've kind of, at least from a volatility standpoint, stabilized and they're at these nice round numbers. Do you think gold and silver, this is like kind of the spot? This is their chop range for the future? Or you still think there's a trade there? You got to think if there's kind of more, if the unemployment numbers are not good, CPI is not good, you probably get a bid in the metals, or do you think that's kind of off the table at this point?
No, I think gold has held up really impressively here. I mean, you can see about half of this kind of, oh my God, sell-off that we saw where it seemed like the markets were just generally divesting. Like they felt themselves heavy, like they went really far, really fast. And then I don't know why they would freak out like this to the Kevin Warsh news. It's not really that crazy of a headline. He's the most conventional of the candidates. And so when you look at, I mean, I guess Chris Waller could have been a little bit more conventional, but the two are interchangeable and certainly not Kevin Hassett, not Stephen Meir. These are not loyalists. These are sort of familiar faces at the Fed.
Sure.
And so market freaked out, but half of that sell-off is already gone. And we're just digesting now here right around this kind of halfway mark. Silver, by the way, is not doing nearly as well. So if we take a look at what's going on there, silver is a lot more downbeat. It's kind of hugging the lows here. I actually got out of my silver short. So I got short somewhere around here. I didn't think it was going to be this aggressive.
I know. And you can't hold it for 30% either.
You can't. Like you get a move like this and you go, okay, so that worked much better than I thought it was going to work. Let me not overstay my welcome.
Yes.
So when this thing popped, digested, and then came back here to retest this, I said, okay, very good. I'm out. Yeah. Goodbye. And got out not too far from where we are now, like right in here. Silver is tough to, I think, bottom fish. I do think the general trajectory for metals is still higher because all of this uncertainty that we're talking about, that's how you get the metals higher. No matter what's going on with the dollar, no matter what's going on with the yields, they're looking at this thing and going, U.S. policy is going to be just, it's not going to be this or that. It's going to be all the things.
It's a flip-flop.
All the time.
Yeah.
For 3 years.
Yeah.
And you know what? We just want to be in a non-sovereign way to transfer value in case we need to put that value somewhere where we're still doing business with China, but not upsetting Washington. Let's just figure out how we're going to have our value. Like, let's say the U.S. weaponizes the U.S. banking system against China the way it did against Huawei or the way it did against Russia. You know what? We still got to do business with China, and we don't want to upset America. If you're like a third country, let's say you're Argentina or Turkey or something. So you need gold because you need to move between the two warring systems without annoying anyone and looking as neutral as you can. So I think for gold, for silver, that story continues. Gold just seems to be holding up much better. So I'm long here. I'm doing it by selling out of the money puts because that was the only kind of decent risk reward way of doing it down here. It was still like the spreads were still so crazy and the vols still so expensive that I had to do it in that way. And so far, the vol, to your point, is bleeding off.
Yeah.
And it's working. So if I'm going to be any kind of exposed here, it's going to be through something with an inherently bullish kind of bias. I think vol is coming down, but I want to have that exposure with a bullish kind of flavor on it.
Yeah, and it helps with the vol contraction and a little bit of a long delta skew to your position. It doesn't the downside move doesn't hurt as much if you get that vol contraction, which has been happening or came in a big way today. I've been trading like 1 to 2 puts to calls on GLD, so kind of waiting my delta wise, I'm leaning short, but I'm really short volatility and short that upside volatility more than the downside. So into a down move, I'll pick up long delta, but I'll have so much short upside volatility that it should hedge some of the move to the downside here. But it's been a great trade. I mean, gold and silver this year they've been one of, I never would have thought this would be a situation I would be trading in. Is this level of volatility, this level of price action? It's been wonderful.
It's been very good. I mean, if you're a trader, this is what you want
for sure.
I mean, there's just no other way to look at it. Before we are out of time here, so I guess we're going to have to get to the Japanese yen in a second version of this conversation, but let's just put it on the screen just for fun. Look at this thing.
I've sworn off the yen. I can't make money shorting it. I can't make money getting long it. It is I don't know. I've just sworn it off. I've just said, you know what? It's got my number. I can't do it.
I'm doing it in spot because you can have really small sizes.
Okay.
So that things like this give you less indigestion.
Yes.
So I looked at it over here. I was like, oh, look, I can just put a line through here and that's a break. And now we've retested the underside. Let's try a short right around here. So I'm long a little yen here. I'm annoyed that I didn't get into EWJ, which is just
that's
off to the races. I mean, this is incredible.
Don't forget South Korea too, EWY. That one's going nuts as well. They got caught up in the memory chip name kind of rally too, but those both have gone parabolic.
I mean, I wish I was in EWJ right now. Yeah. I'm going with myself. And on that note, we are out of time for overtime here. Thank you, sir, for joining us, our very special guest here. I think Mr. Vecchio comes back tomorrow.
Yes.
Whereby I can hassle him about his silver longs. In the meantime, don't go anywhere because I'll be right back with Macro Money, where we are going to talk all about this U.S. jobs data that's coming up and what all of it means. So stay put. We'll be right back.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And tastylive in particular because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Yeah, and I'm fun on the block all day, all night. Ends in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, got the bell with the whistle. Corner store, pick up chips, 2 sodas. My board in the slides, trying to dump on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, just heat waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck roll out, yeah, we all chasing. Pockets on lead, but the vibe still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam out here, raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke hits the spot. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Yo, we just living it up, yo, that's real life. Yeah, we just living it up, yo, that's real life. We just living it up, yo.
Said I'm all about it. Yeah, I'm all about it. Said I'm all about it. Yeah, 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 yeah. Said I'm all about it.
Well, here we are, looking down the barrel of what is going to be the first big piece of economic data this week, shaping the market's speculation about what is likely to happen here with Fed interest rate policy, which seems to be the main driver of sentiment going all the way back to October. So what will all these numbers mean, and will we finally get the S&P actually going somewhere? That's the question on our minds here on Macro Money. This is Ilya Spivak, head of global macro here at Tasty Live. And what we're going to do here is take a look first and foremost at the little bit of news that we got here overnight. And from there, we will try to piece together what we can see from that reaction to how things are setting up, and then consider, of course, what the data is expected to bring and what that means as we go forward. But before we get into the jobs data, the first bit of input here came from the retail sales report. Here it is right here. And this actually turned out to be a disappointment. We were going into these numbers expecting that there was going to be maybe the possibility for an upside surprise because what this was led into was Friday's very impressively strong report from the University of Michigan, which gave us consumer confidence that was unexpectedly surging in the January numbers. So a bit odd here in that context, or perhaps the retail sales number just hasn't caught up to what we saw in that sentiment report as yet. But we can clearly see here the miss was concrete, and most of it came from the looks of it from weakness in the clothing side of things, furniture. None of them are really big elements of the pie. The main piece here seems to have been a dramatic month-on-month slowdown in motor vehicles, which is about 20%, give or take, of the whole retail sales pie. The expectation was that we were going to get a rise of 0.4% after a rise of 0.6% in the previous month in November. As it happened, we ended up with basically a flat result, negative 0.02%. So essentially a goose egg. And significant slowdown seems to be there in the motor vehicle space, also in gasoline stations, where there was a big surge of 1.74% in November, and then we really slowed down dramatically. So we'll see what this portends going forward, but at the very least, we get a little bit of evidence in the direction that the markets want, that is to say, the direction of more Fed rate cuts. We also got the earnings report from Robinhood. We can see it didn't really do much of anything here to move the needle. Numbers were pretty close to expectations. And when it was all said and done, we ended up with a situation where ultimately the stock just continues to echo what we're seeing in Bitcoin. That seems to have been something that's been the driving force, not just for Robinhood, but also Coinbase and also a lot of firms in the space. And doesn't look like that has in any way shaped the view on consumers here or on sentiment, and leaves the market sort of wondering what the bigger releases are going to bring. So on to the bigger releases. The jobs report, which was supposed to come out last Friday, but didn't because of that brief government shutdown, is now finally upon us. It is expected to show that we're going to get a 70K rise in payrolls. That is going to be a little bit more than what we saw in the prior month, which was a rise of 50K. The unemployment rate is expected to remain unchanged here at 4.4%. And so if we look just anecdotally at what we have in these numbers, it looks like what we're seeing here is, broadly speaking, a situation that is sticking close to the status quo. We have a situation where obviously the trend got kind of soggy at the end of last year, and that's thanks to what we saw with the situation in the government shutdown that time. That of course, was a consequence of a shutdown that was not just a few days, basically, in practice. Instead, we had a record-setting one. And so when the Fed was looking at these numbers, Chair Powell was on the record as saying, well, look, once we start to kind of factor what's going on here, it looks like we're starting to need some support for the labor market. And that, of course, was the logic that gave us 75 basis points in easing over the end of last year. Now, Powell has argued that there's basically 60K in overcounting on average in these numbers. And what that means is that this 70K is looking like a real outcome, again, based on his math, of just 10K. Now, that is certainly not a rich number. But at the same time, it's also better than the average that Powell was citing when we were looking at those rate cuts at the end of last year. And he was saying we're averaging a 20K loss in a given month. Now, that basically means 60K in gains in a given month. So right in line with what we're looking at here, right? The previous month was 50. This month is expected to be 70. So we're looking at right around the same cadence that Powell is talking about. And with a haircut of 60K, 40K turns into a downdraft of 20. And so with a positive 10K number, one hand, you have something better than what Powell has feared is the issue and what was seemingly the trigger point for action. And at the same time, we also have a average for last year, sort of the 12 months that was 2025. And there the average is a 5K monthly loss. So however you slice this, be it the Powell average of a 20K loss, which seems focused on the second half of last year, or the average sort of just on pure arithmetic for last year, this is not a good set of numbers looking at the expectations, but it's also not anything that necessarily gets the Fed out of bed to cut rates in a hurry. Now, leading into this, we had a bunch of soggy labor market numbers last week. And that seems to have really had a very emphatic influence on what's going on here and a way to set expectations. So here was the ADP employment change number. This ended up being about half of what was expected. The markets were looking for something close to 40K. They got 22K instead. That was the weakest reading in 3 months. They also saw that job cuts jumped in January. Now, this isn't the biggest jump in job cuts in recent months. Obviously, we can see that we have these job cuts right here from October that were even higher than going back to early 2025 when we were talking about the job cuts linked to the initial onset of the tariffs. They were even more dramatic. But for January, this is a lot. And commenting on this from the consultancy that puts together Challenger, Gray, and Christmas Inc., they said to see a number this big in January is unusual because it means that the plans to cut staff came together in December and before. This was the worst January since 2009. So to have this much of a jump for a January, in their mind, is kind of seasonally unusual and speaks to worries about what this year may look like as far as the economy. At the same time, you have this jump in jobless claims in the final week of January, suggesting that as we get into this year, these layoffs are starting to hit and claims for unemployment benefits are coming up. Now, not surprisingly, of course, against a backdrop like that, you get more of a build in rate cut expectations and the idea that all of this is going to be quite dovish in its sort of implications when the Fed actually has a chance to look at all of it. And so what you end up with then is a shift in expectations. Now the markets are priced for 58 basis points in cuts this year. So they're 8 basis points in the direction of a third cut. 2 cuts are firmly on the menu at this point. And we can see they're appearing first in June, then promptly again in September. So the markets are convinced that this is happening. Unfortunately, who's not convinced is the Fed, because they still are set for only 1 cut. Now, of course, this summary of economic projections was last updated in December, and it seems like a decade and a half has happened in between then and now. But everything that's happened since then has only worked to push in a direction that's less dovish. In particular, of course, we've had strong U.S. economic growth from more timely indicators, not necessarily focused on the labor market, but actual growth seems to have perked up quite a bit. These ISM figures from last week tell us that a buoyant service sector is pulling the economy towards some of the fastest growth since the middle of last year, right over here. Moreover, this data from Citigroup is telling us that U.S. economic data on the whole has tended to outperform relative to expectations since the beginning of the year. So here's where we start in January right here, and we can see that increasingly U.S. economic data seems to be topping expectations and moving at the most kind of supportive clip since back here in the second half of 2023. So with that, we get a kind of curious situation. The markets clearly paid attention to all that soggy jobs data last week, and they're angling in a more dovish direction. They're positioned that way ahead of this data. If we get a number that's roughly in line with these expectations, well, then this net calculus here gives us this 10K in Powell terms, gives us, as we just said, something a little bit better than last year's average, but not anything to be pointing to say, oh, the labor market is strong. So where you're left is a kind of paralyzing status quo, where the Fed is left at odds with the markets and nobody really has the catalyst they need to push their side of the argument forward. And from the market's perspective, that's, of course, something of a disappointment, because we haven't gone anywhere on the S&P basically since October. And that was when the Fed came out and Fed Chair Powell chastised markets and said they were over-extrapolating on rate cut expectations. And here's what those rate cut expectations were doing at the time. We can see here's the bottom from last year's Liberation Day tariffs kerfuffle. As this uncertainty eased, we saw rate cut expectations give back a little bit after this meltdown right here. But after they stabilized and we got a little bit less dovish, the rest of the run in stock markets, basically through October of last year, came with building Fed rate cut hopes right into October, where all of this kind of anchored. And since it anchored, and we've been kind of in a range between 75 basis points and 50 in terms of rate cut odds for this year, the S&P has stopped going up. So it seems clear that what the markets want is rate cuts, and that the setting of the economy as such matters to the extent that it justifies them. So if we don't get numbers that endorse the market's more dovish view of what's going on, that is to say 2 cuts versus the Fed's 1, then you have room for disappointment. Why do the markets want these cuts? Well, certainly sogginess in the labor market is the way that the Fed has sold them. So you get more sogginess and you expect more rate cuts, but there seems to be more to it. Why were the markets so focused on these rate cuts this entire time? Well, it seems like the markets have been so consistently more dovish, as we've said before, because of all of this uncertainty. This is the World Trade Policy Index, and of course, the president uses tariffs as his cudgel of choice in a lot of his more volatile maneuvers on the world stage. We can see here that even though since Liberation Day, overall, the averages, the trend averages, 7-day, 30-day, they've come down, and so uncertainty has eased from this kind of more hair on fire moment around April of last year. The amount of uncertainty around these averages, the degree to which this index is jumping around in a volatile range around the averages, that continues. And we can clearly see this is more volatile than the Trump tariffs rollout in the first term, and it's a lot more volatile than the very steady trade environment amid, of all things, the COVID lockdowns. Here, there was uncertainty about all kinds of things having to do with trade, but policy uncertainty was basically a non-factor. This clearly is something else entirely. And all of this uncertainty has already last year given us a drop in global trade volumes. What the markets want then seems to be not necessarily a backstop of the labor market as such, or a backstop of an economy which, frankly, seems to be growing relatively strongly, even though it's not minting jobs. What we have is a desire for this not to happen. But because all of this uncertainty seems to have cooled global trade volumes for the first time since COVID, and by the largest margin year on year since the 2008 financial crisis and Great Recession. And of course, that is a tremendous risk for markets, especially here, because so much of what's been going on in equity markets has been powered by hype around artificial intelligence and the build out for that. And that business is a very global business. Its supply chain is very dispersed with significant one-off nodes in Asia, significant one-off nodes in Europe. Just think lithography in the Netherlands, think chip making in Taiwan. So there are major choke points in this supply chain, and all of the hype around the AI build-out depends on the supply chain working. If this is what global trade is going to look like because there is this much uncertainty around it, well, then that's a threat. And what the markets want is a backstop by way of cheap money, where if they get one of these situations wrong, if they end up positioned for zigging when policy is zagging, then they want to be able to lose a little bit of money in peace, knowing that they can go and borrow cheaply to go again. And that seems to be the impetus for wanting these cuts and why the S&P can't really make its way anywhere unless more cheap money is being offered up on the table. If the data on the job side of things doesn't push that story forward, then we're going to have a hard time, it seems, building in more gains for Wall Street. But of course, unless the number is shockingly strong, which seems unlikely, we're probably going to wait for Friday's CPI report to really make a decisive break this way or that. Nevertheless, a disappointing number here would be enough, perhaps, to get the markets reset lower, at least within their more recent range. Somewhere down here, perhaps, in anticipation of those CPI numbers. So positioning-wise, ahead of this release, I am still a little bit short the dollar, short against the pound, short against the euro. There was a little bit of a pullback here ahead of the data, but I don't think any critical levels were overcome. I am also looking at the long side of gold, a little bit of a pullback there, but overall the structure continues to work. I'm short some out of the money puts here in GLD. I am still short on the IBIT ETF here, and what's going on with oil is still seeming to paint a picture, I think, favoring the long side. So I am still in that exposure. And finally, looking at the view in equities, still a little bit short on risk. Still have these puts that I bought with a little bit more time in them in the S&P and NASDAQ. Of course, I've pushed out duration significantly in NASDAQ. I still have to do that in the S&P. Perhaps this week will give us a decisive moment to either push these durations forward, looking for the October highs to hold, or instead look for a flip in the opposite direction. And that is macro money for today. As ever, we are here right after overtime. That's a show that I co-host usually with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. Also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, as ever, like and subscribe. Macro Money returns tomorrow. Happy trading.